not making sense right now. But do you think that they will catch up in growth?
Oh, definitely. If you look at the fundamental cycle, this is a cycle of manufacturing over services, of investment over consumption. This is the long-term cycle that we are in. That doesn't mean consumption is dead, but the relative growth of manufacturing over services and investment and capex over consumption will continue. That is not about to abate. But you're right, valuations do matter, and some of the valuation froth or the excess valuation that had built up in some of these manufacturing sectors have already come off, right? In the last 2 months, you've seen some of these stocks having corrected quite deeply. You see industrials, which is probably the highest growth segment in the sector in the economy, having underperformed for the last two or 3 months, and those will continue. Those sector rotations will continue, probably in a little more fierce manner than we have in the last 3-4 years. Like the secular run that you had of manufacturing in terms of stock prices will now see a little more balanced stock performance from here. But if you take a 2 to 3 year view, these are definitely remain the outperformers, we think, because the growth that they are going to deliver is far in excess of what consumption and services will do. So, yeah, meaning tactically you could play around with the sectors depending on valuations, and I do believe that in this post-COVID market, valuations matter. The market's been pretty brutal on overvaluation and in a very short period of time. But if you take a 3 year view, these are the sectors which will continue to drive out performance, and both in terms of growth, earnings growth, and stock price performance.
Mr. Karwa, coming on that, domestic cyclical sectors have been the primary drivers of earnings growth. So be it real estate, be it auto, be it consumption, BFSI, they've done okay. Global cyclicals, on the other hand, are still struggling. So be it in IT, metals, oil and gas saw an 80% decline in profits YOY. I'm going to throw in specialty chemicals while we were in a conversation on that too. What have you made of earnings, and what is your nifty EPS estimates for the current year and the next year? Have you gone back and reviewed those after looking at what the India Inc. has posted?
So the earnings have been a mixed bag. I think there have been a decent amount of, most of the time, you have seen not great outperformance across the board, and there has been slight misses also. So it's not been a one-way positive as far as the earnings season has been concerned. There have been disappointments, and markets have been very ruthless wherever there has been disappointments. And I'm not too sure where even results have done better than expected. The uptake has not been so sharp. So which means that kind of discounted or topping out. So that is there. And sorry, I just forget the second part of the question.
Is it so? What is your EPS estimates for FY 25-26? Have you gone back and reviewed it?
No, I don't think so that we have seen any cut in our overall earnings estimates. I think it's broadly on track. Okay. And if I understand, and Shen can correct me, I think we are at around 21 times nifty earnings. Market valuations are around 21 times, which is broadly in sync with the averages as such. It's not very ahead of the the averages as such. So I think it's a fair value as far as the overall nifty is concerned. What you can say is that within that, how the earnings are playing out, I think maybe banking, etc., seems to be under pressure. That's the sense that we get.
Nirav, you come on this one for me. You talked about how India over the long term, CAGR has been about 14%. We've had a dream run in the last couple of years. So very clearly we've borrowed returns from the future if you're an investor. I know it's always easier said when you say it's the time in the market, it's not timing the markets, but all of us do feel emotion when the markets fall and your portfolios decline, and you also feel joy if you've managed to time it correctly. What is the advice for investors? Are you taking a cash call right now? Would you say take some profits off the table, go back and rebalance your portfolio, and maybe if you get a 10-15% correction, you double down? Or are you saying continue with the SIPs, because at this stage it's really too tough to call it a top or a bottom?
So, like KK was just referring to...
And hedge yourself.
No, I don't want to hedge ourselves. So, I'm very constructive on the markets, and by definition, when you're professing someone to do SIPs, you don't want to take market calls, right?
The whole idea. Yourself.
Exactly.
You're saying, I don't know where this is going, so just keep adding.
No,
and 10 years later, you'll forget about it.
I think I'm again coming to the same point of time. I believe that, your earnings growth rate are likely to surprise rather than not surprise over
Okay,
the
just
next 3
before that,
years.
did you buy on Monday when the markets fell? How much incremental capital did you allocate? Stick your neck out and tell me that.
Let me tell you that I am 100% invested in equities.
So no cash on the sidelines.
No cash on the
So you
side,
could
but-
not make an opportunistic investment on Monday.
Absolutely.
Sadly.
I see. Again, let's appreciate the fact that you are talking about trying to take money out of the market and invest where.
Debt,
It's always
gold.
something. So that is 5.5%,
Yeah.
and then you pay tax on that,
Yeah.
right? So I think the dividend yield even right now would be 1.5%, and you're talking about another 4 or 5%
So if you have
CAGR.
fresh money that comes in, you are still saying, I'm going to put my full 100 rupees in the market. I won't time this.
Absolutely. So I'm saying is that you're looking at the broader market. So there are pockets, there are euphoric pockets. So I'm not very sure what you do with the railway stocks, the defense stocks. I'm no expert on that, right? I'm saying is that if you are, if you want to look at ideas where there is some amount of value, if you are willing to do hard work, please come to our conference. We'll show you a host of companies, and I'm sure we'll see a lot of value.
We'll
So I
find
think
some
there are enough
opportunity,
opportunities in the
yeah.
market.
Yeah,
Yes.
you wanted
Add
to
to
come.
what you're saying is that, see, there is something called risk appetite and asset allocation. So I think investors should be only focusing on that. Okay, what is your risk appetite and what is your asset allocation between debt, equity, etc., etc. And if you are regularly monitoring that, then you will never have such challenges because
because
at
you
time
can
to
go back
time
and rebalance your
you can
portfolio
time to
only
time you
because
will be balancing.
the
I think that
allocation of
is what
equity is gone up.
is the key. But to exit your equity portfolio, then get in again and those kind of
Makes no
things
sense.
is not going to work. Stock specific, if you are looking at it, then you have to look at the individual valuations at every point of time and what is the incremental returns on the stocks that you hold. And if you think that probably they are discounting 2-3 years ahead, then you should look to book profits. I think cash calls doesn't make sense for a long-term investor. You can be lucky a few times, yes, you can be, but generally you will not be. You have to go through cycles. I mean, you only discuss about multi-baggers. Now, if you're going to have multi-baggers, that
gotta
means you have
just
to
stay
hold for
invested.
5, 7,
Yeah.
8 years, and there will be so many such events, right?
And you've got to do the hard work, right? You've got to
Absolutely
pay the
right.
price for making the gains. There's no free lunch.
I just want to come back to the point quickly that you made on financials and tie this in with some of the comments we heard from the Reserve Bank of India governor yesterday, talking about the difficulty they're finding in deposit growth. Yes, credit growth has been great. You talked about that, Nirav. But the deposit growth side of things is looking a little tough. Do you see that as a problem which blows up over the next few years as far as financials go? It's a catch-22, right? How are you going to attract those household savings in? How are you going to grow deposit growth when, as Nirav explained, the markets are giving such a better return? So does that put a bit of a question mark on financials for you?
Absolutely. I think we have come out on a very cautious or a kind of a negative note on the banking sector a few months ago because we believe that this sector is highly regulated. So it comes with, if it is doing too well, the regulator will come in to control it because you have to do that. So there is only so much of growth that this sector can show. And there are continuously, so that's one challenge. So profitability will always be under pressure. And if versus global comparisons, our banks have very high profitability. So we will tend to go towards global comparisons. So that is going to be another challenge. And when the economy is doing well, then you don't, it doesn't make sense to invest in bank. It makes sense to invest in actual businesses. Like whichever sector, the capital goods sector, materials,
what are you
etc.,
liking the best right now?
I can't say stocks, right?
Not stocks. In terms of spaces, when you say actual businesses, in terms of spaces.
Right. So some
no
of
one
the
knows what to do with IT, for example.
No, IT is not a sector because that's not India focus. That's more global focus. It's a very, very large sector which can only grow at some 7, 8, 10%. That's not the sector where you can grow big time. You will have to, so there were the defense and the railways, etc., that you did well. Probably some of the sectors which are now coming back, maybe it could be specialty chemicals. It's gone through a two-year consolidation. Maybe it could be agrochemicals. Pharma has already done well. It was consolidating, but now it has made its move. So you will have to look at those sectors where you can have a multiple expansion apart from earnings expansion. And in banking, possibly a multiple expansion is not happening. We have seen a degrading, continuous degrowth in the valuation multiples of banks.
Right. So while taking a cue from that, and Mr. Sen, you can comment on that. While banks may not have it very sweet, NBFCs are doing quite well, and I'm categorizing everybody who does non-banking as well. So private banking companies, anybody playing the financial space. So we saw those numbers from BSC and NSE yesterday. Phenomenal. You look at what a Nuvama is doing, you look at what the 360 is doing. Of course, those are also expensive when you talk about the likes of Anand Rathi. Do you think a better way to play the financialization theme in India may be through some of these instruments?
Yeah, you asked for two separate categories. NBFCs in the short term, when the RBI starts easing, tend to benefit, at least in terms of perception.
So tactically could be a good play.
They are covered by the same issues that we were just discussing on the banks, that there is very tight regulations. See, banks need to take risk. To banks and lenders need to take risk to make ROEs. The RBI very correctly is keeping a hawk eye on risk in the system, because we as a country have not taken risk in the lending side very well, right? When risk has built up, it's always ended in tears. So we think that regulation will continue to be tight, and it will be more and more difficult for lenders to make excess returns by taking risk as we go along. And in the meantime, there are some asset quality issues in certain pockets in the next 12 months. So NBFCs are different. Capital market subsidiaries, if our narrative plays out that we're in a long-term bull market, then the penetration of capital markets in the retail space is still very low. And that's, to your question on deposits, I think this will continue. It's inevitable. We can't expect to go from 2,000 to 3,000 per capita income without more retail participation in the capital markets. So that's a theme. The only warning is that capital markets players tend to be deep cyclicals. When they do well, PEs and EPS expands. When it turns, both collapse.
So you'd avoid the space of wealth managers and capital market players?
Maybe wait for corrections if you get, but you're not going to get them, 2 years earlier when regulation, and that's also a regulated space. For example, if you look at the AMCs, when regulation was becoming very aggressive, you got some of those AMCs at dirt cheap valuations, and some of them have doubled and tripled from those levels. But, I would still keep an exposure in the capital markets place.
So one sector that you absolutely adore and think valuations are compelling, earnings are great, and the outlook is positive?
You don't get that trifecta anywhere in the bull market. So I would still say consumer durables, the auto and auto ancillary space is still, pretty attractive. I think the cycle will remain strong. Again, on any sector, you have to be mindful of valuations, but that's one sector which I really like.
Okay, so more of this conversation from the MK conference, so stay tuned for that. But thank you so much for coming in. We'll take a very short break. On the other side, we're speaking with Nikhil Chopra, Chief Executive Officer of JB Pharma. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Open. There's lots of Friday cheer on the last day. The markets are holding up and companies that have reported earnings are getting quite the reaction. One such company is JB Pharma. Fantastic set of earnings. They've also crossed the milestone of 1,000 crores in terms of revenue. Nikhil Chopra, CEO at JB Pharma, joins in to walk us through how the quarter's been and what's the outlook for the company going in. Hi Nikhil, good morning. Congratulations. You've hit the 1,000 crore milestone in terms of revenue. So I'm guessing everybody at your end is extremely cheerful and excited. But let's talk about what went behind that number. Give me a sense of what top line outlook is looking like and what was it driven by? How was the domestic formulation business looking? And of course, revenues from your international business, because I do believe that was quite flat this quarter.
First of all, good morning to all of you at NDTV Profit, and it is my pleasure to be on the show. And rightly so, what was shared that we have for the first time in a quarter across 1,000 crore revenue and growing at mid-teens around 12% for the quarter. And this was basically more driven by the performance that we have demonstrated in India business, which we have been talking about. India, we shied away touching 600 crores for the quarter, and the revenues grew at 22%. More so, what has been happening is not only in terms of revenue that we have achieved, but what is more heartening is the improvement in gross margin. Our gross margins are as high as 66%, and what guidance we've been giving for our EBITDA margins, operating EBITDA margins between 26 to 28%. I'm happy to inform that our operating EBITDA margins for the quarter were 29%. That is where we stand. We saw some softness in our rest of the market business. That is more so in the world of CDMO and US. Emerging market, that is rest of the world, grew at mid-teens. And the way we see overall incoming couple of quarters with robust order book, our emerging market as well as our CDMO should also start showing around 12 to 14% growth in the coming time. That is where we stand. And what has been happening in the
Yes, please. I wanted you to dwell on the CDMO piece because seasonally it's the second half of the year that is not as good as the first half. But you're saying that this time around, third and fourth quarter will be much stronger, right?
So this business has a flow in terms of the way it happens. The trajectory continues to be 100 crore plus every quarter, and the way overall climate change and the dynamics are behaving, we see more and more flu season and winter season starting September onwards. And the way order book is today in place, September onwards, we see a better trajectory for this business. And there are a good number of new development projects which are on. Today, more of our CDMO business is happening in the world of cough and cold for our lozenges, which is 80% of our CDMO business. So there are half a dozen new projects which are on. So those new projects will come in, the lozenges for sleep disorders, for immunity and wellness, for motion sickness, for antifungal lozenges. All those things will be in place. So that all things will start reflecting probably quarter 2 and quarter 3 onwards. That is where we stand from the CDMO business. But what I wanted to also talk about is a strong performance that we have demonstrated in India business, where our overall chronic part of the business has been the highlight in terms of the way that has contributed, and that is contributing to overall improvement in gross margins. And we continue to be the fastest growing company in the cardiology space, particularly in hypertension, heart failure, and lipid products in India business.
Indeed. So you're right. Your margins have also been a standout in this quarter. And I know the company has undertaken cost optimization efforts, which is, of course, bearing its fruit as we see it. For the rest of the financial year, where do you see your operating margins at? Should they see further improvement? Is that an internal expectation?
We'll be more than happy if we are able to maintain this gross margins of 66%. And operating margins, the guidance that we've been giving. Also, a couple of points that I would like to talk about in our rest of the world market, particularly about Russia. Russia has done fairly well. Our absolute EBITDA value has been growing at a pace of around 30% plus for the quarter, and that is what we will see for the coming 3 quarters. And also the South Africa business, where in last 5 quarters we have taken a hit of around $20 million. Quarter 2 onwards, we'll start seeing the growth in our South Africa business, which will also contribute to overall profitability and EBITDA. That should happen.
Mr. Chopra, I'm glad you bring up Russia and South Africa because those are your key export markets as well. What is the sort of percentage growth you're expecting these markets to grow by for the rest of the financial year?
So, India, first of all, India should grow at around mid-teens. That is what we'll be able to demonstrate for next 3 quarters.
Right.
Within our rest of the world market, South Africa, Russia should grow at around 9 to 10%. That is where we are. Emerging market, that is rest of the world, where we are present in 4 clusters: Sub-Saharan Africa, Latin America, Southeast Asia, and Middle East, which business is around $12 to $14 million every quarter, should also grow at around 12 to 14%. And CDMO space should see around high teens growth in quarter 3 and quarter 4. That is what is a guidance for the coming time. Yeah.
Right. So you've also added ophthalmic brands to your portfolio. You're 5 months into integration. What are the key learnings? What is it that you see in terms of outlook for the ophthalmic vertical?
So this business last 3-4 years, if you look at which was with the products which were marketed by Novartis, the revenues that we got in, and this is an in-license income distribution arrangement, with the revenues which we got in were 165 crores. And the trajectory that we see for the current year, we should be close to around 195 crores for the year. And this business, by the way, was not growing for last 3-4 years. Basically, 50% of this business comes from the products which are in the world of glaucoma, which are chronic in nature, where we are seeing more and more adoptions. 65 people from Novartis joined us, and today the field force is 105, which will be eventually 120 people working. And we are looking at this business to grow at mid-teens, because ophthalmology market is dynamic in nature in terms of flu season, in terms of the eye infections are there. And also in next 2-3 months, you should see us getting into the world of dry eyes, in the world of biologicals. All those portfolios will come in. And we are very excited with this portfolio. And also to share the 10 brands that we are in license and distributing. Out of this, 5 brands are leaders in their category. So we'll continue to attain the leadership and grow more and grab more market share. The number of ophthalmologists which were covered by 65 reps which came in were close to 7,000. Today we cover close to 12,000 ophthalmologists. So a lot of coverage has improved, distribution has improved, portfolio will be added, and we will look at how do you propel up the existing portfolio, where today we are leaders in 5 of the brands. That is happening in the world of ophthalmology.
It looks very exciting. I would love to talk to you more and, of course, understand from you on your acquisition plans as well, because that's something that the markets always get excited about. But I believe you've got a meeting, so we'll let you go. We'll try and connect back and get a better sense of what's happening at the company. But good luck and congratulations on a fantastic quarter for JB Pharma. On that note, we'll wrap up India Market Open. Thanks for watching. But up next, we talk to Amit Kalyani, Joint MD of Bharat Forge, to get an understanding of the quarter and what lies ahead in FY25.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. This is an interesting morning. There's lots of cheer on Dalal Street, but more importantly, there is also a new kid on the block. The much anticipated Ola Electric Mobility is set to list on Dalal Street anytime now. The 6,156 crore IPO was subscribed by over 5 times, with the retail portion being subscribed by 3.92 times. So lots of excitement. We will be tracking this in a minute or so when they, of course, list on the exchanges in a few minutes from now. Well, all eyes will be on the listing now. We had, in fact, earlier caught up with the company CMD Bhavish Agarwal and CFO Harsh Abhichandani. Here's what they both had to say about the company's growth path to profitability.
The operating leverage kicks in, we are expanding our scale, etc. So the path to profitability is very clear. I would not put a time frame to it, that will be like forward looking, but the path to profitability is very clear from our perspective. If you look at from a cash flow perspective, our core business is obviously had a different cash flow profile, but where are we investing in the future? We're investing for growth, we're investing for expansion in the future. It has also been discussed in our book. We are raising capital for our sale in the IPO. We are investing into R&D, etc. So all these kind of factor in terms of the way the cash flows get generated in the future. And in manufacturing, I think as Bhavish also mentioned, as we scale up, the path to profitability is extremely faster. So our scale is important for us. So in cash flow, profitability is absolutely there on the anvil. It's not something which is there. The analysts look at it from a different perspective, from a capex perspective, but our capex also is largely well funded on a larger roadmap, both for the auto side and on the sales side.
Well, that's the management of Ola charting it out about when the company will turn profitable. This was, remember, a much anticipated listing on the exchanges, got quite a touch to consumers and retailers, and that's what gives this one a bit of a touch. Well, that is the management of
all right, I hope you're all
getting excited for their listing this morning. Right. Well, it's going to happen in the next 1 minute or so. Remember, it'd be exciting to see whether this lists at a premium. It was oversubscribed in the retail part of the book by 3.92 times. And it'd be exciting to see whether this gets snapped up. It was some argue that this is an expensive company at the valuation that it was, and hence that could and potentially have an impact on how the company will list. But for now, lots of excitement, euphoria in terms of that listing. It's a very muted start for Ola Electric, 2.5% higher. So it's not down, but of course it's not as excited or as euphoric as the management would have potentially liked. For now, flat to slightly higher start on Ola Electric is what we see. Well, apart from that, it's all about earnings. Like we've been saying, it's Bharat Forge now that has reported its earnings. The first company that we're now going to talk to is going to be them. They will be, of course, walking us through their quarter numbers. And while their revenue and margins have grown, the profit is down by over 18%. This is on back of the one-time provision of 150 crores, one of its investments. To talk more about these numbers, we have with us Amit Kalyani, Joint Managing Director of Bharat Forge. Hi Amit, good morning. Thanks a ton for joining in. Amit, it's been a good quarter. You've seen a growth on most parameters, one-time provision that's impacted profitability. But let's talk about top line. Defense is the key growth driver for your company, currently contributes 15% to your top line. Tell us where you see that and how you see that play out for the rest of the financial year.
So, as we mentioned, our defense business started generating revenues 2 years ago. It was about 500-600 crores in that year. Then it grew to above 1,000 crores in the last year. This year, again, it will grow in the vicinity of 2,000 odd crores, maybe slightly plus minus. And our goal is that in the next 3 to 4 years, we should again keep growing it manifold, so possibly double or more in that time. And quite frankly, we are very bullish on these prospects because we are seeing tremendous traction from global markets, and it's not just India that is going to be our market. As it is today, over 90% of our business is exports, and I think the products that we have developed and whose IP is completely owned by us, and we do everything vertically in-house, give us the capability to service large global markets with high value and significantly value added products at an extremely competitive price and gain a large market share. So I think the potential is large, and we hope that this business will keep growing.
Exciting. 90% of your revenues come from outside. So tell me, where do you see and how much do you see exports of defense grow by in this financial year and over the next 2 to 3 years?
See, as we've mentioned, we have an order book of about 5,800 crores roughly, which is all exports. And in addition to that, we have large domestic programs which will now, the tendering is all over and the price bids will be opened. And there are 2-3 other new big programs in India. So products that are being developed with a global view, but to keep the Indian requirement in mind as well. So, as I said, these are high value added products, and they are global in nature. So we expect to see large opportunities unlocking from this.
Talking about opportunities, we believe AT-AG is the next big opportunity for Bharat Forge. You want to tell us what is the size of the market, what is the sort of market share you're working with and expecting, and where do you see that, and how much do you see that contribute to your top line over the next 2 to 3 years?
See, we have 7 gun platforms in all, artillery gun platforms, with several different variants of each. So all put together, we can mix and match and make many more variants. So these variants are from 105, 155, right from 39 cal to 52 cal, and potentially go beyond that in the future. We have mounted guns, we have towed guns, and we have self-propelled guns. So a combination of these, the requirement just for India itself is 4,000 numbers, and globally will be significantly in excess of this. So I think the opportunity is very large, and we will pursue this business. The other thing that we're doing is also building up a revenue business in the defense space, which is spares and consumables, which itself will become a significant business in the next 2 to 3 years.
Right. You want to tell me if you've got any local competition in the ATAC space?
Well, of course, there's a second development partner, which is the Tata Group, which has also worked in co-development of, which is also the co-manufacturing partner of the ATAX gun. So these are but their product overlap we have there is the ATAX gun.
Right. Let's talk about the overseas subsidiary, because that still remains in a loss. What is the outlook there, Amit?
So as we've mentioned in the past, we're working towards a path to profitability, and we're quite confident that by Q4 we should be at above break even. Unfortunately, the volumes have been a little weaker than anticipated because of issues ranging from the Red Sea crisis and overall demand reduction in Europe a little bit, to one of our customers having a specific issue in the US market, which has reduced our offtake temporarily. It's not anything to do with us. It's something to do with some other supply chain issues they're facing.
And Amit, there's that 150 odd crores or that one-time provision on investment in Tork Motors. You want to tell us what this is on back of and shed some more light on that for our viewers?
So very simply, we are an investor in a company called Tork Motors. It was founded by a bright young man from Pune, and we invested in this company over the last 4 to 5 years in multiple tranches. And then with the withdrawal and the reduction in the FAME scheme, the profitability of the company reduced. And I think it's prudent for us to take a provision because we are, as I said, we are an investor. If the company is in in a situation where we have concerns over its going concernability, we have to recognize that and take a write down. We don't run the company; it's run by its CEO and managing director and the KMPs, and that is the decision that has been taken. So that's what we have done.
Right. So fair for me to understand that this is just an investment that's gone bad, and the 150 crores represents the complete investment made by your company in this company.
Yes,
there could
absolutely.
be some more we'll see in the next few quarters.
No, we have written off all our investment in this company so far.
Okay.
And obviously we're working towards working with them to see how we do a orderly wind down. But as far as our investment is concerned, this is the large part of it. As you mentioned, there may be some remnants, but this is a large part of it.
Right.
Very, very significant.
And
90%.
no write backs can be expected either, right, Amit, going ahead?
Well, never say never, but I don't foresee that right
so
now.
prudent to write it off as a provision, and then of course what happens later is always a cherry on the top. Very ambitious fundraising plans, 2,000 odd crores, which has been approved by the board. You already big time on the export map. So make in India, sell outside, make in India, sell more in India. What is this 2,000 crores going to be used for?
So it's very simple. We see tremendous opportunities in several of the business sectors that we are present in. As you're aware, we acquired a business in Coimbatore called JS Auto, and then we acquired a second one called Indo Shell Manufacturing. And these are both foundries in the iron and steel space. And we are seeing tremendous growth opportunities in this sector. When we bought the company, it was about 450 crores in sales. I think just in the 1.5 years since we bought it, or 2 years since we bought it, we will almost grow it by 60 to 70%. And the future growth rate looks very promising. And we want to be able to both do capex in these areas where we need to build capacities to service the market. And there are certain other areas where we will target inorganic growth, but in India. So by acquiring assets or businesses in India to service both the growing demand in India and to export from India.
Amit, also I believe the company is working on cost optimization, and that's quite the focus for Bharat Forge. Is it a fair expectation for us that profitability then in that case will only improve, and there's a very clear upside risk to that in the next couple of quarters?
So look, if I put it in a different way, what we're doing is bringing down our break-even level, improving our product mix, increasing the product diversity and customer geography, and de-risking the business further.
De-risking the business further. And when do you think we can see that reflecting on your earnings or your margins or your EBITDA?
Well, if you look at this quarter also, our EBITDA margins were
improved.
Extremely strong. They were 28% plus. So it's clearly reflecting, and it will continue to do so as long as the revenues remain at this level or so. But we still continue to do some cost reduction, business optimization, and the use of digital technology to reduce cost and to improve productivity significantly.
That's amazing, because that's what we've been all talking about, right? It's AI to improve and enhance efficiency, and that's got to reflect on the numbers eventually, which in your case is already showing. Now, one spoiler, Amit, is the CV demand in Europe, right? Which was rather a stable, good quarter for Bharat Forge, but CV is still struggling. Do you feel like this is probably the end of the pain for the CV sector, and going ahead, gradual recovery is underway or could potentially be underway?
So, two of our large customers have projected a good year for next year. And on top of that, we believe that there will be market share gains as well, because, in Europe, the energy issue, the availability of raw materials are all playing on the supply chain. So if you have a high quality product, good customer attraction and intimacy, there is potential to grow your business. So I think that on an overall basis, even expecting numbers to be stable in Europe, we should expect some amount of growth. And what we're also doing is, for existing product segments and markets, we're also developing a business through our casting business, which is the ferrous foundry, and trying to grow our engagement and share of wallet of our customers. So that itself is giving a huge opportunity.
Right, Amit. Happy to hear. Good luck and congratulations.
Thank you so
It's
much.
been a fantastic quarter. We hope you continue to do really, really well. But thanks for joining us.
Thank you. Pleasure.
Well, that was Amit Kalyani breaking it down for us. Bharat Forge has had a good run this quarter. They've seen an improvement operationally on most fronts. They've done a write-down of about 150 crores, which is a provision that they've made for an investment in Torque Motors, which, of course, they were not running, but it was largely an investment, and that has gone bad. Well, that was Bharat Forge, and that's the stock at the day's high point, trading with a gain of nearly 3%. Well, let's move on from one company to another. The other one that we're talking to is going to be the management of Concor right after this break. So stay tuned. We'll come right back.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching Earnings Edge, and it's a very, very busy morning with a whole barrage of companies reporting earnings. But the good news is it's Friday and the markets are cheering. Strong global cues and the Nifty is trading well. The breadth is good and earnings are getting rewarded. Concor is the second company that we're talking to this morning. Revenues and profits have grown in single digits, though margins were more or less flat in this quarter. I'm now joined by Sanjay Swaroop, Chief Managing Director of Concor, to add more perspective to these numbers. Hi Sanjay, good morning. Thank you very much for joining us and telling our viewers and your investors about how the quarter's been and what of course lies ahead for your company. Let's start with your FY25 guidance. You've kept that intact. You're expecting, I believe, 15% growth in EXIM volumes, 25% growth in domestic volumes. Walk us through that and what really lies ahead on the volume front for FY25.
Yeah, good morning. Actually, we are very confident that we will achieve the guidance that I gave at the start of the financial year. The EXIM, actually the Q1 of any financial year is normally like this only. Now we are picking up the business. On the EXIM front, there were geopolitical constraints which were impacting the business. More or less, they have stabilized. The movement on the China-America circuit, which was a bit overloaded as far as containerized cargo movement was concerned, is now stabilized. and we are seeing good traction on the India-Western world movement and containerized movement, and there is a softening of rates also and good availability of containers as well as vessels. So in the coming weeks, I am very hopeful that the export-import movement from India will pick up very nicely. And apart from that, in domestic, we are having a robust demand. This quarter also we posted 15% growth, and we are very hopeful that we will be able to achieve at least 25 to 30% growth for the remaining months of this financial year. And we have taken several initiatives in EXIM as well as domestic, which are going to pay us rich dividends in the coming months.
Right. So, sir, is it a fair understanding from me that the next couple of quarters, your volume growth will be much higher to average that 10 to 12% for the full financial year?
Yeah, exactly. Our growth will be quite good in the coming months, and which is there is a good demand, and our infrastructure is also ready, and we have been in touch with customers, with industry associations. So we are expecting a very good growth in the coming months.
Right. And what about margins? There was a little bit of a hit on back of the price increase that was undertaken. When can we expect a sharp recovery on margins for the company?
Yeah, like I mentioned that we will have a good growth in EXIM, and EXIM gives us good margins. Even in this quarter also, there has been an increase of 50 basis points in our market share in EXIM. So this will consistently be growing. Customers are happy with our service. Like our company believes in giving excellent service to our customers without sacrificing margins, and customers have respected that, and they have stayed with us. So we are going to expect good margins in EXIM. Apart from that, we have identified the streams and circuits in domestic, and where we are going to have the loaded movement in both the directions, in ongoing and outgoing and return directions. So that will bring down the running of empty containers, and it will further be affecting positively in my bottom line. So both these streams are going to fetch good margins in the coming months.
So even with higher railway haulage rates, 25% margin should be maintained, right, Mr. Swaroop?
Yeah, actually railway rates were, you know, that busy season surcharge was imposed from 1st of October 2023. It is more or less stabilized, and trade has accepted that increase, and I don't see any reason why we should not get good margins. So I'm very, very optimistic about it. That raise already has been absorbed very well by trade.
You know, sir, you highlighted to me that domestic business should grow with that 25%. Now, where is that going to come on bulk cement I'm talking? What are the other triggers that could help you achieve that very ambitious and healthy number?
See, if you observe our growth for the past 3 years, you will be seeing that every year we are in domestic, we are growing in the range of 25 to 30% back to back. This year also we are expecting a similar growth, because domestic the demand is very, very robust, and that bulk cement in tank containers, as rightly you have pointed out, will be a major trigger for growth. We have had talks with various cement companies, and our order for 500 such containers already we have given, and from third quarter we are expecting that we will start this loading, and trade is even anxiously waiting for arrival of containers, and we have ready-made demand, and we are going to place another tender for procurement of more containers. So this will be a major trigger for growth of domestic business in this financial year.
So I want you to talk a little bit more about all those new products in FY25, you know, to load bulk cement into tank containers. You're talking about using double stack trains for Nhava Sheva port, and of course establish that dedicated freight corridor as well. You want to walk us through the journey and what you are setting out for the company for the next 2 to 3 years? So I know none of all these will be, they'll be gradual, right? It's not a one-off or a one-quarter event. It's long-term growth for Concor. Strategically, that will change the direction of your company. Tell us, what are your internal objectives and growth plans there?
See, double stack has been a major, driver for growth as far as EXIM business of my company is concerned. Last year also we increased by more than 30%. This year in first quarter, double stack growth has been 14% over the similar period of last financial year. We are running timetable trains from Dadri to Mundra Port, which is diverting lot of business from road to rail. Apart from that, Nhava Sheva also we are going to bring on double stack because the last 100 kilometer stretch of DFC is yet to be commissioned. But we have a terminal at Varnama near Baroda, where we will be running double stack from NCR region to Varnama, which is just 400 kilometers short of Nhava Sheva. So we will give benefit to our customers to have double stack up to Varnama, and from Varnama to Nhava Sheva we will be running single stack. So that way transit time benefit as well as the rates tariff benefit will be given to customers, and I am very optimistic that lot of cargo will shift from road to rail in this process. So, and timetable train that we are running from Dadri to Mundra is a big hit, where customers are very happy. I will go to railways with a similar request for timetable train between NCR and Varnama, so that customers can get some kind of transit assurance. So these things will be a major drivers for growth. Apart from that, we are having a long-term tie-ups with shipping lines, shipping companies for EXIM volumes, and we had 5 years agreement which is going to expire in September. We are in talks with lines 1 to 1. All the shipping lines are in talks with us, and we are going to extend it further for 5 more years, some tweaking in condition, terms and conditions. So all these things will also fetch us good volumes, and we are very, very optimistic that for next at least 4 to 5 years, we will have a very good growth in the company, because our infrastructure is ready. We have almost 400 rakes, 47,000 containers. In next 3 years, we will be present at almost between 80 to 85 locations in the country. Right now, we are present at 66 locations, and we are in expansion mode. And in next 3 years, we will present at around 80 to 85 places. So we are present everywhere. We have connectivity, and we are very, very optimistic that we will be able to give good service to trade, and we will fetch good business for the company.
So your company is a jewel for the government. But if you do a search on Concor, the top searches will be divestment on Concor may be delayed, a private company could be eyeing stake in Concor, and the stock reacts to that news. So it would only be fair for me to ask you, divestment of the government off the table for now on Concor?
Thanks very much for complimenting about my company. But as far as the divestment is concerned, it's a policy decision. I will not be able to offer any comment on this, please.
Right. So anything else that you'd like to tell us in terms of what we should be expecting from the company? I think we've highlighted most things, but anything else that you would like to tell our viewers and investors in your company about Concor going ahead?
Yeah, I will just like to mention that divestment or no divestment, we are a very, very professionally run and professionally managed company, and the expenditure on our staff is only 5% of the total revenue, which compares with the best in the industry. And we are a PSU, there is no doubt. We have a certain set of rules around which we work, but we are very flexible in terms of interpretation of our policy. We work for our customers, and our customers for our customers. Concor is the first choice, and they are very happy with our service. They have stood with us always, and in future also I am very, very, very hopeful and very confident that all the stakeholders will remain with us, and this company will continue to serve them as it has been doing in the past.
So just one last question before I let you go. What was Concor's total land leasing fee for 24-25 and of course for the current financial year? And also, have you completed the surrender of the portion of land at your inland container depot? And any other plans to surrender land in the current financial year?
See, that has been a ongoing process. Till now, as you may be aware, we have already surrendered 16 terminals to Indian Railways, and without sacrificing our business, because the same business was diverted to our nearby terminals. Now, secondly, the question about the surrender of a piece of land at ICD Tughlakabad, yes, that has been completed, and we have given it to Railways, and we are at some other terminals also analyzing wherever we develop our new MMLPs. We feel that the business and the trade of the area can be served from those MMLPs. We surrender the terminal back to Railways, and so that our trade is not affected, and they come and they give all the business to our MMLPs. So that's an ongoing process, and in this financial year also it will continue.
Right, thank you very much, Mr. Swaroop. Good luck, congratulations. It's been a solid quarter for Concor, and it looks like the outlook looks as promising. We'll hopefully try and connect back with you for a more detailed sit-down conversation on your business. But until then, take care and we'll see you soon. With that, we're completely out of time on this edition of Talking Point. Thanks for watching.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that
Benchmark indices surge in early trade, tracking global cues. Nifty crosses about 24,300. Meanwhile, the Sensex nears 78,700. And it's a sea of green across sectoral indices. Auto, realty, and IT lead gains. In auto majors, Eicher Motor trades 4% higher after reporting its June quarter numbers. The company's profit rose 20% ahead of street expectations. And India's biggest IPO in 2 years, Ola Electric gains almost 10% after a muted debut on the bourses. Hello and welcome. This is the F&O Show. I am Agam Vakil, and in this show we take you through all that is happening in the futures and options space in Indian equity markets. It's turned out to be another good Friday as far as trade's concerned, and I know we're near day's lows, but we're in the green, and that is a big positive, I suppose. With the Nifty, well, yet again up as much as 0.8%, and we've actually seen good traction coming through, good positive traction coming through as far as the Nifty is concerned. The Bank Nifty is also up and about by 0.7%. So all in all, we're seeing good advances. You know, in the broader markets, specifically something like the mid cap and the small cap indices, we're actually seeing in a 0.6% up move there. For the mid cap index. The small cap index is also advancing by around 0.6%. So like I said, there is buying coming through, a little bit of an outperformance as well when it comes to the Nifty specifically. To talk to you about how things are panning as far as the futures and options space is concerned here, let's pull up the futures first and see how things are faring when it comes to the Nifty. So the Nifty at the moment is advancing, and the unwinding continues as far as the August futures go. Down 3% in terms of its open interest. And as far as the Bank Nifty is concerned, let's pull that up as well. We're seeing again an up move in the Bank Nifty and unwinding to the tune of less than 2% in open interest there. What about the options market? How are they performing at the moment? And in terms of your open interest for the Nifty specifically, you know, we've been talking about the fact that it's expected to be range bound between 24,000 on the lower end and 24,500 on the higher end. That's the kind of range we're expecting the Nifty to move within, traverse at least over the course of the next few days. We don't have too many macro triggers to deal with, at least in the near term. Of course, we will have continued traction when it comes to earnings, which will determine the way in which we have the Nifty move. But remember that there are not too many Nifty companies left to report earnings. A lot of them are already out of the picture, which means that we likely could see consolidation. That perhaps is an expectation, at least on a fundamental basis. But let's take stock of what we can expect technically and what the futures and options space is in fact telling us. Well, on the back of our experts, we have Aditya Arora of Analytic.in and Jatin Gedia of Sharekhan by BNP Paribas who's joining us on the show. Good morning. Thank you so much for joining in. Aditya, I start with you. Your view on the Nifty 50 specifically. How are you trading this one?
Very good morning. I think markets are, falling slowly today, and we have seen rebound of about. I think this market has slightly retraced its downside. But if you look at the international market, after all the good news which we have seen in last few days, that Japan will roll back its decision to aggressively hike the rates, and yen carry trade has been played out 70%, 75% of it has been played out, etc. But today, if you look at Nikkei, it's down about 2%. And we have aggressive call writers also present in Nifty at about 24,500. Hence, 24,500 will act as a strong resistance for Nifty. I'm talking about Nifty future levels. And same is true for Bank Nifty. We had talked about the resistance level of 51,000 to 51,500 as an important resistance point for Bank Nifty in our last interaction, and we are seeing the same kind of price action today, that after a good gap up, market is slowly drifting down. So I continue to maintain my neutral to bearish stance on the market, And if you look at the derivatives data, then the FIs are continuously unwinding their long position in index futures. So this points towards, probably this is just a retracement of the fall, and anytime soon we can see next leg of rally on the downside. So I maintain my bearish bias on the market, and I'm bearish on the market.
Okay, there you have it. That's the view on the Nifty, and of course, Aditya has already spoken about the Bank Nifty as well. These are interesting option structures that you're playing as well. Of course, we're talking about the Bank Nifty specifically in this case, in which he is in fact looking to sell the 50,500 call and buying the 51,000 call. So, naturally, there's going to be some sort of a repercussion there as well. But let's get Jatin into the conversation as well. Jatin, morning to you. What about you, and how are you trading these indices this morning?
Morning, everyone. So, as far as our Sharekhan research team view is concerned, we are looking at a pullback or a counter trend rally in the case of Nifty. So if we analyze the price action since last 4 to 5 trading sessions, we have seen a fall of around 1200 points from 25,100 to around 23,900. And now I believe that during the next couple of trading sessions, we might just see a pullback of that fall. So we are playing for this counter trend pullback with the help of a bull call spread. We believe that on the upside, the Nifty has potential to retrace till around 24,520 to 24,650. So we are suggesting bull call spreads in this strategy. We are buying the 24,400 strike call option and subsequently selling the 24,700 strike call option. The break-even for this strategy is somewhere around 24,480 to 24,500. We are expecting a pullback in the case of Nifty, so we are suggesting a bull call spread.
So again, a bull call spread here as far as the Nifty is concerned, we're looking at buying the 24,400 call, and that's the operative option. Of course, as against that, to convert this into a bull call spread, Jatin is also looking to sell the 24,700 call moving in, and you have the maximum profit and maximum loss scenario in front of you. But Jatin, moving on, how are you trading the Bank Nifty? Do you expect it to move in tandem with the Nifty?
See, Bank Nifty is a different, altogether different structure. It has retraced around 50% of the previous rally. So 49,700 has been acting as a strong support, and since past 4 trading sessions, it has been unable to go below that. So we believe that it is likely that we may see the Bank Nifty also moving in tandem with the Nifty. However, outperformances are not expected. It might just be a move along the broader market, and thereafter, once this retracement rally is complete, we are expecting a significant fall in the case of Bank Nifty as well. It's a conditional sell only below 50,200. However, I'm not expecting a sharp decline in the case of Bank Nifty easily.
Okay. All right. So that's coming down to the benchmarks. Let's now take a look at how things are faring as far as the stocks are concerned. And maybe as usual, we pull up all the names there. So we have an increase in open interest when it comes to ABB, MCX and Siemens and this is of course, these counters are advancing. ABB has announced a strong set of operational numbers for the quarter gone by. Siemens will do that a little later on in the day today. MCX is also advancing by 4% with longs coming through. On the other hand, there is weakness in Gujarat Gas, which is down 3.7%, and Apollo Tyres, which is down 3%. Both these are also reacting to earnings coming through with fresh shorts for these companies respectively. But among stocks which are actually seeing unwinding in the futures and options space, again, Biocon looking at a dip of around 1%, HPCL seeing a sharper cut of around 3% in its underlying, where there is actually long unwinding in both these cases. And there is A bit of short covering for Dr. Lal Pathlabs and PVR Inox. So let's see what our experts have in terms of their radar when it comes to stocks. Aditya, back to you. What's looking interesting to you?
Regarding my recommendation, I have given my call on Nifty and Bank Nifty. Are you specifically asking about few stocks or?
Yes, I'm asking about stocks, Aditya.
Regarding which stock? I missed it, sorry.
Yes, that's stocks. I want to know what stocks you are looking at this morning.
I'm not specifically, having any bearish view on any stock, but I'm actually bearish on the index because the unwinding is significant in Nifty and Bank Nifty. So I'm actually specifically tracking the index this morning.
Okay. So, well, no stock calls from Aditya. Jatin, anything that stands out for you this morning?
Yeah, there are particular couple of stocks that we are looking at, one on the short side and one on the long side. So on the long side, we are seeing a five-wave declining structure in the case of Axis Bank, and we are expecting a retracement of that. So Axis Bank becomes a buy recommendation. The stop loss should be kept at 1125, and the upside target that we are expecting are 1200 to 1230. On the short side, we are seeing the stock Havells India. So Havells India was in a counter trend pullback, and in the previous trading session, it has witnessed a decline from its daily moving averages. And as far as price pattern is concerned, it has formed an engulfing bear candlestick pattern. So I think these particular parameters are suggesting a bearish outlook for the stock Havells. So Havells is a sell idea. Stop loss should be placed at 1820, and we are expecting levels of 1765, 1750 in the short term. Yeah, so one on the long side and one on the short side.
All right. Of course, a disclaimer for Jatin is on your screen there. So please bear that in mind as well. But among stocks that that we may want to discuss at the moment, let's pull up something like, in fact, an ABB India. This is where we are actually seeing a little bit of a reversal. Actually, I don't know if we can call it a reversal. We do know that ABB India in general has had a slightly rough patch after a stupendous up move in the month of June. But since the month of June, it has moderated, come off, corrected to a certain extent. And now the question is that, are we looking at ABB India moving out of a certain range, and that range, if I'm not mistaken, was about 8,000 on the higher end and 7,000 on the lower end. It does seem like, at least for now, and it's on good volumes too, that it is trading higher today, higher than at the upper end of the range. So Aditya, based on that, do you think that this could qualify for a potential breakout, and would you go long on ABB India at this point in time?
Sure. So first of all, a disclaimer that we have been, suggesting short on ABB since last 1 month or so. And looking at the current structure, I think it clearly qualifies for a retracement, not a breakout as of now, because still I see a lot of call writers active, and stock is not rising with good volumes. So that doesn't suggest the aggression of the buyers. So we continue to maintain a bearish stance on ABB, and 8,200 to 8,500 is the supply zone for the stock. So that until 8,500 is not taken out, I think one should maintain neutral to bearish stance on ABB.
Okay, neutral stance largely as far as ABB is concerned. Let's move on and talk about Dixon Tech then. And this one is the other one which, over the last 3 to 4 sessions has started to see a little bit of an up move, but not without volatility. And again, this one has also come off from its lifetime highs very recently, which it actually did try and test about 6-7 sessions ago as well. Jatin, what's your assessment on Dixon Technologies? How would you trade this?
Yeah, see, if I look at the price structure of Dixon, then yes, it has definitely come off its all-time high. But however, the structure still remains positive. I think it is consolidating in a range of 11,000 to 12,500. So I think after a sharp run up of almost from 6,000 to 12,000, the stock has entered a consolidation phase. I believe that this consolidation phase is likely to continue for some more time. So no specific recommendation to buy at current levels. However, if someone is looking to accumulate from a long-term perspective, then whenever the levels of 11,000, 11,200 do come up, then one can try to accumulate this stock from a long-term perspective.
Okay, and we will take up one of the the defense stocks, because that seems to be the other theme which has played out very well over the past few months. And I'll take the one which is actually trading in the futures and options space, and that's BEL, or Bharat Electronics. There has been an ever so slight up move there, but there's nothing prominent in terms of recovery. Aditya, at what point in time would you want to initiate longs in BEL, and whether or not at this point in time this actually makes for a good case to go short even when it comes to Bharat Electronics going forward? What's the way forward?
So I'm in that second group of people who would like to be short on the stock. And as you rightly summed it up, the recovery is very, weak and not very prominent. And that is also, accompanied by very low volumes on the stock on the upside. And call writers are also pretty active. So this is a classical case wherein, stock is just retracing little bit of the downside. But, now it's trading near its 50-day moving average of about 300 and 310. So this is the ideal resistance zone for BEL. And I would continue to maintain bearish bias. And disclaimer, we have been bearish on this stock since last 1 month. And I think one can continue to be bearish on this stock. Soon I see this breaking levels of 280 and going below that.
And the final stock that I want to talk about is Trent. Now, this one is also making a recovery, and it's actually once again closing in towards its life high at the moment. Strength today as well. At least the futures are up around 2.5%. I don't know about the change in open interest there, but we're certainly looking at Trent moving back. If you actually pull up the last 6 month chart, you will see how it has actually moved from strength to strength with that bout of volatility over the last couple of weeks as far as Trent is concerned. Jatin, your view, what's your reading on Trent here?
So see, you have rightly pointed out that one of the outperforming stocks, and the recent volatility, it has tested its 40-day average and successfully defended it. So I believe that whenever this consolidation phase that the stock is undergoing as of now will be complete, and we are expecting levels of 6,000, 6,100 in the case of Trent. So it has been an outperformer. Recent consolidation phase is likely to break out on the upside. So we are pretty positive in the case of Trent, and we are expecting levels of 6,000 to 6,100 in the short term. We should keep a stop loss of around 5,550. So if someone is taking a long, then a strict stop loss is also suggested.
Okay, there you have it. That's the view on Trent. And with that, we're going to take a moment to thank both our experts, Aditya and Jatin, for joining us and taking us through their views on the markets, giving us a couple of trading ideas, and of course addressing a handful of stocks as well in terms of what could potentially pan out. But with that, it's time to slip into a short break, and on the other side, we continue with all the traction from the commodity space. Back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back to the F&O show. Well, we are taking stock of the commodity space now, and we now have with us at the moment Ajay Kedia, a director at Kedia Advisory, who's joining us on the show. Ajay, good morning. Thanks so much for joining in. Ajay, a lot happening with respect to changes with in the interest rate regime globally. And we've obviously had some sort of an impact when it comes to several commodities going forward. My first question perhaps should be on the dollar INR pair. How are you reading things here, and what's the way forward?
Good morning, Alvin. See, last 1 week is very crucial for all the asset class. We have seen the carry trade reverse has been impacting equity, currency, bond, or commodity. Definitely, rupee, if we talk about, has dropped to the level of almost 84, and things around us or neighboring concerns are being there. Global market has been under very much high volatility because of geopolitical tension. US numbers are not appropriate, and maybe we can see US can slip in recession. All this creating pressure on rupee also, but despite that, RBI has taken a very good steps, and still our currencies are very stable. So I think the range could be around 83.60 as a immediate support, and on higher side 84.20, because currently the volatility is too high right now, and the geopolitical concerns are too high as of now.
Okay, and based on that, how are you trading precious metals like gold and silver?
Yeah, whenever there is a geopolitical tension or any concerns in the economy, definitely gold should shine. But on Monday, we have seen gold and silver prices both have eroded. But now, since last 3-4 session, data points have been slightly supporting for bullion, and rate cut probability is continuously rising for September. Due to all these factors, we expect gold should again see a good bounce. For today, we can buy around 69,500 with a stop loss of 69,300. Immediate target could be near to 70,000, which is around 69,900 level. But in case of silver, we have seen a more erosion because data point from China is not more supportive for base metal. So we have seen silver prices drop below 27 level mark, but now slowly and steadily recovering. Looking to this, we expect silver September contract could be bought around 80,400 with a stop loss of 79,600. Target could be 81,400. But for long-term plan, this is a very good opportunity because already we have seen the duty adjustment has been seen in domestic market. With the onset of festival season, we expect physical players should make some positions in bullion.
Okay, so that's the view on gold and silver. A very quick question on crude as well, Ajay. How are you trading this one?
The crude right now, we have already seen the demand concern is being still in the market. Chinese numbers are not at all supportive, but geopolitical tension is slightly bigger. Looking to this, we expect to take a long Brent can retest the level of, let's say, 80-82 level soon because of supply concern. On domestic side, 63.50 is good to buy with a stop loss of 62.50. Target could be 6,500 or plus if the geopolitical tension further escalate from here.
Okay, Ajay, we leave it at that. Thank you so much for joining us and taking us through your views on those crucial commodities. With that, it's a wrap on the F&O show. Lots more lined up on the other side. Keep watching NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the log street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the log street deals, finance and policy news that could shape your tomorrow.
Welcome, you're watching the Small and Mid Cap Show. I'm Mahima Vachajani and with me is Harsh Saita. Well, before we move on to the management that we're going to speak to today, let's get across to my colleague Tushar, who is joined by Ola Electric Mobility's Chairman and Managing Director Bhavesh Agrawal.
Yeah, thank you, Mahima. Joining us now is Mr. Agrawal. 1 hour after. So just 1 hour after the listing, where the company listed about 76 rupees, it's now the company has surged by about 17%. Now it's about 90 rupees per share. Mr. Agrawal, welcome to NDTV Profit.
Thank you so much, Tushar. You are seeing the stock price, not me, but I'm getting this information through you. Exciting to hear this.
So first of all, reaction to the listing premium that you are seeing, 76 at listing, now about 17% up. First reactions.
No, I want to thank all the investors through your channel who have reposed faith in us. We brought this issue at a price which we felt was attractive to everybody, to all kinds of investors, retail investors, institutional investors, and everybody. And in the end, pricing is a function of the market. So, company or promoter can't do much beyond doing their work on the floor of the factory. But it feels good that people have liked our story. People have put their faith in us. And our story is a story of building the India of the future. It's a story of building technology, building manufacturing, and built by Indians. World-class technology, world-class products built by Indians here in India. And that story needs the partnership and support of the street, and we look forward to having a very long-term relationship where we hope we can build wealth for everybody on the street.
You're the first pure play EV company to list in India. Investors now looking at this performance in the first hour, investors will be closely looking at what you're doing next. What's next, sir?
Well, that's the billion-dollar question, I guess. We have, if you see our journey, we've been focused on scooters, and we have a portfolio of scooters. We are the market leaders. And we've been talking about the fact that we will now move to motorbikes soon. India is a very large two-wheeler market. Scooters is 1/3, motorbikes are 2/3. So motorbikes is actually the larger market out there. And we have our annual launch event coming up in 6 days, 15th August. हर साल हम 15 अगस्त को Independence Day को अपना product launch करते हैं with pride and with a vision for the future. So hopefully this time what we show, we've been talking about bikes for a while, and hopefully people will like what we show.
You're clearly the market leader with about 1/3 of the electric two-wheeler market. You're going into motorcycles, but there are incumbents, there are upstarts as well who will obviously get to catch up with the market leader. So what is now your differentiating factor? Okay, everybody sells two-wheelers, but what is your differentiating factor that why should people consider Ola? Is it just because of scooter, or is it to do with the battery also that you're producing?
Absolutely. Our differentiating factor fundamentally, Tushar, is that we build the best products. And we build the future. हम भविष्य बनाते हैं because EV is the future. Across the world in automotive, it's clear EV is growing very fast and taking the place of the traditional internal combustion engine. To build the best products, we create the technologies in-house, specifically the cell. Just like internal combustion or purani zamane mein, in the ICE era, the engine was the heart of the vehicle. In the EV era, the cell is the heart of the vehicle. And the cell technology is a complex one. We have created that technology and that IP in-house. And that is what delivers differentiation, be it faster charging, be it longer range, be it lighter weight. Every kind of functionality that you expect in the vehicle is delivered through that. And that's our differentiator with which we are able to build better products faster and at lower cost.
The future is electric, you clearly mentioned it. Is the future profitable as well? You have grown, so the revenue has grown to more than 5,000 crore. The loss has also expanded with the last numbers that we saw in the RHP.
In absolute, but in percentage it's come down a lot.
It's come down. The EBITDA, so to speak. When do you start reporting profits on the net profit? So what is the aim that you have? That's what now investors will look at it.
We aim to build, it's an interesting thing. We're building a sustainability focused company to build a sustainable environment, and we want to build this company sustainably, which means we want to build a profitable growth story. We're not there yet. If you see our last 2 years of financials, which are in the prospectus, FY 23 to 24, revenue went up 90%. EBITDA margins improved from -43% to -19%, a 24-point improvement in just 1 year. This journey, as we continue to improve volumes and hence revenue, our cost doesn't go up in a manufacturing business. So the operating leverage drives better margins. And secondly, the strategy of vertical integration with our cell coming into our products next year drives. The cell is the costliest part of an EV. So as the cell we start manufacturing in-house in India, save the margins that global suppliers take, save the duties. That will further drive gross margins and hence EBITDA. So this is the roadmap. I can't share numbers today, but soon we'll be publishing our Q1 results, and I hope investors will take a look.
Do you have, you're not talking numbers, but do you have a production target for the batteries as well as for the scooters at this point of time?
We have the highest government allocation of the PLI scheme, 20 gigawatt hours. So we aim to get to that stage over a few years. Right now we have installed 1.5 gigawatt hour. We will go to 5 sometime early to mid next year, and so that's the plan on the gigafactory capacity. On automotive capacity, we have 1 million units a year already installed. As we're growing into that in the future, then we'll expand more.
All right. So are you already making money on your scooters, or are you still some loss that's happening on every unit that you're selling at this point of time?
I answered your profitability point, so I gave you the directional input I can give. Rest, I'll have to talk in my quarterly results.
So let's look at a couple of more numbers. Look at from the capital expenditure point of view, where you're standing, the amount of money that you spent this year for FY25, and what is the debt to equity picture also looking like for you?
See, we are actually retiring some debt in this from the use of proceeds, about 800 crores. So it will bring down some of the cost for the company in terms of interest. Now, looking ahead, our automotive factory already has some headroom for growth, so there's no immediate more capex required over there in any large amount. The cell factory will take some more capex as we bring it to production. But looking ahead, we will find a balance between debt and equity. We will, we will try and make sure we have a good balance sheet funded through both debt and equity. Our projects are funded through part debt, part equity. And as we go ahead, there will be accruals, there will be other sources of capital with which we can fund different parts of the projects. Again, today's directional inputs, but as we go along quarter to quarter, we'll share more with investors.
Okay. Finally, now you're a listed company. There are more EV startups, I mean hundreds of EV startups who are looking to make motorcycles and scooters. They are OEMs. Your message to both of them at this point of time?
My message to the industry overall is, I think पुरानी चीज़ों को छोड़ के हमें नई दुनिया देखनी है, भविष्य की तरफ बढ़ना है, और भविष्य है, the future is all about EVs. It's about a clean environment, a green supply chain, and a future built on technology. Now, different companies will have their own strategies, but I believe India has an opportunity of creating a world-class EV hub. The world is looking for partners to build this future. And India will build it for itself and for the world. And only Ola can't do it. The whole industry, other OEMs, new startups, suppliers, tier 2 companies, global suppliers manufacturing in India, all of these have to come together to make this Indian dream possible.
So you talk about the Bhavishya. So is Bhavish going to lead the Bhavishya for the entire industry at this point from your point?
That is for you guys to say. But thank you so much for your time, Tushar. I have loved talking to you.
Okay. Thank you so much for the time, Bhavish. Thank you. Thank you so much. Yeah. Back to you, Mahima.
Well, thank you for that, Tushar. I hope you've had an engaging day, and let's quickly pull up the stock for Ola Electric. See where it's placed now. We're 17% higher. Of course, absolutely flat listing, but it's doing fairly well in trade today. We also have Puneet with us, who's been looking and been analyzing this IPO very, very closely. Puneet, how do you assess the listing, as well as how do you assess valuations at this point? Now, if an investor were to buy, how does this one look?
Well, definitely, the valuations aren't cheap, but compared to the previous round that Ola raised at roughly $5.4 billion, this has come in at roughly between $4 to $4.2 billion. So definitely, I think that's the cheer that market had, that the listing has happened at a lower valuation compared to the previous round. Gained on the current market, Ola is definitely the market leader here. They have roughly 30 to 35% of market share. But we just thought that we look at, if you like at the current status point, what could be some of the things that work for the company and don't. The first is, of course, the EV penetration currently is just 5.4% in India. Now, this is expected to reach by roughly 41 to 50% by most brokerages such as HDFC Securities, and Ola definitely could be one of them. That's the second point. They have roughly 35% market share in the EV two-wheeler space. If you just limit it to scooters, the market share goes up further. But they are also, as mentioned, in this interview, that they are looking to enter the EV bike segment as well. Now, currently, the Ola Gigafactory, one of the major things is, of course, they've managed to attract a lot of global talent as well. So the current Gigafactory head, Mr. Hyun Sing Park, is currently the CEO of Ola Cell Technologies. Now, he's a veteran of the industry and has worked with LG battery manufacturing operations for roughly 36 years. So that's been one of the key reasons for the scale up in the last 2 years in revenue as well as vehicle volume. They've gone from roughly like 10,000 units in FY22 to roughly 3 lakh units in the last year. And this year also looks very promising. The fourth is, of course, in-house capability. They have 3 tech centers across the world, one in India, UK, as well as the US, and 86% of the components that they make across their 3 models are quite similar. So they don't have to, continuously doing R&D. R&D is done on a platform basis, and that's been one of the major positives. They are also eligible under 2 PLI scheme. That's one of the key positives as well, under the auto PLI as well as the cell manufacturing PLI, which comes up potentially next year. And the Gigafactory, it's expected to have the first phase completion is already done. The second phase is coming by February of 2025. Valuations, like you rightly said, Harsh, is slightly high higher. EV to sales are roughly 5 times. Now, there are peers who are trading at the same value such as TVS as well as Bajaj, but they are much more profitable. So that's one of the key things. The second thing is EV subsidy, has come down by 50% post the FAME 2. And finally, the bike segment is the key risk market. One of the players, Revolt Motors, just sold like 7,000 bikes. So there are some key concerns, but I think market is taking positively to the the positives of the company as well as the valuation which came down. So that's the reason why we might be potentially seeing a 16% run up today post listing after a subdued listing, but that could be one of the positives. Back to you.
Right, Puneet, thank you so much for breaking that down for us, and thank you so much for highlighting the valuations part and the key concerns part as well. But with that, it's time to slip into a short break. On the other side, we will be joined by the management of Alembic Pharma to talk about first quarter earnings, so stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right.
Welcome back. You're watching the Small and Mid Cap Show. I'm Mahima Vachrajani, and with me is Harsh Saita, and we're also joined by Varsha today, who tracks the space very closely. Alembic Pharma came out with its Q1 FY25 earnings, where revenue was up around 5%, EBITDA was up roughly 19%, margins have improved from 13.4% to 15.2%, and net profit was up 11.7%. But to discuss as to how the quarter has gone by and how FY25 is shaping up overall, we're joined by Shaunak Amin, who's the Managing Director at Alembic Pharma, who joins us now. Welcome to the show, sir. My first question to you is that overall good set of numbers. I want to understand that on the US part of things, that now you're launching a lot of products there as well. So I just want to understand that what is the kind of run rate that you're seeing in the US business overall and overall in FY25?
Yeah, so I think in terms of new product launches in the US, we launched 2 in the current quarter. And I think we're expecting a few more to happen in the next 1 or 2 quarters. You do understand some of these things are hard to kind of time exactly quarter to quarter basis. But I think over the next 2 quarters, we should see a few more launches happening. We've also got 12 approvals this year. So I think it kind of ties in with our historic ability to get product approvals as well as have successful new launches. So I think we continue on that trend.
Mr. Shaunak, continuing on the US, so we do have, we had this US pricing issues, and your comment on the US pricing environment, have you seen any changes there?
So the US pricing pressure does continue. I think the market is still seeing a pricing pressure. I think it's just maybe a little more internally adapt to dealing with some of these internal process pressures. So I think it's that change in the environment. I think we've been a little better to deal with it, but the pricing pressure does continue as we go forward.
Sure. Harsh here as well. Before we move to Q1 earnings and try and break those down, I want to try and understand the outlook with regard to the Indian business, because you've spoken about global. How's the Indian business doing in terms of growth? What can we expect going forward, as well as new product launches? What should that add overall to global as well as Indian consolidated top line?
Okay. You always ask very tough questions. So yeah. So on the India business, so we've done a lot of internal restructuring from the India business point of view over the last 3 years. What we maintain is we want to outperform the Indian pharmaceutical market, and I think we're quite confident of delivering on those numbers. Q1, I would say, was a bit of an aberration because there was, climate change and these extreme heat waves, which really did disrupt those local markets. And we do have a large amount of our portfolio sitting in the acute space. So that was a disturbance, but all things being normal, we're quite confident that we'll perform over a long enough period the Indian market consistently by a few basis points, and that's what we're working towards. Coming to new product launches, I think new product launches have been an integral part of Alembic, both from the US markets as well as global, as well as the India piece. From the US piece, like I said, we continue the pipeline to kind of keep delivering and keep launching products. From the India bit, I would just tweak it a little bit. I think it's not just going to be pure new launches. We've seen a lot of traction in those products which have been launched over the last 24 and 36 months. And I think a lot of the effort also is to scale some of these products up in India from, just being a new launch to say, can we build significant momentum in the market? So that should take a larger share of the top line. Pure new launches that have been launched in the current financial year, yes, that continues. But I don't think it's going to be a meaningful number just from looking at it from that point of view.
Got it. Now, let me switch focus to Q1. Your gross margins have gotten better, or rather they've come in also at a very healthy number, but your EBITDA not so good. Talk to us about what's happening here in terms of numbers, and should this trend likely reverse, and should this gross margin improvement also start to aid EBITDA going forward?
Yeah, so I think that our historic gross margins and EBITDA, I think, have been very robust over the last decade. Obviously, with a lot of new plants and stuff coming on steam, I think we do see a bit of traction on that. So on the gross margin side, I think we see this momentum continuing going forward for the next couple of quarters. On the EBITDA bit, I think there will be some time for the lag to catch up. But I think over time, we do expect both to kind of come back to historic numbers.
Mr. Amin, in the past few quarters, your API was performing pretty well, but in this quarter, API has seen a degrowth of around 15%. So yes. I want to understand, firstly, why has that happened? And secondly, where do you see this going and shaping up in FY25 overall?
Yeah, so I think on the API business, there are two parts to it. One is, I think the API business, not just for us, for the whole market, did see a lot of robust growth, in 22, 23, 24. We did see that, and we also got a large chunk of that. I think coming to this point, I think the market has seen a bit of, it's getting a bit tired. There is also some amount of price sensitivity that's happening, and, price erosion on the API side. We expect these conditions to continue, but I think over time, product mix will kind of keep offsetting that, but that's it. Coming to the specific quarter numbers, I think, it's just a bunging up issue of certain quarters, where you build something and some orders come in one quarter and the other quarter. So I think it's better to look at these API numbers over 6 months rather than just the quarter number.
Also, in terms of your animal health business, which is in India, so far, the last couple of quarters, we have seen good traction there. So in the next 3 to 4 years, where are you seeing this business going?
Yeah. So, we're quite bullish on the animal health side of things. We've seen significant ramp up on this business. Last financial year, we added a new division with about 250 boots on ground and expanded the product portfolio largely in the livestock space. We're very bullish, process point of view, and I think from a product pipeline point of view, we're quite confident on the India vet business. So, we expect this momentum to keep continuing, and we expect this to kind of keep going forward. I don't think we see any slowdown on this front at this point in time.
When it comes to your R&D expenses, you have always guided around expense of around 550 to 600 crores. Where are you looking this in this fiscal?
Yeah, so we've optimized our spend as a percentage from a high 10s, from a mid 10s to more like a 7% this quarter. I think what we're trying to work on at this point in time is just optimize, how we spend, where we spend. We do understand that price sensitivity, price erosion in the US does put a lot of pressure on our ability to work. So I think we continue with this kind of percentage in terms of, absolute R&D spends. I think going forward as a percentage, we might see some inching up of this as we see more recovery happening on the US side of things.
So will it go towards 10? Will it go back
No,
to...
I mean, it's not going to go towards 10,
Sure.
but it won't stay at 7. It would see some marginal movement upwards this year. So
Understood. And with regard to capex plans, any plans on the capacity expansion side of things? What are you focused on?
Yeah.
And when do you expect this US recovery to start to play out?
Yeah, so I think on the capex side of things, we had the Indore plant we've talked about last year, but that continues. Beyond that, there are no new capexes at this point in time. So this financial year, we won't see any new capexes. There's always these routine capexes which keep happening in terms of balancing equipments. So on the US recovery side, I think we've seen, some gradual pickup of the US side. I mean, we expect this to move on, backed by some good launches, backed by better product portfolio mix. So I think we're just better suited at dealing with the US market at this point in time. So I think we're quite comfortable and confident that, going from this point of view, we don't see any shocks in the system as such.
Got it. Mr. Amin, I want to shift towards balance sheet side of things. Your gross borrowings in fourth quarter onwards has gone up. So I want to understand that overall, how is the debt trajectory going to be like in FY25?
Yeah, so listen, again, it's hard for me to comment on the debt trajectory, but I think our levels are very comfortable at this point. I think there's no stress on the balance sheet at all. I think listen, I think it's going to be hovering around this point, these percentages. So it's not. I think we're far from any kind of stress or any kind of, and we're quite cognizant of this. So so that's where we are on the balance sheet side.
Also, Mr. Amin, yesterday there was this announcement wherein central government decided to waive requirement of some clinical trials in India if the drugs are already approved in US, UK and Japan, Australia and Canada. So how are you seeing this opportunity?
So I think it's not a new opportunity. It's just a ease of doing business, which is very much in line with the government's policy. So I think I'm very happy to hear that a statement like this. So, but I don't know enough to comment on it. I have to get into the office and really get into the depths of it at this point in time.
Right, Mr. Amin, I just want to round this up. So you spoke about how margins will go back to where they were earlier, which is likely closer to 20. How quickly do they get there?
No, so I can't give a forward guidance on that.
Sure.
I think as a process, we're working towards that.
Okay.
So look, something's out of our hand, but I think as a process, I mean, that's something that's, we're quite sensitive towards. And if you see things like trimming our R&D expenses and, optimizing plants, working on product mix, I think we're working towards that. It's hard for me to really give you a hard statement that, look, it's going to happen in 10 weeks or 20 weeks or 40 weeks. So, but as a process, we're totally on it. So.
Right. And you had guided for launching roughly 10 products in Q2 FY25. Is that on track? Or does that change at all?
No, I said not exactly in Q2. I said over the next 2 quarters, we should see some new launches and we should see. But I think as a whole in the financial year, we should look at around 10 to 12 new launches.
Got it.
Also, Mr. Amin, your rest of world sales were affected this quarter. and I guess constraint to supply was one of the reasons. So how are you planning to resolve this?
Yeah, so I think it's just working in terms of optimization of plants to supply it. I think also rest of world had a strong momentum in the last few years, so I think we some of it is the base effect, but we're working to resolve these issues.
Right, and Mr. Amin, just with regard to the US, it's going to be likely critical for you in terms of margins as well, is what I seem to believe. Now, just in terms of when the US pickup happens, seems to be uncertain. But what would be the levers, therefore, outside of this, which would aid margins?
I think plant capacity optimization is one area we are looking at. I think product mix is a big lever for us. New launches, of course, is a big one for us. If you see historically our performance, if you go into the past, a lot of our performance have been linked to our new product launch pipelines. So I think a couple of these things put together should help the margins move forward.
Okay, Mr. Amin, thank you so much for giving us those comprehensive answers, and all the best for FY25.
Thank you so much, guys. Thank you. Thanks a lot. Have a good day.
Thank you so much. And with that, it's a wrap on the Small and Mid Cap Show. Keep watching NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Matthew. Like the name suggests, this show gets you answers to all of your stock-related questions. To that end, you'll see a number at the bottom of your screen. That's where you send your questions to us, and it can be either short-term in nature or long-term, whatever you need to know. But make sure you send your question in with your name and, if possible, your location as well, so that you can understand when we take up your question. Let's take a look at where the markets are right now. And in fact, you see gains across the board, and it's a solid end to what has been a very volatile trading week. The big question is, will we hold on to these gains for once and perhaps we'll see soon enough. You see gains of about 1% or so, and we're holding above the 24,300 mark, close to 24,350. The broader markets are gaining, but not to the extent of the benchmark index, and you have the mid cap index that's up about 0.8%, and the small cap index is also up by around that same value. The market breadth is tilted in favor of the advances. Remember, this is in tune or in line with what you're seeing across the board in global markets as well. If anything, that gap has narrowed just a tad bit over the course of the session so far, and hopefully it holds through for the rest of the session. All sectoral indices are trading in the green right now, and you have the Nifty Bank among them that is trading with gains of about 0.7% or thereabouts. And you have the IT pack that is leading gains today, up as much as 1.6%. A lot of stocks reacting to earnings in trade today, whether it's Cochin Shipyard or in fact ABB India, which we're focusing in on. And in fact, that is the focus for the day. Cochin Shipyard on your screen, but ABB India, given up a bit of the gains from earlier on in the session. It was up over 3% at one juncture, but it is still up about 1%. And if we can pull up the longer term charts, you will see that this stock has risen from strength to strength, and it is on the back of earnings. Look at that. In the 12 months, it has gained close to 77% or thereabouts. And the June quarter earnings were quite a super hit. You have net profit growth of as much as 50%, and that's on the back of a high base. It's not something to scoff at. In fact, let's look a little closer at the numbers for ABB India, and we've got Anushi joining in with some updates also from the conference call which took place not too long back. What is the outlook, and what is the reason why we've seen this kind of improvement in the bottom line, Anushi?
Well, the outlook continues to remain strong for ABB over here as per the conference call which happened. But before we go into that, let's just discuss the numbers that the company came out for its Q2 CY24 performance. Now, looking at the revenue growth over here, a 12.8% of an increase that we are looking in the revenue, while EBITDA was about 55.7% up. Even if you look at the EBITDA margins, that were about at 19% as compared to 13.88%. So the company does say that the extra margin uptick that we are looking at is on the back of the revenue mix of a favorable revenue mix on the higher margin side, and along with higher order execution as well. Net profit as a result has seen about a 50% growth. Also, other point to focus on the margins is the raw materials cost going down by about 4.7%, while the total operating expenses as a contributor to revenue came down to 80.8% as compared to 86.1%. In other key highlights also, if you look at the orders, well, if you in the H1, if you look the overall period, there has been a 13% of an uptick in orders. But if you just look at the coming this quarter in particular, a 5% uptick in 5% decline in orders that we are looking at. This was due to the base cycle orders, but the company does expect this to also pick up going forward. Order backlog stood at about 9,500 crore as compared to 7,700 crore. Now coming to the Concor highlights over here, it sees large orders coming in from emerging sectors. PAT, as explained, expanded due to the favorable revenue mix. Export orders were about 39% up, and the company did say that in fact in revenue also it expected 200 crore more revenue, but on account of deferment orders, it showed a less 200 crore of revenue. In order backlog, if you look at 40 to 45% of orders remain in the long cycle side, while the balance are in the short cycle side. Now, an important point to raise in ABB is its valuations. If you look at the trailing PE as well, 139x of valuation, PE valuation, while its 3-year average has been about 108x. And if we go forward to the overall CY24 PE also, that stands at about 105x. So it is on the premium side. Despite the kind of premium valuations that we are looking at, the stock has performed. In fact, there was an interesting note from UBS as well, wherein it did mention that wherever there has been an earning upgrade for the company, it has supported those premium valuations also that we look at. So these are a couple of factors that we have seen from the Concor. Strong management outlook for the business going forward as well, and strong numbers in focus for today.
Okay, thanks so much, Anushi, for getting us those details. I do want to point out that we have the mutual fund data for the month of July that is out, and I'm pulling up the data release as we speak. Let's look at it as I speak to you, in fact, and you'll see some numbers flashing at the bottom of your screen as well. I'm looking first at the overall number, and for the overall number, we're seeing a significant inflow for the mutual fund industry as a whole. Inflows to the extent of 1.9 lakh crore rupees, as a result of which, and also the movement of the underlying assets, you have the mutual fund industry as a whole that has assets under management at the end of July of close to 65 lakh crore rupees. Now, delving down into the key pockets, and we're looking, of course, first at the equity actively managed schemes, which include the likes of the small cap, the mid cap categories. For that category as a whole, for the equity category as a whole, you're seeing inflows of 37,113 crore rupees, which is very substantial and is in line with what we've seen throughout in the month of July. And at the end of the month, you had assets under the management in actively managed equity schemes standing at 29.34 lakh crore rupees. This, of course, compares with about 40,000 crore or 40,600 crore of inflows in the previous month. I'm looking at the key categories here, and you're seeing substantial inflows in sectoral and thematic funds once again. And if you think about it, you've seen close to 40,000 crore rupees come in the month of June and in the month of May cumulatively. And in this month, in the month of July, you're seeing inflows of as much as 18,386 crore rupees. It's a very substantial number. This, by the way, is one of the largest schemes now. It has come in the second position, just behind FlexiCap, and it's not too far away from pipping it. In fact, you have the assets under management in, it's actually pipped it. As I look at the screen right now, you have sectoral and thematic funds, which are the largest category in the mutual fund space for actively managed equity mutual fund schemes. And this is a historic moment, because a lot of people making tactical allocations towards mutual funds. That number stands at 4.21 lakh crore rupees at the end of July, compared with 4.2 lakh rupees for FlexiCap schemes, which for the longest time have been the largest category. Take a look at some of the other inflows then, and you have inflows of as much as 7,000 crore rupees that have come into multi-cap mutual fund schemes. And this is when the split happened between multi-cap and FlexiCap. Multi-cap, remember, has a specific allocation of 25, 25 and 25% towards small, mid and large cap. And that is a requirement regulatorily. That has seen an inflow of 7,000 crore rupees. Among the other schemes, and we're looking at mid cap and small cap, you're seeing inflows continue, but it's a little slower than it has been in several months over the last year or so. The mid cap mutual fund scheme space has seen inflows of as much as 1,644 crore rupees in July, and the small cap schemes have seen inflows of 2,109 crore rupees. Large caps have also gotten inflows to the extent of 670 crore rupees or thereabouts, and flexi caps as a whole have received inflows of as much as 3,000 crore rupees. Now remember that July is the start of a quarter, and generally you will see the flows in mutual funds reflect that with regard to fixed income mutual fund schemes. And for fixed income mutual fund schemes as a whole, you are seeing inflows of as much as 1.2 lakh crore rupees. And this is what has contributed to most of the inflows into mutual funds in the month gone by. A large amount of this, in fact, more than half of it, is in the form of liquid mutual funds. And this is largely institutional investments that come through at the start of the quarter. At the end of the quarter, you see outflows from liquid mutual funds and also fixed income mutual funds as a whole. To give you some perspective, in the month of June, you saw outflows to the tune of 1.07 lakh crore rupees from fixed income mutual funds. This time you're seeing an inflow of 1.2 lakh crore rupees. That cyclicality tends to take place. You also have arbitrage funds, which after the change in taxation have become less attractive. I'm curious about what has happened there. Let's look at the inflows. Arbitrage funds in the month of July have still seen inflows, and in fact substantial inflows at that. 11,000 crore rupees or thereabouts have come through in arbitrage funds, which are categorized as hybrid mutual funds. Hybrid mutual funds as a whole, which are a combination of generally fixed income as well as equity mutual funds, as well as in certain cases multi-asset funds, which are also hybrid funds, which is a combination of fixed income, equity and gold. That category as a whole has received inflows of as much as 17,436 crore rupees, and the assets under management in this whole bucket in hybrid mutual fund schemes has stood at 8.4 lakh crore rupees at the end of July. A bulk of this, of course, the inflows have come through in the form of arbitrage funds. We have requested, or we have looked for some commentary on this, and we will get you some details and some analysis of this. We're also, of course, waiting for the SIP number, which has hit a fresh record high every month since, get this, July of last year. And it stood at over 21,000 crore rupees in the month of June. We have to see whether that will continue to take place. Now, overall, if you were to sum this up, it's a very strong set of numbers for the mutual fund industry. And remember, this is in a month where you've seen a substantial change in the tax treatment of mutual fund schemes, as it has been with the asset classes. So equity mutual funds, you have the tax treatment of long-term capital gains at 12.5% versus the 10% earlier. Of course, fixed income mutual fund schemes have not seen a change. International mutual fund schemes have seen a change, and some hybrid mutual fund schemes have also seen a change in the taxation structure. Now, overall, like I said, it's been a positive month. I'm also quite enthused by the inflows into index funds, and it's an inflow of as much as 8,019 crore rupees in the month of July, and it's an assets under management of 2.6 lakh crore in that month, or rather at the end of that month. All told, very strong numbers. We'll get you some analysis when we manage to get in touch with Swaroop Mohanty. We've got him soon. We'll soon get him on the phone line. In the meanwhile, let's go across to Ashish Maheshwari and Kush Bora, both of whom have been waiting patiently while I've tried to give our viewers a taste of how the mutual fund industry has performed, or the inflows that they've received in the month of July. It looks strong, gentlemen, but let's talk about the equity markets as they stand right now. And we were talking about ABB India at the start. I'm curious what you think about the performance, Ashish, and would you buy at this juncture? It has, as Anushi pointed out at the start of the show, valuations that are on the higher side.
Yes, I agree. At this price, valuations are on higher side. But traditionally also you see ABB always used to be quoting at very high valuation. So this is ABB, Siemens kind of stocks. They are high valuation stocks. And again, if I see this year performance expectation, this year they'll do around 1,600 crore kind of profit, and their market cap is almost 1,40,000 crores. So the stock is not cheap, but only thing is, as they have delivered continuously, number one. Second, if we see their shareholding pattern, even FIs are buying this stock in last 1 year from 9.5% equity. Now they are owning more than 12% plus stake in the company. So some buying from them. So retail float is just hardly 5% in ABB. So valuations are always going to be rich. As far as performance is concerned, I think it was in line, if you ask me, though revenue was slightly short, but profit numbers were in line what the street was expecting. And another thing which is positive for the company is excellent order book, almost 9,500 crore order book is there. But as stock has already moved quite a bit, if we see last 3 months, already 15% the stock is up from the previous lows. So my suggestion will be to look at this stock at some more correction, maybe 7,500 rupees if somebody is looking for long-term investment.
Okay. So I just want to point out one more thing. I was looking a little more at the Amphi numbers, and we've got significant inflows, as I pointed out, in equity mutual fund schemes. And I pointed out that once again, a large part of that is in the way of your sectoral and thematic mutual fund schemes, which has once again seen inflows of close to 18,400 crore rupees. A large part of that is once again in the form of new fund offers. there are as many as 3 mutual fund schemes that opened in the month of July, and the funds that were mobilized by these new fund offers stand at 13,735 crore rupees, out of which 9,790 crore rupees have come through in the way of sectoral and thematic funds. Do we have Swaroop Mohanty? Okay, I'm still waiting for Swaroop Mohanty to join in. In the meanwhile, let's jump straight to our questions. And we've got Santa Kumar, who's got the first question today. He's asking about a couple of stocks, Mazgon Dock Shipbuilders as well as Paras Defense. And he's got both of them at a decent profit is what he says. Or rather, he's wondering whether to buy at the current price, and he's looking to hold for a year, and whether or not he can make 30% on this. Kush, bit of a tall ask for stocks that have done quite well.
Hey, hi, Alex. Indeed, but the silver lining, if we can look at it that way, is the fact that they've corrected quite a bit already, at least in the last couple of months, and some of them are coming to a level where they might just start to seem attractive, at least from a trading perspective. So a Mazgon Dock for sure for now falls in that category. In the last couple of sessions, we've seen the stock form a base and move higher. So I think this is getting ready for a next leg of up move. It may not be as sharp as what we've seen in the recent past, but definitely attractive levels and a favorable risk reward ratio. So if you do want to accumulate, then 4750 is your stop loss. On the higher side, you're looking at a 5200 and then a 5450 as the next levels to watch for. Paras Defense hasn't really made a very convincing base, although it's respecting the last week and this week lows. But I'd give it some more time before we go out and get a conviction on this to buy afresh.
Gentlemen, we have to slip into a very quick break. We'll be back on the other side to take more of your questions, viewers, so do stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
All right, welcome back. We're in the midst of taking your questions, and the next one is from Shalini, and she's asking about CESC, which she's bought at levels of 174, and she's wondering whether to hold on based on the fundamentals. I'm not sure whether we've gotten the earnings yet, but they are, if I'm not mistaken, out today. What's the view on this one, Ashish, on the fundamentals? Would you hold on?
Yes, I like to remain invested in this stock. I think this particular sector is doing good, and this group of stocks have also started now doing good. We have seen Sanjeev Goenka group of stocks now, like PCVL, etc., also started taking part in rally. And if we see CSC also, last quarter numbers were also quite decent, almost for 30-40 crore PAT was up from previous quarter, and I'm expecting good set of numbers even this quarter because the power demand was quite robust in this quarter. So you can remain invested and hold for a target of 200 rupees in this stock, which I think can come maybe next 3 to 4 months.
All right. Balu from Bengaluru is asking the next question. Is this the right time to buy Jio Financial Services? And this is a technical question. I will come to you on this one, Kush. At 327 or thereabouts, would you buy?
Alex, if I may just give a quick update on one other stock, which is SGS Enterprises, and the reason I mentioned that is because this morning in the opening show we did have a quick discussion around it where we discussed it for a target of 120. It's at 1070. Please continue to hold or at least book partially for whoever got it. And so sorry, Balu, just to give that slight digression, but I think it was a little relevant at this point to give viewers an update. Now, as far as Jio Financial Services goes, yes, we've got this one on our buy list for a very long time. And any dip that comes around, we do look at it as a buying opportunity. My only suggestion here will be that don't be in a hurry, or rather don't look for quick returns. This might take some time. It's consolidating. Positional stop loss comes in at 10, but this is a good time to start accumulating. On the upside, we're very constructive. 355 and 370 are the targets that we're looking at.
Okay. The next one is from Ravi, and Ravi is asking whether to hold or sell Radico right now. And he's writing in from Tanuku in Andhra Pradesh. Since it's not specified what the buy price is and the time frame, I'll just come to you, Kush, on how this is looking in terms of the charts that you're looking at. What are the key levels to watch out for, and would you sell at this juncture?
Well, very delicately placed. The entire space has actually seen quite a bit of traction, but this stock somehow hasn't really participated, so doesn't give me that confidence. But yes, to your question that what are the levels? I think on the downside we're looking at a 1650, and on the upside we're looking at about 1730. Either of these two levels breaking will perhaps give a more clearer trend to play with. At the moment, that seems slightly on the negative side. So I might just avoid Radico Khaitan at this juncture.
All right. That's the view on Radico Khaitan, and avoid is the call from Kush. Hindustan Copper, and I'm not sure who this viewer is. Just a quick request, guys. If you can tell us what your name is, it'll be easier for us to identify who you are. But Hindustan Copper up and about in trade today, up as much as 3.5%. Ashish, on the fundamentals, I did read that copper prices are on the way up. Would you say that this is a good time to buy?
Yes, Hindustan Copper, I think is a good time to add in the portfolio. Even the last 2 quarters numbers, we see the profit just became double from 63 to 124 crore was profit into the previous quarter. And I think result is also on 12th of August of copper. So prior to results, is a good time to accumulate this stock.
Okay. BPCL, HPCL, would you suggest an entry into the oil marketing companies? Amit Murkute is asking based on the fundamentals, and what target would you give, Ashish, on these two counters?
See, as now crude is hovering below $80 and these companies have not cut the prices still. So this quarter also we are going to see bumper result from these companies. Only thing is, only one problem is these companies, particularly oil marketing companies, they don't move on day-to-day basis. So you need to be slightly patient with these stocks. Then surely money can be made. So maybe BPCL you can buy at 320 levels for a target of 400 rupees, which is my pick number one. Along with this, I also like Oil India Limited, which is better bet than HPCL.
All right, Ishwar is asking this next question. Plasti Blends India and advanced enzymes. Whether you have a view, I'm not sure. Kush, I would think that advanced enzymes is something that you would look at. Is this the right time that you should consider buying?
No, not really. The stocks had a very sharp run, but we're starting to see these negative divergences pop up, which means there could be a round of profit booking or maybe some sort of consolidation going forward. 410, 415 are the zones where the stock has support. The good thing is that on the way down, the volumes are quite thin, which means that there hasn't really been a lot of heavy selling. So around 410, 415 might be a good time to get into this stock. On the way up, you're again looking at 430 and a 445 as a target, and your stop loss would be close to that 400 mark.
All right. Let's run through a few more very quickly. GMM Fowler is the next one. I'm coming back to you, Kush. Short-term view on this counter. We've got Chetan, who's bought at levels of 1454. He's bought at elevated levels. Should he hold on?
So, Chetan, if you just want to give yourself a chance, my suggestion would be 1315 is a very strict stop loss level that you should follow. If that's broken, please exit. The stock's on the way down.
Rocky's question, I'm guessing that this is Tata Motors. No, let me just pull up the chart. Hold on, this is Tata Teleservices, which he has bought at levels of 110, and he's got a significant quantity. He's bought 10,000 for a swing trade, and I don't know what the strategy would be. Kush, what would you suggest here?
There's a rebound after a sharp up move. There's a sharp round of profit booking that followed, but the stock seems to have made a base around the 89, 88 mark. The quantity is fairly decent. My suggestion would be to keep a strict stop loss, around that 88, 89 level. On the way up, don't wait for your target. Keep exiting at, interim levels also, even if it means exiting at a slight loss. So, 102 and then about 105 and then eventually 110 are the levels, to exit at. But keep a strict stop loss at 88.
All right. Unfortunately, we are out of time on this edition of Ask Profit. Thank you so much, gentlemen, for taking the time. Ashish as well as Kush, thank you so much for joining us on Ask Profit. We had a bit of a disrupted show on account of the Amphi numbers, but we still managed to take some of your questions. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are the flavor of the season, specifically the day as well. But before that, a quick look at how things are faring as far as the markets are concerned. The benchmarks currently trending higher. The Nifty is trending well above the mark of 24,000, which is a crucial one. We are also seeing an advance of around 1% in today's day of trade. The Bank Nifty also moving largely in tandem with the Nifty 50. That's also up by nearly 1%. The broader markets are, well, again, moving in the same pace, if not outperforming, but about a 0.9% advance for the mid-cap index. The small-cap index is up by just as much. So all in all the key indices are moving with some sort of gains, with the real estate sector standing out along with IT and auto. Well, it's a day where you have secular gains, and let's pull up the advanced decline ratio as well, because that'll give you a better idea about how things are faring at the moment. And well, there you have it. You have about 3 gainers for, well, about 1 loser, and this is a very rough estimate. This is as far as the NSE is concerned. And in the broader markets too, well, naturally you will have reactions to earnings, but among the key gainers, perhaps we can talk about something like an Oil India. It's been a mixed quarter, to be honest, for Oil India, but we are seeing a gain of around 6% for this particular company. We're seeing strength return to Oracle Financial Services. It was a strong quarter, but there were concerns about its valuations, which is why it saw a little bit of a beat down after its earnings, and it does seem like it's recovering. Well, we have Macrotech Developers up 4%, CG Power up 4%, and Sona BLW is up also as much as 3.7%. In terms of losers, well, we do have weakness in RVNL, which is down around 4%. Apollo Tyres and HPCL also down and out, not by as much, not by substantially, but we have a decline around 3.5% there. So that's as far as your broader markets are concerned. With that, let's also take a look at all the stocks that we are going to address in the show today. Pardon me. Well, we're going to take up Eicher Motors to see how the earnings have panned out. Ola Electric, of course, that's the IPO which has finally listed on the Indian bourses. Cochin Shipyard is the other one. Strong earnings coming through, and LIC as well on the back of earnings, along with ABB and Biocon as well. And to take us through all these stocks, we have Gaurang Shah with us, of GeoJit Financial Services. Gaurang, good afternoon. Thank you so much for joining in. As usual, before I come to you, Gaurang, let me introduce the first topic, and that's Eicher Motors. And for that, we have Puneet with us, who can perhaps tell us about how the quarter has been. Puneet.
Yeah, thanks for that. So, the outlook and the Bloomberg estimates were roughly around 10 to 15% growth, but the numbers have come in much stronger for Eicher Motors in this particular quarter. So, about 1,000 crores of PAT was expected. They've come in at roughly 1,101 odd crores. That's one of the most positives. And what's interesting is, what brokerages are also saying in this particular manner as well. So, while some of them like Citi have maintained a buy call on the stock with a target price of roughly 5,250, implying an upside roughly 10 odd % from current levels, but most have maintained that the valuation concerns at this particular point of time is slightly a key issue. Citi has said that they've cut like bike volume estimates for the company by roughly 4 to 6% over this particular year of FY25. That's also led them to reduce the target price by 50 rupees per share. But other brokerages such as MK as well as Motilal Oswal, they have maintained their sell rating, both target price of roughly 3,700 to 3,900 odd. And both have also seen some volume pressure in this, because do note that Eicher Motors in this particular quarter, they are changing their model and how they are addressing the market. So they are going to an auto replenishment model rather than a sales forecast, which essentially means that depending on the inventory, they will kind of just like replenish or add more inventory into that. So that has led to brokerages reduce some volume estimates. That's also impacted the numbers for this particular year. But overall, positive surprise for Eicher Motors in this particular quarter.
Okay. Well, Gaurang, welcome to the show. And if you can also come in on your assessment of Eicher Motors. We have seen a lot of competitive intensity too, and which is why over the last few years, we've seen a little bit of temperance in its price to earnings. What's the way forward here?
Thank you, Agam, for having me on this show, and afternoon to all of you all. So you remember, Agam, not too long ago, we had a very stiff competition in this category of 350, 400 plus CC. We had new launches, two new launches. One was from Hero Harley, 440 and 440X, and simultaneously from Bajaj Triumph in terms of 400cc motorcycles. I remember during that time, the stock of Eicher Motor was trading at 3,300, and when the announcement was, it was almost simultaneously these two new launches. And the stock of Eicher Motor corrected to about 3,000, 3,100. We maintained a positive stance over there, and we maintain a positive stance now. Let me give a disclosure prudent on my part that we have coverage on Eicher Motors. And the best part, Agam, is that not only the demand from big cities, tier 1, tier 2 cities is sustainable, but the most turnaround thing that has happened for this particular company is the demand from semi-urban and rural, wherein folks over there used to, ask for entry-level and mid-size motorcycles. Over the last 3 years, that preference has now shifted upwards to 350 plus, and in that category, I think because of the brand royalty RE, that is Royal Enfield, they command a tremendous amount of traction over there. And I think new launches will come and go, but the brand power that Royal Enfield has is going to stay for a pretty long period of time.
Okay, so that's as far as the Royal Enfield's are concerned, but we stick with the theme of two-wheelers. And well, of course, today we've had Ola Electric list as well on the bourses. And while the listing itself was a tepid one, we're starting to see a little bit of gain coming in on an intraday basis. In fact, it's up as much as 18% from the first tick, currently at around 90 rupees per share. And of course, the issue was it was issued at around 76 rupees per share. So it's certainly going at a premium to its issue price. But Puneet, in terms of how this listing has panned out, let's take up first what has worked in favor of Ola and all the factors that are coming through for the kind of premium that we are seeing on this company right now.
Yeah, definitely. So, we've seen that Ola is one of the largest market share companies in the two-wheeler electric vehicle space. And that's clearly, one of the positives about the company. But we just looked at, the business person, what could be one of the most positives that driving this particular share price, post-listing, tepid listing, as you rightly said. So, first is, of course, the EV penetration in two-wheeler specifically. It's gone up to 5.4% now from roughly, and it's doubled over the last 2 years. But brokerages such as HDFC Securities sees that this will move up from 5% to 41% by FY28, and sees that Ola will be one of the biggest beneficiaries in this particular market. They have currently already 35% market share, and that is expected to sustain going forward as well over the next couple of years. Another thing that has been one of the key positives, which is a key differentiation from Ola Cabs, which is the other company of the group, is attracting talent. Now, for the gigafactory that they're setting up for manufacturing battery cells, they've hired Hyun Sung Park over the last few years. Now, he's one of the veterans of the industry. He's worked with LG for the last 30 to 35 years in the battery manufacturing space. He's been to China also for the particular plant in LG, and they've been, attracted him. They've got him, and he has the biggest paycheck in the company, which is higher than Bhavish Agarwal as well. That's one of the key things, and one of the key things to look at going forward as well. That's something that the market is pricing in. Potentially giving positive thumbs up also that they will be manufacturing their own batteries. The other thing is, of course, the R&D tech centers that they have. They already have 3, one in India, US, as well as the UK. And what's interesting is that 86% of the components for the 3 models, Ola S1 Pro, the Air, is similar. So it's like the same components. So they are basically looking to build models for the long term where they have a similar platform and then they make changes on that. And that's the model that, guys like TVS as well as Bajaj Auto follow for scooters as well as bikes. So that's another key positives. They already are eligible for 2 PLI schemes, which is the auto PLI and the cell manufacturing that we just spoke about, and the gigafactory as well, which is going to be one of the most positives for the company. The phase 1 is already completed, and the second phase of 5 gigawatt capacity is going to come in by February of 2025.
Sure.
So that's definitely one of the positives that might, the market might be, very positive on the company.
Right, Puneet, but it can't just be about positives, right? What are the key concerns and risks here?
I think one of the key things is, of course, the valuation that we've spoken about in detail before the listing as well. Now, that could have been one of the reasons for the tepid listing as well. It currently trades at EV to sales of 5 times, and do note that it's a loss-making company. So it has roughly 1,500 odd crores of losses for this particular financial year, 2024. Now, that's slightly higher than last year, which is a negative, but they see that over the next 2-3 years, they should move on to the profitability gambit. The other thing is also that, since we can't compare it to on profits, EV to sales, while Bajaj trades around the same valuation, TVS is actually cheaper on the EV to sales metrics going forward. So that's another thing that, TVS is, a much more profitable company that we know. The second thing is, of course, the subsidy reduction. Now, in electric vehicles, we've seen a 50% reduction in subsidies from the FAME2 scheme to the new EMPS scheme. That's also a key negative because that's impacted demand in Q1. And the smaller players have, of course, been affected much more larger than Ola, but, that has been one of the negative impacts. And finally, the EV bike segment that the company is really positive on. We might see some action on the 15th of August this year. They are saying that they will be launching, they've launched a teaser already. But this is a very nascent space, not as much as, the scooters. Now, they sold roughly 3 lakh scooters last year, but the EV bike segment just had about 10,000 odd bikes sold by the whole industry. So it's a very, a space that's not been conquered by the existing players and, a big question mark, so as to say, going forward.
Absolutely. Well, Puneet, thank you so much for getting us all those updates, pros and cons, which are very important to consider here. Gaurang, come in on this. How do we take stock of Ola now, and what would you do with the IPO, say, which is currently trading at around 90 rupees per share? What's your assessment?
So, Agam, I think this week, it was on Monday that I was on NDTV Profit with one of your colleagues, and we were taking a preview of IPOs that had lined up and they are likely to list. One of them was, of course, Ola Electric. And as a disclosure, we had come out with an IPO note on Ola Electric with a subscription kind of advice from a long-term point of view. Look, with a 1,500 crore loss on the balance sheet and the valuation that it commanded from the price band, higher end was about 76 to the time it got listed today, and having about 18% uptick. I think if you are a long-term investor, as we have advised in the IPO note, we would advise to stay invested. It is going to take a while for the company to come out of the red color that it is in terms of bottom line. In terms of market share, well, from 35% going upwards is a possibility, depending upon what kind of technology and product upgrades they are going to bring. Next week, they are going to showcase the EV motorcycles on 15th of August, if I'm not mistaken. That's what the management was talking about. And then from there on, it will follow in terms of upgradation of product, in-house giga battery capabilities and capacities, and how does the large customer base accept the new product in terms of the electric bike. It is going to be challenging, but from a long-term point of view, we believe that the company may be able to manage itself to sail through.
Okay, so that's the view coming in on Ola Electric and a comprehensive view as well as to what you can potentially do with this one. But with that, we slip into a short break. And on the other side, we continue with all the traction with respect to stocks. Back in just a bit. Don't go anywhere.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So
Welcome back. This is Hot Money. Well, we are now taking stock of LIC. The earnings coming through. We have Harsh joining to give us an idea on how the quarter has been. Harsh, over to you.
Well, strong quarter overall, Agam. Sequential, not the best way to look at it because Q4 involved a lot of seasonality, a lot of positivity with regard to the way in which most customers approach life insurance, and therefore those numbers, of course, were a standout and very, very strong. But nonetheless, these numbers not bad at all. Good growth on that base of Q1 FY24, 20% plus on annual premium equivalent, which is equivalent to revenue or new premium earned. Thereafter, in terms of profitability though, you generally track a metric called VNB margins. Now, value of new business margins have gone to around 13.9%, a shade below 14. They were at 13.7% same quarter last year. So you're getting better margins. Why are you getting that? Because your non-par, which is your non-participating product mix, is only growing faster than your participating. Now, mind you, non-participating, for viewer reference, is more profitable, and therefore the more profitable segment is growing faster. It's clocked a 24% year-on-year growth, and therefore you're seeing that value of new business margin rise as a result of it. And that's where the positivity really comes from for LIC. Going forward as well, very bullish commentary from the management. They continue to believe that they'll better the margin number of FY24 full year in FY25. So they're confident for the year ahead. They've launched 4 new products as well in this month, and they believe that traction from there will drive the product mix towards the more profitable product mix segment.
Okay, Harsh, thank you so much for getting us that view on LIC and how the earnings have gone by. Gaurang, your view, one on LIC and maybe a comparison with respect to its other private sector players?
Well, Swagam, as a disclosure, we have coverage on 4 prominent players in the life insurance segment. That is LIC, SBI Life, HDFC Life, and ICICI Pru Life. Now, as your colleague was explaining the reason behind it, one is, let us understand what has happened after the pandemic. I think the entire thought process behind getting yourself insured in terms of a term insurance product has changed drastically from a product which will enable you to save some tax. People have made a tactical shift in their thought process that if something has to happen to you, then your family members can fall back on something if you take an insurance product. Second shift that has happened, Agam, is that from a low value sum assured, people have started to move to a higher sum assured. And by the virtue of that higher sum assured, the net inflow of new premium business for life insurance companies has gone up drastically. Along with that, a lot of people have now started to approach life insurance, term insurance as a product which can have really meaningful impact on your going forward and to your family members. So we remain optimistic, and not to forget, Agam, life insurance sector was overall a sideways to an underperformer. I think now the time is coming for this sector to catch up in terms of the earnings that they are reporting.
Okay, there you have it. That's how things are faring as far as LIC is concerned, and of course Gaurang has also given his view. But from there on, we move on to another stock which has had a fantastic last 12 months, also continues to go from strength to strength in terms of its quarterly earnings. Anushi is joining us to give us an idea about how ABB has come through. Anushi, over to you.
Well, the outlook continues to remain strong for ABB over here as per the conference call which happened. But before we go into that, let's just discuss the numbers that the company came out for its Q2 CY24 performance. Now, looking at the revenue growth over here, a 12.8% of an increase that we are looking in the revenue, while EBITDA was about 55.7% up. Even if you look at the EBITDA margins, that were about at 19% as compared to 13.88%. So the company does say that the extra margin uptick that we are looking at is on the back of the revenue mix of a favorable revenue mix on the higher margin side, and along with higher order execution as well. Net profit as a result has seen about a 50% growth. Also, other point to focus on the margins is the raw materials cost going down by about 4.7%, while the total operating expenses as a contributor to revenue came down to 80.8% as compared to 86.1%. In other key highlights also, if you look at the orders, well, if you in the H1, if you look the overall period, there has been a 13% of an uptick in orders. But if you just look at the coming this quarter in particular, a 5% uptick in 5% decline in orders that we are looking at. This was due to the base cycle orders, but the company does expect this to also pick up going forward. Order backlog stood at about 9,500 crore as compared to 7,700 crore. Now coming to the Concor highlights over here, it sees large orders coming in from emerging sectors. PAT, as explained, expanded due to the favorable revenue mix. Export orders were about 39% up, and the company did say that in fact in revenue also it expected 200 crore more revenue, but on account of orders, it showed a less 200 crore of revenue. In order backlog, if you look at 40 to 45% of orders remain in the long cycle side, while the balance are in the short cycle side. Now, an important point to raise in ABB is its valuations. If you look at the trailing P as well, 139x of PE valuation, while its 3-year average has been about 108x. And if we go forward to the overall CY24 PE also, that stands at about 105x. So it is on the premium side. Despite the kind of premium valuations that we are looking at, the stock has performed. In fact, there was an interesting note from UBS as well, wherein it did mention that wherever there has been an earning upgrade for the company, it has supported those premium valuations also that we look at. So these are a couple of factors that we have seen from the Concor. Strong management outlook for the business going forward as well, and strong numbers in focus for today.
Okay, Anushi, thank you for getting us that update on ABB. Gaurang, how do you stand? I know this is quite an expensive counter, but it has come up with its performance in terms of earnings too. How are you assessing this?
So let me answer this in a very simple manner. Well, if you are going to go and invest into a company which is going to give you growth in the future, long-term perspective, and anything good that you want to invest in will come with a premium. Of course, sometimes it does matter in terms of the PEs. But as a brokerage house, we at Geojit Financial Services are positive on the entire CAPEX, that is capital goods engineering sector, Agam, including the likes of ABB, Cummins, Siemens, L&T, KEC International, Engineers India. These are the few companies in the cap goods engineering universe that we are positive on. And I think new capex coming up, new capacities getting established, and the existing capacities going through a capex period. The order book for all these companies are very, very strong. Let us not forget that. And the ability to execute the order book in terms of the experience, manpower, technology, and equipment for all these companies that I mentioned, which is under our coverage, is also above par. And the run rate is also above the industry standards. And I think if India is going to become the next big manufacturing hub, then cap goods engineering sector will have to contribute.
Okay, all right. So that's coming in on ABB, and from there on, we move on and talk about Cochin Shipyard. Now, as far as this particular defense company is concerned, again, perhaps on expected lines, and something a lot of traders and investors would have been able to discern that it was going to be something of a good quarter. And Cochin Shipyard, it seems like it has not disappointed, because we are in fact looking at a 62% growth here, margins expanding substantially to 23% against sub 17%, net profit rising 77%. Now, we must remember that over the last 1 year, the government has actually taken a lot of measures when it comes to Atmanirbharta in the defense sector, and Cochin Shipyard is no stranger to this. More importantly, a few months ago, we also had the defense minister suggest that they are looking to push defense exports towards the world as well, and this is where once again Cochin Shipyard has an important role to play. In fact, it has already secured a handful of contracts from abroad too, and a lot of these factors coming together is the reason why names like Cochin Shipyard are coming up with stellar earnings. Gaurang, what would you do with names like Cochin Shipyard or Garden Reach Shipbuilders, or for that matter something like a Mazagon Dock? How are you reading into these?
So let me give you a perspective that the defense sector, Agam, is going to be a growth story for the next 3 to 5 years or even more, purely because of the kind of order book which is already there with these companies, and the most likelihood of more domestic orders and across the borders orders coming into this company. Specifically speaking about Cochin Shipyard, we've been right from the IPO, we had covered this particular company. We had given a subscribe to the IPO. Then it languished in a very narrow range for a pretty long period of time, and then the boost came in terms of the policy shift in defense FDI from the government of India. So currently we have a coverage on Cochin Shipyard. It has one of the largest dry dock facility for repairs of ship, not only domestically but also from the international market. It is one of the most important players in terms of reinforcing our armed forces with respect to Navy and Coast Guard. It had played a very crucial role in building up the indigenous Indian aircraft carrier, and there are more orders going to come in from the Indian Navy and the Coast Guard for this particular company. So I think the growth story is pretty long. Now it may happen, Agam, that because the defense related stocks have rallied almost about 100, 200, 300% in the last year and a half or two, there may be bouts of profit booking which may have lower levels for the stock. But please bear in mind, the liquidity is very scarce in terms of the volumes of these companies. So you are going to, and more importantly, there are funds which are now getting launched in Indian Defense Index Fund, if I'm not mistaken. There are 3 of them already. One of them is opening up for as an NFO, and 2 of them are already there. So I think from interest from there also will keep lower levels protected for the defense related companies, Agam.
Okay, there you have it. We will keep all those factors in mind. But on that note, Gaurang, taking a moment to thank you for joining us and taking us through your views on the various themes that we wanted to talk to us about in the show. And with that, it's also a wrap on this edition of Hot Money. But lots more lined up on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Right, on earnings edge. Right, on earnings edge today, we're speaking about Biocon. Peter Baines, the Group CEO of Biocon, joining us in to talk about the quarter gone by and the outlook ahead. Hi, Peter. Thank you so much for speaking with us here at NDTV Profit. Always a pleasure.
Thank you. Good morning.
All right. So when I'm looking at your numbers, I think what a lot of analysts are a little worried about are the EBITDA numbers. And let me just jump straight to that, because if I take out the 1,057 crores from your net profits, it's seeming like a bit of a weak quarter. EBITDA has also come down in large part because of the generics business. Is this something that you were expecting? Has quarter one gone by as planned?
Yes, I mean, quarter one has come in very much in line with our expectations and our outlook. I think we've seen on an underlying basis, so stripping out the year's transaction, we've seen a relatively flat revenue performance, but that's a mix across the businesses. And important to point out that in the biosimilars business, which is the largest business in the group, we saw underlying growth of 11% on the quarter on a comparable basis, and that offset degrowth in the services business of 2% and the generics of 6%. On the EBITDA question, that also came in line with expectations. The group EBITDA is still a healthy 20%, and in the generics business, it's lower at 9%. In the biosimilars business, it's a pretty healthy 23%. So we're not uncomfortable with that at this point in the evolution of the business, and we'll see that expanding in the second half of the year and beyond as we begin to sort of transition toward a more consistent acceleration.
Absolutely, and we'll come to each of those segment-wise businesses in a bit of detail, but just a word on the margins. Now, some of that impact has come because of employee expenses, which have come to 22%. And just trying to understand if this is a trend that continues, Peter, because now you also have a higher base.
And I think that's the key. That we've completed the transition now. It's largely the biologics business with the transition now complete. So we've taken on all the headcount, all the teams, all the expertise now to support the business. You'll have seen a reduction in some of the one-time costs that offset that. But now we're stabilizing and consolidating post the transition, and we'll build forward from there.
Okay, let's come to biosimilars. You talked about how you saw a year-on-year growth of 11%. The EBITDA margins are pretty robust at 30%. Do you see this at a sustained level, which then, of course, contributes to your consolidated margins, 18% this time? Where do you see that growing, and how big or how fast does the biosimilars business move?
Sure. So yes, we do see this, obviously moving forward. And in some ways, this is the consolidated business profile now. We've grown 11%. That's been through growing market share in key markets like the United States and our oncology franchise and in our insulin franchise, stable market share performance in Europe, and some very good growth in the emerging markets coming from existing products and extending our reach into new markets. Now, looking forward, we continue to see that traction this year, and then beyond that, the growth will be driven by new product introductions, that we are lining up. And that's an exciting prospect with 5 new product launches coming in the next 2 years. This is mid and longer term now in the United States, and 3 products coming into Europe in that same time frame. So we're consolidating the business this year, but there's good traction as we've seen on the comparable growth in the first quarter. That will transition to acceleration with the introduction of this new product flow, and of course, we believe that will play through the P&L and expand the margins as well.
Let's talk a little bit more in detail on that product flow. What are the big drivers coming in there? In your con call, you talked about the GLP portfolio. Can you expand on that?
Sure. GLPs, are very, very exciting prospect and priority for us in the generics business. The GLP peptides underpinning both diabetes and obesity, very, very large markets with long-term growth due to the development of those diseases right across the world. We're at the front of that in the generics with our liraglutide product, but that is just the front. Behind that, we're developing semaglutide, tirzepatide, and others, and intend to play a lead role in the generic, in the GLP generic market opportunity. Importantly, this has a very strong read across to our biosimilars business, which has a long-standing insulins business and a strong heritage there as a global player. And of course, insulins play to diabetes, and diabetes and obesity are very strongly linked in terms of comorbidities and disease progression. So we have a lot of opportunity there and a very unique position. I think one of the only companies with both GLPs and insulins to play into this sort of very, very large diabetes and obesity market going forward.
What is the timeline you see for GLP's availability in India and in other markets as far as you're concerned in terms of permissions? A lot of, I wouldn't say controversy, but a lot of different views on GLP as well out there in the public domain. Any comments on that too?
Sure. So on the sort of timetable front, I mean, we have approval in the UK. We'll be looking to launch in the UK and select other markets this fiscal. Our strategy is really global here, and we are pursuing regulatory approvals on a global basis to bring those products to patients, and we'll do that, in both a direct to customer model, and we'll work with partners elsewhere. As I said in the earnings call, we've just partnered with a strong specialty player, Handok, in Korea, for example. We're in dialogue with the Indian regulator to look at the opportunity to bring our product here. And in terms of what we see in the marketplace, there's no question that diabetes and obesity have enormous current epidemiology. 10-12% of global population is the estimate for diabetes, and growing. And obesity, I think, perhaps even higher. And really, these are comorbid diseases that cause devastating consequences in terms of disease progression, cardiovascular disease, renal disease, liver disease, reproductive disorders, and even bone and skeletal problems. Diabetes is the highest cause of blindness worldwide. So there's huge clinical requirement here and an enormous unmet need. And, we intend to play our part in fulfilling that need on a global basis.
And on the second part, I mean, my fault, I asked you both those questions bunched up, but a lot of different views on this group of drugs. I mean, obviously, they're being used as weight loss drugs in some parts of the world. A lot of talk about the possible side effects, long term. Do we know enough about it? Just your commentary on all of that chatter.
So in terms of the use of them, there is a very, very clear, very large, and very material clinical utilization. Obesity is a serious disease which causes significant downstream pathologies, as I've described, cardiovascular disease, renal disease, liver disease, and so forth. These are not trivial disorders as a consequence of clinical obesity. So we're very, very clear on that there's a significant unmet need that is going to grow worldwide. Obesity is a global phenomenon right across all markets in the world as a consequence of lifestyle and diet. So we shouldn't underestimate the severity of the consequences of obesity.
Let's come to the research side of the business as well, Peter, and what we've seen with Syngene. Now, US biotech funding has been down. The discovery services revenue in line was also hit by that dip. What is the outlook you see for there? Do you see some of that funding coming back and for research services in Syngene?
Yes, we do. And we already see those green shoots. Funding is flowing back into biotech from US VC. It does take a quarter or so to play through. And as Syngene has guided, they expect to see this pick up in the second half of the year and lay on top of the underlying growth that they're seeing in their dedicated services business and biomanufacturing. And I think Syngene has clearly guided, that it's retained its guidance of high single to low double-digit growth at the top line for the full year, and EBITDA in the high 20s. So I think that's all on track. We see headwinds that we faced, that the entire sector has faced, easing, and then we see the tailwind beginning to emerge. And with regard to the Biosecure Act, we're seeing a very high level of inquiry consequent to that. Again, that won't play through in a quarter or 2 quarters. It'll play through over the coming years. But Syngene's strengths and capability here position it to be very well placed to capitalize on that tailwind as well.
Just want to get a sense from you on how you see price erosion trends in the US moving forward. A lot of companies in the space that we talk to say that price erosion they see will go from double digits to single digits. What is your view here, Peter?
Sure, I think we're probably aligned with that. I mean, pricing pressures exist. They're a function of competitive intensity and supply, and they can fluctuate. I think we see a little bit of easing on the annual price declines there. And of course, it depends on the channel as well. I think you'll see less in some channels than you will in others. But it's a well-known dynamic that there's a range and there's some fluctuations. And I think, we're well aware of those and don't see any structural changes that will impede our planning going forward.
Just last bit on whether you see this change coming in that you're describing by Q2 or further. Is Q2 also going to be overall on a consolidated level a bit subdued before some of the changes which you've mentioned in every segment really start kicking in?
Yes, that's clearly our view. I gave that sort of outlook at the Q4 results, and I repeated it today. I think Q2 we'll see, again, sort of mirroring Q1, relatively subdued. But then we can now see these early signals of transition to more acceleration in all businesses, driven by the factors that I've described. Shift in headwinds to tailwinds in Syngene, new product launches in the generic business, and of course liraglutide, the outstanding opportunity there. And in the biosimilars business, continued traction building on the 11% comparable growth that we've seen, and then moving into fiscal 26, where we're eagerly anticipating new product introductions.
Okay, so FY26 is where you could see some real turnaround. Thank you so much, Peter Bains, for speaking with us. That's the management of Biocon talking about the quarter gone by and what they expect coming ahead.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita, and we have with us the management of Adar Housing Finance. We have Mr. Rishi Anand, who's the Managing Director and CEO. Pleasure always speaking with you, sir. Sir, first off, you're well past your IPO, your debut. This is the first full quarter that you've, or rather half quarter you've spent. But full quarter results that we've seen from you in terms of proper quarterly announcements. I want to first talk about growth. 20% plus, your 20,000 crore in terms of AUM, roughly. 20% plus growth into the foreseeable future. Is that something that we can expect from you?
So first thing first, good afternoon, Harsh, and it is likewise always pleasure speaking to you. Yes, we have in the quarter that we're speaking about have clocked about 21% growth on AUM. Our AUM now reaches about 21,800 crores approximately. And we stand by the guidance that we've been giving, AUM growth of anywhere between 22 to 23%, and a disbursement growth of about 18 to 20% is what we stand by. And things look bullish, things look good.
Got it. Sir, with regard to your average loan size, currently at around 10 lakh rupees, do you believe that this will change in any way materially going forward? Are you going more into tier 1? Are you competing in cities, or are you sticking with what your forte is?
So Harsh, two things to it. One is, yes, we are sticking to what our core competence is. We still cater to EWS LIG segment where the requirement of loan or the size of the loan required is lower. Having said that, when we talk about 10 lakh average ticket size, it is on the AUM on the book. If you look at the incremental ticket size, over the past, I would say 5-7 years, the cost of construction has gone up. The incremental ticket size for me on home loan stands at about 12 lakh rupees, and loan against property, which is micro loan against property, stands at about 8 lakhs. So yes, we have seen slight, I would say, movement northwards on the average ticket size, which is primarily to do with the cost of construction going up.
Got it. And so, if I can ask, your spreads have been fairly solid. Do you expect the 6% kind of spread to hold, or do you expect some bit of expansion potential from here?
So I would not say expansion potential, Harsh. We've been in the range of about 6%, which is also to do with, so basically 2-3 components to it. The COF and the yields, the incremental yields play a very important role. But if you look at the way the last year has gone, the complete last year, we have done raise in the RPLRs a couple of times, which has led to the healthy spreads that you're looking at. As a guidance, we've always been saying that a spread of 5.5, 5.7 to 5.8 is where the management is very, very confident and comfortable.
Sure, but you've been doing much more than that. That's where I'm coming from, as to try and gauge as to whether you can hold 6, but it doesn't seem likely. You believe cost of funds will inch higher, or do you believe yields are going to come off for you?
No, so that's what I was trying to say, Harsh. Why is it looking at 6 is because of the RPLR increase that we did 3 times in the last financial year, starting from April onwards. So 25 bips, 25 bips, 75 bips and 25 bips. That has taken your spreads higher to about 6%. But anywhere between 5.7, 5.8 is a comfortable spread, and we would stand by it. Yes, our endeavor definitely will be to sustain the business model at 6%. But if I look at, if the question is flipped the other way around, is where will the competition, etc., impact our spreads? I would say no. But anywhere between the number that I indicated, 5.7 upward, is comfortable.
Got it. So let me change my question a bit. What do you believe will bring spreads down towards 5.7? What are those factors?
So there is nothing that is going to affect this the spreads downward. My incremental spreads today, if I were to look at one deal today, I would typically will be doing it about 5.7, 5.8%. And there is nothing, when typically what will bring your spreads down? Competition brings your spreads down. You keep operating in a particular geography will push your incremental yields down. As a strategy, Adar has adopted a strategy of expansion. Today, as we speak, we are coincidentally we've launched our 21st state in the quarter that we're speaking about, which is Himachal Pradesh. We are now 535 branches plus, and expanding and going, I would say, the strategy of deeper impact. We are going deeper into 5 states. So the moment you start going deeper, the intensity of competition goes down. So you'll have to maintain. That's what we try, and the endeavor is to maintain a perfect balance between tier 1, tier 2, and the rest of the country. So I don't foresee foresee any downward trend on my incremental yields or a substantial increase in my COF, which is going to affect my spreads. COF, yes, you've seen, I would say approximately about 20-25 bips increase in COF. But as I indicated, we are today at about 6%. So even at 20 bips increase in my COF brings my spreads to about 5.8%. So I'm still comfortable.
And what happens if rates come off? Because, of course, we had commentary coming in today. The suggestion still seems to be, at least the commentary seems to be slightly hawkish. But what if that were to start to reverse, say latter half this year, early next year? What happens to your numbers?
No, so you're referring to the cost of fund going down?
Yes, please. So if the repo were to go down, say 25 bips.
So the way it happens in our industry and at Adar is today about 80% of my portfolio is floating in nature, which effectively means that if my cost of fund is going down, Harsh, I will have to pass it on to the consumer. So let's say at 25 bip going down, I will pass on 25 bips to the consumer.
But is there a lag to it?
So there will typically be a couple of months of lag, which is implementation lag. So that's how it operates.
Got it. I want to try and switch focus on geography. You spoke about it. You're in 21 states now. How quickly do you ramp up?
So from a state perspective, Harsh, if you remember last time we spoke, we were in 20 states, and I indicated that there are no more states to expand. We found opportunity in Himachal, and we said, okay, Himachal is one state we should explore. We launched one branch, and we will definitely look at more opportunities in Himachal. Having said that, I don't think we have any more state to expand, and that's where the concept of deeper impact comes into play. In phase 1, we've identified 5 states like Rajasthan, Maharashtra, Andhra Pradesh, Telangana, Uttar Pradesh, and so on and so forth, where we have already started going deep. And when we say deep, I'm not referring to rural locations at all. I'm referring to smaller talukas and smaller districts. We've already launched about 150 such branches, and And as we move ahead in years to come, 75, the way we look at our business, 75 new branches year on year, which will be a combination of tier 1, tier 2, approximately about 20 branches in tier 1, tier 2, and the balance branches in the deeper impact strategy.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Asia back on the Lal Street. Nifty above 24,300 while the Sensex jumps almost 800 points. Color green spread across the sectors. Media, realty and IT lead the gains. Auto major Eicher trades 5% higher after reporting its June quarter numbers. The company's profits rose 20%, beating street estimates. And India's biggest IPO in 2 years, Ola Electric gains almost 20% after a muted debut on the bourses. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's take a quick look at where the markets are at first. While we're off the day's highs, we continue to perform well in today's day of trade. Both the Nifty 50 and the Sensex are up and in the green by almost 1%. While the Nifty 50 is up by over 200 points, the Sensex is up by 750 points or thereabout. Let's also take a quick look at some of the top performers in the Nifty 50 to see what's pulling up the index. It's RIL in the lead with HDFC Bank, ICICI Bank and Infosys all contributing to the gains that we're seeing on the Nifty 50 today. What's not performing well is Asian Paints, HDFC Life, Indusand Bank and a few other names, but barely making, barely managing to move the needle there. So it is definitely a day where the bulls appear to be in charge. Let's also take a quick look at the sectoral indices, and there again, it's a similar story we're seeing play out with most sectors, all sectors nearly in the green, with auto and media along with realty and IT that are leading with gains of over 1%. Auto and media, in fact, both up by 1.7%, whereas realty and IT up by over about 1.5%. Let's also take a quick look at the broader markets, those performing well as well. The Nifty Mid Cap 150 is up by almost about 1%. It's up by 0.8% actually, whereas the Nifty Small Cap 250 is up by about 0.65%. So it's a day where there's not too much to complain. Let's take a quick look at some of the top performers in the Nifty Mid Cap 150. It's Macrotech, Oil India, CG Power, Metro Brands, some of the names that are in the lead, clocking gains of almost about 5% on the. Let's also take a quick look at the top story of the day. AMFI has come out with its July data and SIP inflows have hit all-time highs once again at 23,322 crore rupees. My colleague Alex joins us with more details. Alex?
Well, the big number to focus on, of course, is the SIP inflow number, once again hitting a record high in the month of July. 23,300 or thereabouts is the number. And it's interesting to note that the SIP gross inflow number has hit an all-time high every month since July of 2023. And that is a testament to the tenacity and the interest of the Indian investor. A few other numbers stand out here, and there is a significant inflow into mutual funds in the month of July. This is to the tune of about 1.9 lakh crore rupees. Of course, do remember that this is the start of a new quarter, and as a result of that, you have a significant inflow in the form of fixed income mutual fund schemes, and that stood at about 1.2 lakh crore rupees. The more interesting stories are emerging in the actively managed equity mutual fund space, where once again you have a substantial inflow to the extent of about 37,100 crore rupees, a bulk of them once again coming in the form of inflows into sectoral and thematic funds. After having received 40,000 crore rupees or thereabouts in the month of May and June cumulatively, once again in the month of July, it's received inflows of 18,386 crore rupees, and that has taken it to the largest category in the actively managed equity mutual fund space. And the assets under management stand at 4.21 lakh crore rupees as of the end of July. You have inflows into small cap as well as mid cap mutual fund schemes, and also some inflows into large cap mutual fund schemes. But interestingly, you're also seeing inflows of over 8,000 crore rupees into index funds. All told, the mutual fund sector as a whole will be happy with the inflows, and well, another great month for the sector as a whole.
Absolutely. Another great month with encouraging numbers. But with that, let's move on to some stock-specific action. Now, one of the stocks that's buzzing in trade is, of course, Eicher Motors. It is the top performer on the Nifty 50 and is up in the green by almost about 6% currently. That's on the back of its Q1 earnings. Profit has risen 20%, and that's better than was expected. My colleague Puneet joins us with more details on that stock. Puneet?
Well, thanks for that. So definitely, very positive surprise from Eicher Motors. There was expectation of roughly around 10 to 12% growth in profitability, but as you rightly said, it's gone up to almost 20% in this particular quarter. Now, this is on the back of, despite volume just, falling by roughly 1%, the average selling prices of the bikes has gone up by roughly 9% in this particular quarter, and that's what's leading the profitability for the company. They have mentioned that, the bikes above 350cc segment, which is the most profitable segment, has grown by 29% compared to just 4% for bikes around the 350cc range, which is the Bullet and the Classic as well. Apart from that, what's interesting is that brokerages have come out with, their ratings on the stock, and most have a sell rating or a hold rating on the company. We just picked out a couple of them. Citi has one of the first ones, is the only one with seeing a lot of upside on the company, 14% upside from the current levels. They have retained their buy with a target price of 5,250 rupees. Now, this is lower from 5,300 previously, but they are positive on the stock given the outlook. But do know that they have also trimmed their earnings estimate for this particular year because of volumes not being very strong in the first quarter, and they've also cut volumes by roughly 4 to 6% for this year. The bearish sentiment has continued with someone like an MK as well as Motilal Oswal. Now, MK has a target price of 3,750, which is a downside from roughly around 18 to 20% from the current levels. They also mentioned that the planned product interventions by the company in the Gorilla as well as the Bullet was really strong, but going forward, the recovery will be gradual, and only expect 5 to 6% volume growth, and the same is echoed by Motilal Oswal as well. They are seeing a downside of roughly 15% from the current levels, and they've also cut their volume target by roughly 5%. So overall, positive result is driving the stock price performance, but brokerages are slightly negative on the stock. Back to you.
All right, Puneet, do stay on with us. We cannot be talking about the auto space today without talking, of course, about the newly listed Ola Electric. It's buzzing in trade. It's logged in a circuit. Give us more details on that.
Well, definitely, it started a very subdued manner on the trade, just, around the issue price of 76 rupees per share. But post that, has seen a very sharp run up, which might have seen a lot of buyer interest come in as well. Now, what we thought was we just looked at what works for the company and what doesn't. And, just looking at, the company being one of the first pure play EV companies to, list on the bourses. Now, the others such as TVS as well as Bajaj are still investing in the petrol and the diesel variants. So a pure play company to invest in something like in, the EV space going forward is one of the strong positives for the company. Now, the current penetration of EV scooters and two-wheelers in India is roughly 5.4%. That is expected to go to roughly 41% according to HDFC Securities, and Ola could be one of the biggest beneficiaries. Now, they already have a 35% market share in the market currently, and this is also expected to sustain as well as grow going forward as well. The third key positive could be, they're building a gigafactory, and they've attracted very strong talent that's, very different from what they did in Ola Cabs, which is another group company. Now, for the gigafactory specifically, it's headed by Young Sung Park, who is a South Korean veteran in the battery space. He was with LG Electronics for roughly 36 years, and he's, handled their plants in China as well as South Korea as well. And Ola Electric has, employed him over the last couple of years. He's the highest paid person in the company, even more than Bhavish Agarwal. So that's one of the testaments of how strong of a personality he is in the battery space. They have 3 in-house, R&D centers in the US, UK, as well as India. And, the interesting part is roughly 80% of the components across their 3 models of the S1 Pro, the Air, are the same. So, they are building a platform and will launching more vehicles, which is similar to a strategy what the other listed two-wheeler makers like TVS as well as Royal Enfield do. Finally, they have 2 PLI benefits, the only company in India to have for, the auto PLI as well as the cell PLI. But one thing which I need to highlight is, of course, the valuations currently trading at roughly EV to sales of roughly 5 times. Now, that's on par with guys like TVS as well as Bajaj. But it's not profitable at all. It has roughly 1,500 crores of losses in the previous fiscal year. That could be a key negative going forward. EV scheme has also reduced subsidies by 50%. And, the EV bike segment that the company wants to enter in could be one of the challenges to face in the newest segment. And, we've seen the market is very nascent. So overall, that could be one of the negatives. But, speaking to NDTV Profit this morning, Mr. Bhavesh Agarwal, the CMD, he did address the profitability part as well as the quantum of, how he sees the market. Listen in what he had to say.
We aim to build, it's an interesting thing. We're building a sustainability-focused company to build a sustainable environment, and we want to build this company sustainably, which means we want to build a profitable growth story. We're not there yet. If you see our last 2 years of financials, which are in the prospectus, FY23 to 24, revenue went up 90%. EBITDA margins improved from negative 43% to negative 19%, a 24-point improvement in just 1 year. This journey, as we continue to improve volumes and hence revenue, our cost doesn't go up in a manufacturing business. So the operating leverage drives better margins. And secondly, the strategy of vertical integration with our cell coming into our products next year. Cell is the costliest part of an EV. So as the cell we start manufacturing in-house in India, save the margins that global suppliers take, save the duties, that will further drive gross margins and hence EBITDA. So this is the roadmap. I can't share numbers today, but soon we'll be publishing our Q1 results, and I hope investors will take a look.
Right, and another stock that's in focus today is ABB. That's also on the back of its numbers. It's currently up by almost about 1%. For more details on that stock, I'm joined by my colleague Anushi. Anushi, the stock again appears to has seen better results than was being expected. Tell us more about it.
Well, the outlook continues to remain strong for ABB over here as per the conference call which happened. But before we go into that, let's just discuss the numbers that the company came out for its Q2 CY24 performance. Now, looking at the revenue growth over here, a 12.8% of an increase that we are looking in the revenue, while EBITDA was about 55.7% up. Even if you look at the EBITDA margins, that were about at 19% as compared to 13.88%. So the company does say that the extra margin uptick that we are looking at is on the back of the revenue mix of a favorable revenue mix on the higher margin side, and along with higher order execution as well. Net profit as a result has seen about a 50% growth. Also, other point to focus on the margins is the raw materials cost going down by about 4.7%, while the total operating expenses as a contributor to revenue came down to 80.8% as compared to 86.1%. In other key highlights also, if you look at the orders, well, if you in the H1, if you look the overall period, there has been a 13% of an uptick in orders. But if you just look at the coming this quarter in particular, a 5% uptick in 5% decline in orders that we are looking at. This was due to the base cycle orders, but the company does expect this to also pick up going forward. Order backlog stood at about 9,500 crore as compared to 7,700 crore. Now coming to the Concor highlights over here, it sees large orders coming in from emerging sectors. PAT, as explained, expanded due to the favorable revenue mix. Export orders were about 39% up, and the company did say that in fact in revenue also it expected 200 crore more revenue, but on account of orders it showed a less 200 crore of revenue. In order backlog, if you look at 40 to 45% of orders remain in the long cycle side, while the balance are in the short cycle side. Now, an important point to raise in ABB is its valuations. If you look at the trailing PE as well, 139x of valuation, PE valuation, while its 3-year average has been about 108x. And if we go forward to the overall CY24 PE also, that stands at about 105x. So it is on the premium side. Despite the kind of premium valuations that we are looking at, the stock has performed. In fact, there was an interesting note from UBS as well, wherein it did mention that wherever there has been an earning upgrade for the company, it has supported those premium valuations also that we look at. So these are a couple of factors that we have seen from the Concor, strong management outlook for the business going forward as well, and strong numbers in focus for today.
For that, Anushri, and continuing with stock-specific action, Biocon is also in focus. In fact, the stock is currently under a tad bit of pressure. It's down by about 1% as we speak after it's come up with its Q1 results, and revenue has missed estimates. Earlier, we spoke to Peter Baines, Group CEO of Biocon, who tells us about the upcoming product launches. Listen in.
All businesses driven by the factors that I've described, shift in headwinds to tailwinds in Syngene, new product launches in the generic business, and of course, liraglutide, the outstanding opportunity there. And in the biosimilars business, continued traction building on the 11% comparable growth that we've seen, and then moving into fiscal 26, where we're eagerly anticipating new product introductions.
And from stock-specific to sector-specific, IT companies in the engineering, research and development sector are likely to see a little bit of a dip in growth. This comes after they've witnessed a revenue decline in the first quarter results. We're joined by my colleague Hari Priya for more about this. Hari Priya, what are the reasons for the expectations of a slowdown?
IT companies in the engineering, research and development sector, after a year of good growth, are likely to see a dip in growth momentum in fiscal year 24-25. 4 of the 7 ER&D companies recorded sequential revenue decline in first quarter. Companies such as Cyient and Tata Elxsi in their commentary even flagged issues and concerns. The sector's growth rate was at 15 to 20% last year, and now it is expected to decline to 8 to 10%. These companies are facing headwinds due to seasonality factors, client-specific issues, and effect of slowdown finally catching up. Some verticals like telecom, mobility and communications are seeing pressure, with new product developments being stalled. This is making growth harder to come by. With more GCCs coming up and the larger peers also strengthening their ER&D capabilities, the competitive landscape is also getting tough for these companies. However, these challenges are expected to persist only in the short to medium term, and growth is likely to come back in the long term.
And with that, it's time to slip into a short break, but we leave you with some important market opinion. We spoke to Mark Mobius earlier, and here's what he had to say about global markets. We'll be right back.
Well, the yen carry trade was sort of the trigger to have a correction in global markets, particularly the US market. But you must remember the background to this is that there's a great deal of uncertainty in the world, and particularly in the US, as a result of the upcoming election. As you know, the difference in policies between the Democratic and Republican candidates are quite wide. The differences are very wide. So that's one of the keys to uncertainty, because nobody knows how this will turn out at the end of the day, and it will have global implications. But in addition to that, there's the uncertainty about the war in Ukraine, the situation with China and Taiwan, and the situation in Israel and the Middle East. So you have all of these certain uncertainties piling up in the minds of people and investors around the world, and that creates volatility. So when you have a trigger like what you've seen in Japan with the yen carry trade, that carries over into the market generally. However, if you look at the correction in the US market, it is not that big. In other words, we're not into a big bear market at this stage of the game, at least. And if you look at India, India has performed better than the US market. And that says a lot about the incredible growth rate of India and the dynamic economy that India now has.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Market IQ on NDTV Profit. Yesterday marked yet another pivotal day in India's Olympic campaign as Neeraj Chopra fell short of defending his gold medal in the men's javelin finals. Neeraj's 89.45-meter throw would have been more than enough to secure him a gold in the Tokyo Olympics, but not in Paris, as he ended second to Pakistan's Arshad Nadeem and could only secure a silver medal. Nadeem pulled a rabbit out of the hat with a sensational 92.97-meter throw and thereby beating the Olympic record. Nadeem's successive marked the first track and field gold for Pakistan, while Neeraj Chopra can hold his head high as he has now scored a 2-1 win over Spain in the bronze medal match and gave a befitting farewell to veteran goalkeeper P.R. Srijesh. India, in fact, won successive medals in hockey for the first time since Munich in 1972, played 52 years ago. India will have an opportunity to secure another bronze today as 21-year-old wrestler Aman Sehrawat takes on Darian Cruz in the men's freestyle 57 kg category. Sehrawat had reached the semis yesterday but was comfortably beaten by top seed Ray Higuchi. But moving back to the golden boy of India, NDTV caught up with Neeraj Chopra exclusively last night. Listen into that conversation.
बिल्कुल थ्रो टोक्यो से अच्छी है और कंपटीशन भी बहुत तगड़ा था। अर्शद ने बहुत अच्छी थ्रो लगाई है, लेकिन वही है कि अब काफ़ी टाइम से आप सभी को पता है कि मुझे वो इंजरी की थोड़ी प्रॉब्लम चल रही है, तो उस पर थोड़ा सोचना पड़ेगा, उस पर काम करना पड़ेगा और अभी टाइम है एक डिसीजन लेने का, क्योंकि कंसिस्टेंसी ठीक है 88-89 तक, लेकिन आगे बढ़ना है अभी, तो उसके लिए सब ठीक करेंगे और फिर पर अच्छा फील होता है जब भी अपनी कंट्री के लिए जीतते हैं। और मुझे पता है सभी की उम्मीद थी, जो सभी ने सोचा था वो तो नहीं आ पाया, लेकिन मेडल है और अब आगे और मेहनत करेंगे और अच्छा करेंगे।
दूसरा सवाल कि 4 साल पहले भी मैंने आपका पहला इंटरव्यू जो किया था तो आपने बोला था कि जीतना अलग बात है, मैं उसको कंटिन्यू करना चाहता हूँ अगले में। ये विजन कैसे आया है पूरा, न सिर्फ आपका आया है और एशिया पावर हाउस आपने बना के दिखा दिया आपने नदीम।
बिल्कुल वही बात है जी, जो टोक्यो के बाद अपनी बात हुई थी कि अब क्या करना आगे, और मेरा वही जवाब था कि अभी तो शुरुआत ही हुई है, अभी और मेहनत करनी है। उसके बाद फिर 2 वर्ल्ड चैम्पियनशिप में मेडल हुए, डायमंड लीग और एशियन गेम्स, अभी आज ओलंपिक्स, तो जर्नी काफ़ी अच्छी रही है। और जो भी सोचा था स्टार्टिंग में जब स्टार्ट किया था तो इतना नहीं सोचा था, और जितना आज मिला है वो भी बहुत ही अच्छा है। और मैं थैंक यू करता हूँ अपना, मतलब जो भी मुझे सपोर्ट मिली हमेशा टॉप्स की तरफ से, साई फेडरेशन, मतलब बहुत इम्प्रूवमेंट हुई है। जब स्टार्टिंग में मैं पटियाला नेशनल कैंप में गया था तब से लेके अभी तक काफ़ी चीज़ों पे काम हुआ है, और उसी की वजह से और एथलीट भी जैसे जेना ने बहुत अच्छा किया, और भी अपने अच्छे एथलीट्स आए तो और आगे फ्यूचर में और ज़्यादा आएंगे, तो काफ़ी चीज़ें हैं जो अच्छी हुई हैं और शायद इस मेडल के साथ बाद और अच्छा होगा।
मुझे 3 सवाल की ही इजाज़त है। तीसरा और आखिरी सवाल, आपकी मदर से का मैं बाइट देख रहा था, वो भी कह रही थी मतलब पूरा गांव खुश है जी। आपने पहले भी एक इंस्पायर किया है पूरे लॉट को, तो आप NDTV के दर्शकों को जैवलिन खेलने के लिए, हॉकी खेलने के लिए आप बाकी लोगों को इंस्पायर करते हैं, एक मैसेज देते हैं।
बस यही मैसेज है जी, इस बार आप सभी की बहुत अच्छी सपोर्ट रही और सभी खिलाड़ियों ने बहुत ही अच्छा किया है। बिल्कुल कई बार हम एक्सपेक्ट कुछ करते हैं वो शायद नहीं हो पाता, और ऐसा सिर्फ हमारे साथ नहीं, वर्ल्ड के टॉप एथलीट के साथ भी हुआ है कि बहुत अच्छे एथलीट है लेकिन वो शायद फाइनल में भी नहीं जा पाए और पोडियम फिनिश नहीं कर पाए। तो ये स्पोर्ट्स का हिस्सा है। बिल्कुल मुझसे भी हमेशा गोल्ड की उम्मीद रहती है, तो हमेशा विश्वास जो था उसको बरकरार कर, मतलब उसको पूरा करते आए थे। आज शायद अपना दिन नहीं था, भगवान ने हमेशा
सिल्वर
बहुत ही अच्छा किया और जो भी मिला आज उससे बहुत खुश हैं और भगवान यही करे कि अपने देश के लिए ऐसे जीतते रहें।
And that's all we have on the show for now. Do stay tuned to NDTV Profit. We have a lot more coming up. Thank you for watching.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This show gets you insight onto everything mutual fund related. And it is a good month for the mutual fund industry. In fact, it's been a good couple of years, and that culminates in the month of July, where you've had once again a new record high for the gross inflows through systematic investment plans. That has stood at the month at a number of 23,300 crore or thereabouts. And if you actually go past last year, the start of this year, all the way to July of last year, every single month since July of 2023, we've had a fresh record high with regard to the gross inflows. All told, the numbers actually look very healthy. If you look at the gross inflows into, or rather the net inflows into actively managed equity mutual fund schemes for the month as a whole, it's come in at 37,000 crore rupees. And despite the slight decline, it's quite a significant number nonetheless. Last month was 40,000 crore rupees because the inflows into thematic and sectoral funds was even higher than it was in the month of July. And in the month of July, that number stood at 18,386 crore rupees. As a result of which, the assets under management in sectoral and thematic mutual fund schemes, which number 174 and is by far and away the largest category in terms of the number of schemes, it is also the largest in terms of assets under management, which at the end of July stood at 4.21 lakh crore rupees. Till the month of June, the flexi cap category was the largest, and as of July, that category has 4.2 lakh crore rupees. It saw inflows of about 3,000 crore rupees. New fund offers continue to account for a large bulk of the inflows, and that stood at 13,735 crore rupees into actively managed equity mutual fund schemes. There were 3 new schemes that were introduced. Now, we are going to talk about this and a lot more on today's program. In fact, today we are focusing on a highly effective investment strategy which has to do with the withdrawal. You've heard of SIPs, systematic investment plans. They allow you to invest into mutual fund schemes. But there's also a systematic way of withdrawing money, and that is in the way of a systematic withdrawal plan. It turns out that this is actually a very tax efficient manner of pulling money out, particularly if you are a retiree. We'll talk about why that is and a lot more. And joining me to talk about all of this is Udayan Ade, who is the founder of Udayan on Money, as well as Shalini Sekhri, who is the Chief Growth Officer at Renaissance Investment Managers. Thank you so much to the both of you for taking the time. I'm first very curious what you make of the latest AMFI numbers, and hopefully you've got a sense of what I was saying on the screen. Of course, I wouldn't expect you to go into the absolute details of it, but just the fact, Shalini, that the sectoral and thematic category is now the largest in the actively managed equity mutual fund space. It has been growing very substantially, but what does that tell you about the nature of the investments that are coming through in the equity market and into mutual funds?
Hi, Alex. Great to be here as always. So I think we're seeing this huge trend of investors looking to increasingly diversify their portfolio. Most investors today have, all the basic categories, and there is so much news flow and there is so much information available to each of us in terms of the themes which are doing extremely well. So as you know, the buzzwords have been around, defense, consumer. There have been a whole lot of these themes which have been talked about so much and which have, caught the fancy of the retail investor. And that is translating into flows and, of course, aided by a lot of interesting NFOs as well, which we have seen in the market. So clearly, I think it's a way of investors to put bigger bets on themes, which clearly we're all seeing in our day-to-day lives are going to be decadal themes. These are not 3-month, 6-month themes that are playing out. Many of these themes we intuitively know, whether it's electric vehicles and a whole bunch of them, are here to stay. So I think as we learn more and more, as our investors get more and more sophisticated, I think somewhere there are a lot of calls being taken that in addition to diversified portfolios, should we also look at adding a little bit of extra firepower, through thematics. And I think that's what we are seeing playing out here.
Okay. Udayan, what's the kind of advice that you generally give people on sectoral and thematic funds? Because, of course, in the recent past, we've seen thematic funds being offered which allow for a wider basket of mutual fund, a basket of stocks to invest from. So the pool available is larger, that sectoral funds tend to be very narrow in nature. Generally, when you tell people about sectoral and thematic funds, what do you tell them?
Yeah. So first of all, thank you so much, Alex, and good afternoon to everyone. Shalini opened a new office in Mumbai, so congratulations to you as well on that. And with your question, Alex, I think, so what Shalini mentioned, right? If you can add a slightly, if you can add a small allocation using thematic or sectoral funds to add that small firepower to the portfolio, that could be a good idea. But what I'm seeing more and more when I'm talking to people, when I'm guiding them on mutual funds, when I'm having conversations around them, is that people want to invest a large part of their entire SIP investment or their entire portfolio into thematic or sectoral funds. And I think that can be a slightly tricky proposition, because then you're too concentrated in one fund, and then your risk to that one fund, for various reasons, it may fluctuate, and then your risk in that portfolio goes up. So the general advice, the thumb rule, is to have, if you're investing in thematic funds, sectoral funds, limit your investment in them to about 10 to 20% of your portfolio. And that would just ensure that you get that small injection of growth that if that sector does well, your portfolio would benefit from. But at the same time, if that sector does not perform well, is stagnant for a few years, then it doesn't affect your overall growth that you're keeping in mind.
Yeah, that's a fair point. All right, let's jump to the main topic of conversation today, which is SWPs, or systematic withdrawal plans. It's not something that's very popularly known. SIPs now is a byword, even when you talk about mutual funds. Often people confuse the two. Are you doing SIPs? Are you investing in SIPs? But they actually are talking about mutual funds. But talk about how this can be used strategically, Shalini. Why is this such a powerful tool?
Right. So I think the same benefits which accrue from doing an SIP in the same way works exactly the reverse, but with the same set of advantages when you're actually looking to create an alternate income source, either, like you said, for retirees. As they grow older, their regular source of income stops, but they have a certain lifestyle and they want to continue to be able to fund that. You could also have situations where people need more than what they're currently getting out of, say, their regular salary, and they also need the secondary source of income. So that's where the pool of capital that they've built up through disciplined investing over the years, once they've built a corpus, they can then specify a fixed amount, just as you do in SIP, but not to invest, to withdraw from their existing corpus. This allows them to have a fixed amount which will come to them at whatever periodicity they decide. So it could be monthly, quarterly, or annual, where, let's assume that this is monthly, right? So there is a particular NAV of a scheme that they have chosen from which to withdraw. At that NAV, to ensure, let's assume they want 25,000 rupees a month, the NAV would then result in how many units do they need to redeem to be able to get this money out. So irrespective of where the markets are, where the NAV of their portfolio is, they can rest comfortably that this 25,000 rupees will come to them every month, and the number of units required to be redeemed will be redeemed to create this cash flow. There will be times where markets are doing well, fewer units get redeemed. There will be times where markets are not doing as well, and more number of units would need to get redeemed. But this would not in any way impact their lifestyle, because they would continue to get this 25,000 rupees every month. So that gives a great cushion to investors to be able to manage their monthly flows. And this is particularly critical for retirees. So that's really the mechanism of SWP.
Do you have anything to add to this, Udayan, in terms of the alternative? Because a lot of people, when they are in that bracket, when they're in that retired bracket and they're looking for regular income, oftentimes they look towards interest income or they look towards dividend income. Why is this something that should be considered as opposed to that?
So I think having some amount of equity exposure, even for a retiree, is extremely, extremely vital. Because if you think about it, the kind of inflation numbers that we look at, that the government reports, those are for day-to-day items. But for most people who are spending more than 50,000-60,000 rupees a month, the inflation tends to be 8 to 10%. So now, if that is the case, your investment needs to generate much higher returns than that 8%. And the only way to do that is by adding some equity to your portfolio, which provides that growth injection. And one of the most popular ways to add equity exposure to a retiree's portfolio is by using balanced funds or hybrid funds, which invest both in stocks and bonds together. So your overall risk kind of goes down, but at the same time, you get that equity exposure. And by just having this in place, it becomes extremely vital to make sure the money lasts. Because think about it from the retiree's perspective, right? Money has stopped coming in, or it's coming in at a smaller quantum now. So they need that money to last for 20 to 30 years at least. And at the same time, just to give you an idea as to the inflation that would kind of impact future withdrawals, right? So for example, if today you are withdrawing 12 lakh rupees every year, so that is 1 lakh rupees per month, then even at an 8% annual inflation, the withdrawal amount would double in just 8 to 10 years. So instead of withdrawing 12 lakhs, you have to withdraw 24 lakhs 8 to 10 years later to be able to buy the same level of things. So inflation has to be factored in. You have to beat inflation, and the only way to do that is to have that equity exposure in your portfolio.
Okay. What is the ideal amount to look at, Shalini? Is there an ideal amount? Because if you're talking about a pool of resources, assuming we're talking about an equity mutual fund basket or portfolio, you are withdrawing from that, but you want the capital to grow as well. Otherwise, you're going to impact the compounding of that basket. So is there an ideal to look at?
The broad thumb of rule, Alex, would be that the rate of withdrawal should be less than the rate of return in your portfolio, right? So that way the capital does not reduce. This is particularly important when nowadays, people are living so long, you don't really know how long your retirement's going to last. And as we discussed when we spoke last time, people do want to leave a lot of that capital behind for their children as well in terms of legacy. So if you want your capital to stay invested, irrespective of type of scheme, and grow, it's very critical, firstly, that you build up some decent sized corpus before you start withdrawing. If you are a conservative investor where, say, a lot of your portfolio is in either debt or shorter term funds, a safe thumb rule would be maybe withdrawing about 6-7% every year. If that portfolio is more like a equity oriented or a mixed kind of a portfolio, probably 8 to 10% a year is something that one could look at, because that's expected to be the rate of return from the portfolio. So if you, for example, if I had looked at the last 10-year data, if you had withdrawn, say, about 8% from an equity portfolio, of course, you would have got that income, but your portfolio would have still doubled in those 10 years because your capital is staying in and continuing to grow, and you're not pulling out the entire gain. But that is more anecdotal because equity markets have done so well. You could also see the other cycle. So I would say for an equity portfolio, probably somewhere an 8% withdrawal should be good.
Okay, all right. The other aspect to factor in is the tax aspect, and of course LTCG rate has gone up to 12.5% from 10%, and the first 1.25 lakh of course is non-taxable. But Udayan, the factor of first in, first out is something that comes into play for systematic withdrawal plans as well. Can you explain the tax aspect of using SWPs?
Absolutely. So generally, when you're investing money in, say, an equity fund or a balanced fund, which, as I said, invests both in stocks and bonds, the usual thumb rule, which may not be applicable again in every situation, is to ideally not withdraw from it for the first 1 or 2 years. So you let that money grow a bit. But now let's say you're in a situation where you need that money from the first month itself. Then in that case, you are basically left with no alternative but to start withdrawing. And at that stage, you will be faced with a short-term capital gains tax of 20%. And then if you hold it for more than 1 year, you get 1.25 lakhs tax-free. And all the gains that you're withdrawing after that are taxed at 12.5%. Now, the interesting part here is, if let's say someone is instead investing in a fixed deposit, then that entire interest that they get is taxed at their income tax level. So if that is high, you could be taxed as high as 32%. Whereas with an SWP, through an equity-heavy portfolio, you are getting taxed at 12.5%. And even that 20% reduction in taxation can have a significant impact over the long run, because as I said, right, you're not planning for the next 5-10 years, you're planning for the next 25-30 years. And one thing that I think a lot of people are discounting is that a lot of people who are in their 50s and 60s today are going to live for much, much, much longer. So you don't want to be in a situation where you're 85 years old and you don't have any money left at all. So purely from that perspective, again, having SWPs, that's another added benefit. The taxation becomes favorable for an equity-heavy portfolio.
Yeah, absolutely. Thanks so much for that view. In fact, we have to slip into a very quick break. We've got a few viewer queries that we will take after that. And by the way, if you've got questions for us, you see that number at the bottom of your screen. You can send them to us on that number. Make sure you tell us your name as well as where you're tuning in from, and we will take it up in the coming episodes. Do stay tuned. We'll be back before you know it.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching the Mutual Fund Show, and this is where I want to take some of the queries that have come through. And you see the number that is on the screen right now. If you've got specific questions on mutual funds, then I'd encourage you to write in, because we've got a few that have come through that are very interesting. The first one is from Raj, and he's saying that he wants to invest 1 lakh per month. The objective is to build a corpus which he will need in the next 3 to 4 years. But the purpose is very interesting. He wants to use this for the registration of a flat as well as for the interior expense that he will have. So essentially, he wants to make a down payment for this. Shalini, it's very, very interesting because he's pushing his requirement for buying a house down the line, and he wants to reduce the amount of money that he will have to borrow, and it's a very good financial plan. Now, to that end, I think the objective will be to accumulate as much money as possible so that the amount that he will have to borrow will be less. So how should he go about investing this?
So for this particular investor, the time horizon is very specific because this need in terms of the amount as well as when he would require it cannot be stretched beyond a point. And unfortunately, with pure equity, there could be a time that exactly when he requires the money, it's possible that markets have hit a very bad phase. And in usual terms, one would continue to stay invested for markets to recover. But unfortunately, this investor would not have that luxury. So my recommendation, and these are personal views, of course, is that the allocation should go to safer assets. And of course, I'm saying that these could be hybrid in nature as well. Some of the categories that come to mind are, equity savings schemes, potentially hybrid conservative funds. On the debt side, it could be a medium-term debt fund, which has a 3-4 year, duration, residual duration to the portfolio, and could also be arbitrage funds. Now, these are all categories which either have some or low or no element of equity at all. But from that perspective, if you look at even an equity savings fund, which generally would have maybe 30 to 40% equity, the last 1 year in equity has been great. And these schemes have delivered, say, 16% return in a 1 year basis. But if I look at the longer term period, that, goes down to maybe, 8-9% return. So on a 5 year basis, I would say, to expect this category, it would probably give you 10-11%. So if I look at these 3-4 categories that I mentioned, on an average, an investor, if he wants to look at playing it safe, would be able to generate a range of anywhere from, say, 10 to 12% return. Like I said, with equity, if he's hit by a sudden adverse situation, he would not be able to fulfill the specific goal that he's planning for. And just to put some numbers out there, if the investor puts in 1 lakh a month for 4 years, at 8%, he would have approximately 57 lakhs at the end of this period, close to 60 lakhs at a 10% return, and maybe about 62 lakhs at 12%.
Wow.
So if his goal number is higher than that, he may have to go more towards the equity allocation, because clearly if he goes the very safe route where he's getting, say, 6, 7, 8% from hedged or, fixed income strategies, he may not have that magic number that he requires to fulfill the specific goal. So somewhere working backwards, he'll need to figure out how much is it that he needs at the end of the day, and perhaps go slightly up the risk curve.
So I'm glad that you spelled that out. I'm actually very tempted to call Raj just so that he can say, but wait, I'm okay with staying more than 4 years. I don't know if that's the case. So I'm going to take the liberty and say, what if, Udayan, what if he has the ability to say that he can push his goal by another couple of years if the equity markets don't behave the way that he anticipates that they would? Because one would say that the best way to accumulate and grow your capital is through the equity markets. So assume that he's going to put all of his 1 lakh rupees into equities, and he is flexible to say that if something occurs, I can push this down the line. How should he allocate his money?
So in that case, increasing the equity exposure a little makes sense, but again, not having an out and out equity portfolio. Because again, if towards the last 2-3 years, if the markets are not doing well, the portfolio goes down by 20%, he has lower money now available with him. So if you purely look at data, and I think that's where it gets kind of tricky, because statistics can mask everything. But in the Nifty 50, if you have had an SIP for 4 years, you have never lost money since 1999. Now, that doesn't mean Raj should go ahead and invest the entire amount in the Nifty 50 portfolio, but history may not repeat, but it rhymes, as they say. So in this case, I would personally lean towards balanced funds, because it's the fund manager's headache when you're investing in balanced funds, how to tweak the allocation between stocks and bonds, maybe multi-asset funds. Once again, so he gets stocks, bonds, and a little amount of gold and real estate in that particular investment. But I think anything above 6 to 7 years is when you want to start looking at a more equity heavy portfolio. Anything under 7 years, you want to have 30-40% in safer assets, because again, markets are unpredictable.
That's a fair point. And by the way, we spoke about SWPs, or systematic withdrawal plans, earlier on in the session. Systematic transfer plans are another very strong method of allocating your resources. And remember, if you have a specific goal, as you near the goal, perhaps it's a good idea to start STPs from equity into a safer asset class. We'll talk about that on another day. I want to take the next question, which is very interesting. Vikas Gorkha, who's 50 years old, is saying that he missed the opportunity to invest in the new fund offer of Grow EV Fund. What should he do now? Shalini, not necessarily speaking specifically about the Grow EV Fund, but does an investor miss anything really if they miss out on the NFO? It's not like an IPO, is it?
No. So I think that's a common misconception. And I think this is a great sales and marketing tool that the industry, uses to garner a corpus. But, if you think about it, the listing gains concept, which is there when people subscribe to stock IPOs, is something that just does not exist in mutual funds. So I would say this investor has clearly lost nothing. If I were to take an example, had he invested in the NFO at 10 rupees and after 3 years sold his holdings at 15 rupees, he would have made a 50% absolute return. Now, suppose once the NFO reopens as a normal open-ended scheme and he buys, say, a unit at 20 rupees, which is the prevailing NAV, and he sells it after 3 years for 30 rupees, he still made a 50% return. So I think somewhere nothing is really lost. In fact, I believe personally that there is a risk of investing in an NFO because you don't really see any track record of that particular fund manager for that particular strategy basis which to go on. So I always, prefer to invest in something that has a good 3-5 year track record, and you can always buy into it. And a last word of caution, I would say, for unless investors have already fairly large diversified portfolios, sectoral funds again do come with their set of risks in terms of being extremely volatile in case there's something negative happening either from a particular industry perspective, and they could see a lot of volatility and sharp drawdowns in their portfolio. Better to leave it to fund managers unless you know that sector very well. They can decide which is the best sector to be in, or you could put 10-20% in sectoral funds.
Okay, to that end, it's probably the last question we're going to be able to take today. It's from K. Kishore Kumar, and he's 60 years old. He's asking about the HDFC Defence Fund. Honestly, it was something that garnered a lot of interest today, and they shut off lump sum investments very, very quickly. They have in fact shut off fresh SIP flows as well because of the corpus that they have, or rather the pool that they have, and the way that the underlying assets have performed. We've got this viewer, Kishore Kumar, who's investing in SIP of 5,000 rupees in the defense fund. He's asking we should go ahead or should he move it to something else? What do you think?
So once again, if the SIP amount is much larger, and I'll give you a specific example, if the SIP amount is anything less than 40 to 50,000, then investing 5,000 in a sectoral fund may not be the best idea. And the reason for that, once again, is concentrated risk. But if I were to put that down into specific numbers, so 1 out of 4 funds that tends to perform well over a 3-year period is not a good performer for the next 3 years. So generally what happens, so HDFC Defence Fund has gained over 100% in the past 1 year. So naturally, when people want to invest, they'll filter funds based on past performance and they'll invest in the top performing fund. But invariably, once they invest in it, just because everything kind of is cyclical in the market, that fund doesn't perform well and they get in at a high price and now they're at a loss in
Fair
some
point.
cases.
Yeah.
And that's a very specific example, if I have 30 seconds, Alex, is the value category of investing, which is the value style of investing popularized by Warren Buffett, Benjamin Graham. That has been the best performing strategy since 2021, okay? Over 50% returns in several years. But guess what? In 2018 to 2020, that was the worst performing style.
Yeah,
there you
fair
go.
point. That's a fair example and also well answered. Thank you so much, Uday and Shalini, for taking the time for speaking to us on the Mutual Fund Show. And viewers, well, hopefully this conversation has been beneficial to you. If it has, let us know in the comment section, and do stay tuned. Lots more coming up on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices.
afternoon and welcome to Earnings Edge right here on NDTV Profit. We're now putting the spotlight on Orchid Pharma. The stock is up roughly 8% ahead of its Q3 result, and we saw Q1 results being very positive for the company. My colleague Maitri Seth had a chance to catch up with Rajneesh Rotangi, the Chief Executive Officer at the company, who talks about how Orchid Pharma forms a separate division, Orchid AMS, to manufacture drugs combating antimicrobial resistance. Listen to what he had to say.
AMR is one of the biggest issues which all of us are facing, whether it's us as patients or it's hospitals or it's the whole society at large. And so AMR refers to the antimicrobial resistance, which basically means in simple terms that when a bacteria which earlier used to be killed by the antibiotic that we had is no longer getting killed by that antibiotic because it has its own mechanisms of evolving in order to survive and therefore develops resistance to that particular antibiotic. Now, in the overall space of antimicrobials, as you would be aware, in the last several decades, there haven't been too many new molecules which have been getting launched or coming up for commercial success. And the older molecules are getting to be resistant, and they're no longer working on the bacteria and the microorganisms. As a result, there has been a huge issue with patients not getting cured fast enough or increased mortality and morbidity. So that's the space that we want to operate in. And for that, we are launching a division called Orchid AMS, where the AMS stands for Antimicrobial Solutions. And the expectation is that we will be able to do a variety of things compared to many other pharma companies which are doing so, but in a manner where we can actually impact and help hospitals initially and through them the society at large in reducing this challenge of AMR.
Okay, so you just mentioned that about the competitiveness that is there in this segment. So do you have any numbers in your mind with respect to market share? What are you targeting with respect to market share at this point?
Yeah, so I've indicated to you that in 2-3 years' time, we are looking at about 250 to 300 crores business in this. And market share, you can translate that depending on which way you want to take the denominator. The entire antimicrobial market is estimated at close to 25,000 crores, but a lot of it is rural or small towns and in oral tablet forms. You yourself have written today's article, which refers to the challenges of going rural in India. I was going through that article. And that's a segment which we are not able to prioritize right now. So our addressable market is really the injectables, which is consumed in the ICU and the wards and inpatient usage, and not what you and I might consume at home as an oral tablet. So that market is estimated at about 10,000-12,000 crores. And within that also, I guess what we'll be able to reach in terms of our size of our sales team would be about 3,000 crores. Market is where we will be playing and we will be operating. So we are looking at almost therefore a 10% share, 300 crores out of 3,000 crores.
Well, that was Orchid Pharma stock at an intraday of roughly 1,550 rupees today. But let's look at LIC numbers as well. It's been a very strong quarter for the company. Annual premium equivalent has gone up by roughly 21% in this particular quarter compared to last year, while value of new business of VNB has also grown by roughly 24% in this particular quarter as well. Margins at 13.9% also. Let's we caught up with the management of the company with Siddharth Mohanty, the CMD. Let's listen to what he had to say.
You see, if you see the first quarter result, we have shown a AP growth of 21.28% total. And in individual, we have shown 13.41% and in group 34.37%. So this is the AP growth. So that itself indicates whatever strategic initiative we have taken post-listing, particularly in product mix, channel mix, digital intervention, all those are giving results. So that's why we have been able to show good growth rate in first quarter in premium income.
Is there a product mix we are seeing par, non-par, which is coming in, but within individual and group, we are seeing that group is also getting a good growth rate, which is there. Is there a conscious effort to push group insurance as well?
Group insurance is our major share. They contribute major share to our total overall market share. So focus is also on group insurance. But as you told, for product, non-par product share has gone up from 10.2 to last year Q1.
Yeah.
This year 23.94. So that itself shows that our product mix strategy, both group as well as non-par. So we are on right track.
Sir, we saw this big strategic shift happening in non-par towards the end of 2023 calendar year, and that showed in Q3 and Q4 results as well. And in Q1, it's showing up. You recently launched 4 new products which are again non-par in nature. How do you see the non-par portfolio developing and growing?
See, already whatever commitment we gave, actually at that time in the first year of listing, we told we'll grow it from 7.1 to some 15% non-par share.
Yeah.
So it is already 23.94. So my sense is it will go further. In the current year also it will go further, but it will be difficult to give any specific estimate towards figure. But definitely growth will be there and a share of non-par will slowly grow.
Do you see more products coming in non-par in this financial year?
Already we have launched 4 products. You have seen that Yuva Term, Yuva Credit Life, both offline and online also. So in coming days we will also launch some products, both side, not only non-par but also we will also see if there is any scope for par product that also can be thought of.
One of the metrics which the street is looking at, and I'm being a little technical here because VNB margins, which is there. You've been able to grow VNB at a good healthy rate. Your margins are around 13.9%. Year on year, it's a jump. But if you look at Q3, Q4, because the product mix was such in favor of non-par, the margins were much higher there. How do you look at VNB margins going forward? And the sustenance of margin, there's a volatility in the margin as we speak. How do you even out that volatility in VNB margins as we go ahead?
If you see last year Q1, 23 Q1, we had a margin of 13.7. As against that, we have done 13.9, just 20 basis points growth is there. But if you see March figure, March we were 16.8.
Yes.
Because March voluminous business comes towards last quarter, and so that gives a good growth rate both in margin and volume also. So coming days, my sense is the way we are doing our product sale, product mix, so those will definitely give good margin, and objective is to have improvement upon last year's margin, which was 16.8.
Yeah.
So my sense is we'll at least be able, despite all whatever is happening in the environment, so many uncertainties are there, some positive growth around 2% over last year. That is our expectation.
You're looking at 19
around 19 plus.
And what is when you had that vision of taking to beyond 20%?
But that was we told 5 years time.
You're well ahead of that timeline.
Whatever commitment we give, we fulfill much before time.
When do you see that hitting on a consistent basis, 20% every quarter?
20. I think next year we'll be able to achieve that.
And every quarter you will be able to hit 20%.
That is my sense. That is my sense. Depending upon other factors in the environment.
One of the other thing which you've been talking about in the last 2 quarters is the health insurance foray. Where are we on that? You said you are internally working on the details of it. If you can share something on it.
You see, we are already in life and accident, because with life insurance policy we provide accident cover also. So that is there. So we looking to market need. We also propose to be in a health insurance space, and we are exploring opportunity to acquire some stake in some standalone health insurance companies. If you see today, this distribution channel of sales, this health insurance companies, most of my agents, they are selling a health insurance product of standalone health insurance companies. So if LIC is in that space, then definitely there will be no issue for distribution. Ready-made distribution channel is there, and definitely will get good share per LIC.
One of the biggest challenge for any health insurance is a distribution network, and you already have that. What prevents you from looking at it from an organic point of view? It's only the bandwidth and the focus that you need to bring in.
Organic will take time, because when you develop organically, you have to set up everything here. But when there is already one thing is there, so it is like a plug and play. So only my distribution network, they will work, everything is available there with that company. So that will be easier option. So that we are exploring.
So is it going to be a strategic stake in that sense, or a majority stake in that company?
We will have a good stake, so that management control will also be there, but it will be managed professionally, that what we are planning.
You've been one of the biggest investors in the market. If I hear clearly, in the con call you said you made equity profits of 15,500 crores in Q1. How do you see the current market situation? We have all the regulators talking about markets, how there is retail involvement into some segments of the markets which are not supposed to be, and money is getting diverted from other financial products and institutions to speculation. What is your view on that?
We are a bit, you can say, when we invest market, our approach is very practical, pragmatic approach. We do not respond to market hypes. We have our internal thing, internal research team is there, very strong research team. Sometimes we take some contrarian view, which gave result later on. People at that time they question why you invested, 2 years, 3 years hence they appreciate. So our approach is not in terms of what is happening in market and just a quick response to that. Our approach is a consistent approach. And definitely, if you see whatever profit we are making good profit, and there is growth in our equity profit. But if you compare, market has gone up so high, why LIC made so less profit. So from that you can understand that we are very conservative in our approach.
Last financial year, if I'm not wrong, you invested 1.32 lakh crores into the market. Do you expect to invest the same amount or more this year?
That depending upon market situation.
Because
if opportunity is there, definitely there will be some investment depending how market behaves.
You brought in new products, including the ULIP product, which
ULIP products are also going
well, and is growing at a much higher rate.
Triple-digit growth.
Do you see more investments coming in? While profit taking is what LIC does, contrarian view, and it takes it. But investing more into the market this year?
It depends. Obviously, there will be some positive as compared to last year. Positive growth in our equity investment that we expect. But again, depends upon how market behaves.
Sir, the reason I was asking this was that your embedded value, it's been growing every year. We've seen that happening. But your yield on investments, because you have a high exposure to G-Secs and state bonds, which is 60% of your book, yields are coming down. Do you think equity to more than compensate the fall in yields there? In that sense?
You see, if you compare VNB vis-a-vis VNB margin, what you are talking of. So VNB growth 23.66% growth we have shown in Q1. But margin just 20 basis points growth we have shown as against 13.7, 13.9. And my take is, it is product mix and a product benefit. Because of product mix, non-par share has gone up, but product benefit, we have enhanced annuity rates and other benefits in some of the plans. So that's why my sense is it has been somehow margin has grown very little.
Sir, at the time of listing, there were 3 things which was there. One, you will change the product mix. The second one was, that you will be bringing in internal transformation which is there in digital transformation which was there, and the third one was that you're going to guide towards margin which is at par with some of the private players. You're ahead of most of them. Can you give us those internal levers that you're working in? When do we start seeing the results of those internal transformation?
Actually, digital transformation project, that is 18 months project. So already work is going on in full swing, And in Q4 you will see the result. Q4 result will start coming, though total project will take some more time, but Q4 definitely impact of digital transformation will be felt across.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back to Earnings Edge. My guest today is from Astral, Mr. Hiranand Savlani, who is the CFO and ED of the company. Mr. Savlani, thank you very much for joining us on NDTV Profit. My first question to you is, sir, we've seen a little volatility in the raw material prices in this quarter. Can you take us through how you have been navigating that and what kind of impact it had on your margins?
So there was a very high volatility of the polymer in the last quarter. So April was Y-on-Y basis 7-8% minus, and then May was flat compared to last year, maybe 1% minus or so. June, all of a sudden polymer price shoot up very fast. But because of the quarter ending and everyone was sitting with the old inventory, so it was not taken place pass through in the industry. The industry was not able to pass through. Everyone was expecting once quarter will be over, the next quarter onward we will pass on. Then again July, the prices fall back. So there was no practically pass through in the July. But in spite of that, I can say that we were able to deliver 16% volume growth, and the top line growth was almost close to about 8%. And normally, if you see in our industry, Q1 is always overloaded with the PVC sale more than the CPVC. So because of that, also realizations are always under pressure. But in spite of that, we were able to deliver the number as we guided. And our EBITDA margins were also in the range what we have guided, 16 to 18% kind of zone. So that was there in the piping side. Now, as far as the chemical business or adhesive business is concerned, adhesive business also India operation has done excellent work. So almost 14% growth was there in top line, and EBITDA was also maintained. Last year was also 16%, this time also 16%. The only challenge came in the UK operation, where the EBITDA last year was 8%, this time it has come down to 2.5%, and top line was also negative by 5%. But that element to our overall sales is very low, which is roughly about 90 crore. So it is not affected too much to the overall number. But otherwise, quarter was much good, looking to the circumstances and looking to the volatility in the industry.
Sir, you had guided for a volumes growth of 15%, and you've been able to, mark a volume growth more than that, and the EBITDA margin 16 to 18%. Do you see going into the next 3 quarters, you will be able to maintain that guidance? And do you see a headwind of raw material prices coming back again, even though it may have fallen again of late?
So I think it will come back. There is no reason that it will not come back, because BIS standard is going to be finalized shortly, and then the anti-dumping duty is also expected on the PVC. So the prices will definitely come back in the coming quarter. It's a question of only time when it will come back. So it is very difficult to give the exact timeline, but definitely it will come back. So we don't see any challenge into that. As far as our guidance is concerned, yes, right now we are standby with the 15% volume guidance which we have given. And secondly, this quarter was a lean quarter. Normally in the history of last 10 years, if you see, the Q1 is always low quarter. So in a low quarter, even if plus minus something is there, it is not going to affect too much on the yearly number. So our second half is always very big in terms of volume. I am sure that by the time polymer will also come back and the demand will also pick up, monsoons will be over. So we should be definitely going to deliver 15% kind of volume growth.
Are you looking at demand coming in from all the quarters now? I mean, in the sense, we saw some kind of sluggishness coming in, especially in allied sectors like cement, where the prices are not moving and volumes have been little slow to move. Do you see a similar trend in your sector as well, that there is sluggishness coming in demand?
So normally our industry is not directly linked with the cement industry or all this thing. Last year also, if you see, our company has delivered 25% volume growth. So there is no direct connection. But on the contrary, in our industry, normally polymer price normally decide the growth of the industry. Whenever prices are going up, the demand goes up. And whenever prices comes down, the demand goes. Because normally the dealer and distributor, they don't buy when there is a falling curve. When there is upward, then everybody is going to rush to do the stocking. So our plus and minus depend on the polymer cycle. If the polymer is going to come back, definitely it will be there. But on a yearly basis, everything even out. So everyone is expecting that the industry should deliver 10 to 12% kind of volume growth. And if that is the case, delivering 15% volume growth to our organization should not be a big challenge. So keep finger crossed. First quarter was excellent. And our seasonal quarter yet to start from Q2 onward, Q3 onward. So we are confident that we will be able to deliver that number.
And I just want to also check about your Hyderabad plant as well. I think it is coming on stream by the end of August or so. As and when that comes in, what kind of impact do you see on the top line?
So I think Hyderabad plant is ready. Trials are going on right now, and we are expecting last week of this month, we are going to start production for a commercial purpose. So definitely that plant is going to support us because our logistic cost is going to go down. So we will be able to gain some market share into that geography. So definitely in the Q3 onward, this is going to definitely help us in the volumes also.
Can you give us an idea of what kind of volumes that can come from that region, Hyderabad, Andhra, Telangana region? Because a lot of infra work is expected to start in those regions. So, do you expect good volumes coming in, and what kind of impact on revenue that could come in eventually?
So I think it is too early to give the numbers how extra volume we are going to fetch. Let us plant commission, and then we see how the response is there in that market. And based on that, we will be guiding that thing. Immediately giving the number without starting the plant will be too early. So we will be definitely going to communicate to the street. Once I think the plant stabilize, maybe 1 or 2 quarters down the line, we will definitely able to tell the exact how much growth we can do.
Also, if you can give us an update on OPVC segment that you are entering into.
So OPVC is a very good product. We already placed the order of 3 machines, and we are expecting the first machine to be delivered in the month of October. So immediately within a month or so, we will be commissioned that. And another couple of machines are also expected by December. So December, all the 3 machines will be there. So we are expecting a good number from that product also, because too much of demand is there for this product in the Indian market.
Coming to your paints segment, because you have launched it in 2 states, Gujarat and Karnataka, if I'm not wrong. What kind of demand and what kind of feedback are you getting from these markets, and how do you take it to other states?
So like paint, we launched in the month of June last week. So last quarter, there was no benefit much. Hardly any number was there. But July was good for us because people are appreciating the quality. We recently did the test run with the painters also, and they all are appreciating about the products. So we are very, very excited with that kind of feedbacks from the painter community. So we are expecting the good support in the paint division also from the street. And we already started appointing a lot of dealers in the system. And hopefully by quarter end, we will be able to enroll sizable dealers in our company. And from Q3 onward, you will see paint should also start giving us a very good numbers from the Q3 onward.
Do you expect to get operating profitability from the third quarter onwards?
Sir, we are already into the profit. If you see, paint the business is already giving us 14-15% kind of EBITDA. Last quarter, it was 10% kind of EBITDA, mainly because we incur the launch-related costs and the employee cost. Because the base is still low, 40-45 crore base is there, only 2-3 crore rupees of these kind of costs work out to be 6-7%. So that's why it looks drop in the EBITDA margin. But otherwise, we are very positive. And in the coming time, definitely we are going to generate whatever the healthy margin is there, 14% kind of margin. We will next year onward, we will be able to maintain. This year, a lot of launch and all will be there. So some extra cost will be there. But definitely this will be the run rate for going forward.
Mrs. Savlani, it was a pleasure talking to you today and good luck for the next quarter. Thank you for joining us on Earnings Edge on NDTV Profit.
Thank you. Thank you for inviting.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying.
welcome. You're watching India Market Close, and it's finally the last hour of trade this week. And what a week we've had, from a very, very rough start to the week to closing the day with finally some calm on the last hour of trade. Well, fortunately for us, global cues were positive this morning. The RBI policy is behind us, and of course, so is the weekly expiry. Asia this morning looked good on back of it. Our markets gained in early trade this morning. We've held on to those gains, and I think that's what market participants would like to take heart from. The Nifty 50 is at 24,364. Remember, the current week's high continues to be 24,400, which still hasn't been taken out on the index in today's day of trade. For the week, we still remain about 2.5% lower. Well, the breadth of the market's not too bad today, and the broader markets largely are performing in line with the benchmark. Bank Nifty, on the other hand, also sees a sharp up move today, up about 0.7%. It was resilient and outperforming the rest of the market yesterday and continues to do so today as well. Well, the mid-cap index is up 0.7%, so is the small cap index and the micro cap index. In terms of the breadth of the market, it's largely positive. We started the day off strong and have continued to remain largely in positive territory. The advanced decline ratio very obviously in favors of advancing stocks. For every 2 stocks advancing, you've got 1 stock that's actually declining. A quick check on the Nifty 50 will take you through where all the action remains in the markets this afternoon, and there you have it. You've got a handful of losers, but the large part of the market continues to trade positive. Aisha is your biggest gainer, and this has got to do with earnings, a very, very strong set of earnings, a strong outlook, optimism all around. Brokerages seemed enthused, on back of which Aisha trades with a gain of 6%. ONGC, on back of an upgrade from Jefferies, is up 3.5%. Auto as a pack really is doing quite well. So Aisha's had a good day. Tata Motors, Maruti, and the other automakers, M&M included, are picking up on that queue. Well, you're wondering what's happening with metals and what's happening with tech. They were your big gainers yesterday. Today, for obvious reasons, they were your big losers yesterday, and hence they are recovering the most in trade today. So Tech Mahindra is up 2.5%. GSW Steel, Hindalco are some of the other big gainers. Stocks like TCS and Tata Steel also not doing too badly in trade. LTI was your big loser yesterday. The recovery has not been sharp. It's of course struggling at higher levels, as you can tell. On the sell side, BPCL is taking it to the chin. You've got HDFC Life and a bunch of banks that are doing too well, and Britannia is also trading lower. But all in all, it's an okay looking market. Let's not forget that the backdrop of today's trade is what happened this week, which is very, very tough in terms of fears of a US recession, the Japanese carry trade unwinding, all that put together. But finally, a Friday when the markets are cooling off just a bit. But I think that's pretty much it. And more importantly, it's Harsh's birthday. So happy birthday, Harsh. But yeah, the markets in the same breath, I guess, celebrating you.
I'm not so sure, but market's doing very well, Samina, no doubt about that. Firmly putting behind some of the global jitters that we saw at the start of this week. Let's pull up the Nifty mid-cap, try and see what broader markets are doing, and there you go, 7.7% higher on the mid-cap. We've spoken about this a little bit. Let's quickly move on to the advanced decline, see how the breadth is looking. Before I move on to some specific names, there you go. The advanced decline 1370 to 706. So definitely strongly in favor of the advances. Let's try and pull up some names. Lots of result reactions to talk about. Let's start off with something like a Trent and an Aisha. Again, we spoke a little bit about Aisha, so I'll limit that. But Trent, very strong numbers. The margin number just going from 14 to 14.9. And look at the way the stock has zoomed. It's up almost 10%. Very, very strong numbers. And Trent up and away in trade. We'll break Trent down a little bit. Definitely our stock of the day. But outside of that, Oil India also doing very, very well. Another one, Mayur Unicoaters, slightly smaller name, but nonetheless, the stock up and away in trade, 5% higher. ITD Cementation declared numbers day before yesterday. Yesterday, the stock was on a tear. Today, another 4% on ITD Cementation. Some of these infra names doing very, very well. We'll talk about NBCC as well, because that one is up and away as well. Let's talk about Galaxy Surfactants though. Again, strong set of numbers, up 4%. Greaves Cotton is something like an Info Edge, a Sandhar Tech. Again, a Sandhar Tech, very strong numbers. Info Edge came out with numbers today, 3% higher. And Greaves Cotton as well, 5.5% higher or thereabouts, at least in trade today. A Cochin Shipyard, both QOQ and YOY. Now, in terms of top line, QOQ There has been a decline, likely some execution slowdown, but nonetheless, the margins have held up very, very well, even QOQ, and therefore, stock is up 3% odd. Of course, the entire defense pack also doing well. Some amount of tailwind on markets also helping it. Neogen Chemicals now, mind you, this one declared numbers a couple of days back, but very strong commentary for the rest of FY25. Stock is up 7% on the back of commentary. HBL Power also up nearly 2.5%. On to the losers, and again, plenty of them. SAIL is the first one on my list, down really nearly 5.5%. We're seeing Bayer Corp as well, nearly 5% lower. Birla Corp down nearly 4%. Avalon Tech, oh, poor set of numbers really. And that one also taking a bit of a beating in trade today. Timken India is the other one, which is down nearly 4% on the back of numbers. Global Health, Astral, Nexus Select, if we can just quickly take it through. There you go, all of them down. Kolte Patil was lower on the back again of a poor set. More relevant is the pre-sales number, but the pre-sales number also wasn't very impressive this time around. But it's since then recovered quite a bit, so not as bad. But let's pull up some names from the newsmakers, from the other newsmakers. Ola Electric debut on exchanges, that one is up 20%. We are on circuit for that one. NBCC 15,000 crore order win on a 10,000 crore FY24 top line. This one has a new order win of 15,000 crore. Mind you, 5% margin broadly for the company as a whole last year. So keep in mind 750 crore rupees in terms of EBITDA likely to be added from this order. But the stock is up 10, which means 3,000 crore of market cap added on the back of this order. Aster DM 1% equity changed. Hence, that one is up around 3%. There you go. And you also have a Godrej Properties, highest bidder for 2 land parcels in Noida. And that one is up and away, 2% higher as well.
Oh, it's a good-looking market and lots of specific stocks that are moving on back of either order wins or strong earnings. Stock of the afternoon also is NBCC. I don't know whether Harsh mentioned it, but they've bagged a pretty significant order, and on back of which the stock is seeing a very sharp up move, 12% higher on NBCC. Trent, of course, is the other one that looks good, 10% gains there. Godfrey Phillip, from the get-go this morning, is trading firm, 7% higher as we see it. And of course, Bombay Burma is up 6% as well. Along with that, some of your real estate counters aren't doing too badly. So the likes of Macrotech is trading with a gain of 6%. Tire company like Seat looks good, while Apollo Tires is seeing some selling pressure in trade. Well, Suzlon is gaining, has continued to gain from the time it reports its numbers. It's been a strong run for the last 10 days on Suzlon Energy. On the sell side, there are a few counters that are not seeing too much Friday cheer. Alembic Pharma is down 7%. SAIL, the numbers are weak. The stock's down 6%. Lemon Tree numbers weren't too impressive yesterday. The counter continues to reel under pressure. Birla Corp, weak numbers. Stock's down 5%. Apollo Tires, no different. Timken and Rail Vikas also getting punished on back of weak numbers. But we have with us Brijesh Singh, Senior Technical Analyst at Opulent Investment Advisor, joining us with a quick view on the markets. Hi, Brijesh, good afternoon. What's the call on the Nifty? 24,400 was the current week's high, and the markets have not been able to take it out even today when the breadth and the global handover was positive. What is the texture of this market? Does it still remain cautious and maybe a sell-on rise in terms of trade?
Well, Sabina, no doubt what you said, that the weekly high of 24,000 still not been broken, but the best part is still they haven't given the gains which the morning gains which has been there. In this week, what we've been seeing, sometime it was like a gap up opening, sometime another day it is gap down, and another day it has been coming at a gap up. Now, somewhere around 3 o'clock, precisely the time when the supply comes, and all the gain will be wiped out. So till now, the best part is that the gains has not been given. At least still, looking the chart, it indicates that now, we might not break the 24,000. We might be holding. If anyhow we break the 24,000, then 23,000 is a crucial level to watch. If that thing been broken, then we can see Nifty drifting wave down to 23,200 or 23,300. The best part is, at least, for the very short term resistance has been considered. We are above that. That is 24,250. So we are above that, trading that. And now it look like, if we are holding this Friday gains, Monday morning again we can see at least a small gap up opening, and we might try to touch that 24,500 and above that level. So still on the hourly front of the chart, or even if I look at the 4 hourly chart, nothing wrong. The level to watch on the higher side, which would be 24,550, 24,650 band. That is a resistance band which I would be looking for. If that resistance band broke, then we can say, okay, we have come out from that bush of the short-term negative territory or the bear territory, and we might try to retest 25,000 and above. Downside, if I say, then support again lies on that 24,000, 24,100 as a support, and the crucial support to watch would be 23,800. The best part again is that at least slightly, the bank Nifty is holding the crucial level of 49,800. Again, that is an important support. That should be not been broken. So and today we are seeing some support to Nifty from a bank Nifty point of view. So 49,800 and 50,000 is a support which I would be looking for the bank Nifty. Immediate resistance lied at this towards that 50,600 to 700 mark, and if we are surpassing, then we are heading towards the level of 51,100 to 51,200. So the best part is that both the indices right now, they have not given up their gain and still they are holding.
Right, that's the word coming in on the Nifty and the bank Nifty. But I think stock of the morning, Brijesh, is Trent. Strong earnings, the counter is trading up and about. On the charts, so would you initiate fresh longs if you were a swing trader? I mean, would you place strength? And in that case, Trent looks like a good trade.
See, obviously, if we look out the trend chart, the rally, that the one-way rally from the level of, if we look out the daily chart from the 5th of Feb, when the trend was trading at 3,000 or 3,200 mark, it's a one-way rally, and after that we have seen small minor profit booking, but still overall on the weekly time frame of the chart, it's still trading with higher tops and higher bottom formation. Now in today's scenario, if we look out, there are 2-3 parts which we can look. The number one, the average volume part, it has broken and it's been trading above that. That's an indication of the more bullishness. One part. Second part, and in today's session we have seen stock making a new 52-week high, that is of 6,373, and still trading near that zone of 6,155. So overall trend still look positive. The previous month high has been broken. Previous week high has been broken. So 5,780 or 5,700, we should keep that thing as a stop loss. If present rate or any dip towards the level of even 6,000 around, one can play on a buy side. Regarding with the target is been considered if as a swing trading, if someone has a view of say for a 1 month or a 2 month time frame, the first target on the higher side would be 6,600. If we are surpassing this level, then the next level to watch would be 7,200 to 7,300. So present rate or any dip should be used to go along with the strict stop loss of 5,700.
Just keeping the focus on Trent, that is the stock of the day, like we said. Brijesh constructive on the counter, but Mahima is standing by with more on those earnings. Mahima, good earnings and a very strong outlook as well, and I guess that explains the sharp up move on Trent this afternoon.
Absolutely, Samina. So in terms of the numbers, if we see revenue is up around 56%, EBITDA was up around 67%. Margins have, however, slightly improved from 14% to 14.9%, and net profit has increased to 391 from 167. So it's more than doubled. Now, in terms of what has aided the net profit, well, overall inventories have come down by 86% YOY. Finance costs have slashed by 66% YOY. Now, margins have been impacted slightly because of rent increasing by 67% on account of the store expansion that Trent has done over a period of time. And other expenses have gone up by 57%, and overall purchase of stock in trade has also gone up by 67%. Now, in terms of key highlights, or in terms of fashion business, fashion concepts registered a double-digit like-for-like growth. Revenue and profit CAGR since Q1 FY20 has been 39% for Trent, and the emerging categories now contribute 20% to its overall revenues. And online reach has also grown by 30% this quarter. online revenue overall now contributes to 5% of total Westside's overall revenue. And in terms of total stores added during the quarter, 6 stores in Westside were added and 16 Zudio stores were added. Now overall their count goes to 228 Westside stores, 559 Zudio stores and 36 overall Lifestyle stores. And even the Star business has posted a like-for-like growth of over 20%. But I think what's the only worry for this particular stock is the kind of valuations it's trading at, Samina. Currently, it's trading at a multiple of almost 150 PE. And even if we check the forward PE, for 25 estimates, it stands at around 139 times. And for FY26, it stands at around 104 times. So valuations is something that will be a concern for shareholders.
It's not a concern, right, Mahima? We've been talking about these valuations for months now. It's been an expensive stock. The last time I remember, I don't know when we said the trend was well priced and a good buy on valuation, but liquidity and the markets do have a mind of their own, and that's very reflective in the way Trent is reacting to its earnings today. We'll take a break, we'll come back, we'll put the focus on another expensive stock which made its debut on the exchanges today. It's Ola Electric, all that and more on the other side, so stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
Welcome back. You're watching India Market Close here on NDTV Profit. Now, newly listed Ola Electric hits upper circuit, coming out with the biggest Indian IPO in the last 2 years. And during an exclusive conversation with NDTV Profit, the chairman and managing director Bhavesh Agarwal talked about his aim for the company's path for profit and more. Listen into that.
We aim to build, it's an interesting thing. We're building a sustainability focused company to build a sustainable environment, and we want to build this company sustainably, which means we want to build a profitable growth story. We're not there yet. If you see our last 2 years of financials, which are in the prospectus, FY23 to 24, revenue went up 90%. EBITDA margins improved from negative 43% to negative 19%, a 24-point improvement in just 1 year. This journey, as we continue to improve volumes and hence revenue, our cost doesn't go up. It's in a manufacturing business. So the operating leverage drives better margins. And secondly, the strategy of vertical integration with our cell coming into our products next year drives, a cell is the costliest part of an EV. So as the cell we start manufacturing in-house in India, save the margins that global suppliers take, save the duties, that will further drive gross margins and hence EBITDA. So this is the roadmap. I can't share numbers today, but soon we'll be publishing our Q1 results, and I hope investors will take a look.
All right, we'll stick with Ola. Puneet joins us with the major standouts with regard to the company, challenges for Ola Electric, and whether profitability can actually be expected and when. Puneet.
Well, thanks for that. So, we've seen that, the IPO opened at a very tepid 76 rupees, the issue price, and then has run up by 20%. We think, this is, of course, one of the major things in this particular IPO has to be that the valuation has come down from roughly 5.5 billion to 4 billion. When you look at the issue price, it has, the last round was happening at 118 rupees per share. It was reduced to 76, and now, we've seen it at upper circuit of 20% to come in at 91 rupees. Anchor Book also saw strong participation, and 40% of it was taken by HDFC, SBI as well as Nippon. Now, what we did was just look at the 3 to 4 main things about the company that might be working for them and a few that might not work for them in the future, and how will they tackle them is the main thing. So, going out, is the first pure play EV company to list on the bourses. Now, we've seen Bajaj as well as TVS have capex on the EV as well as the ICE side, which is the petrol and diesel. But one main thing is that this company is purely electric, so all capex will go into that. Their market leadership of roughly around 35% is also very strong, and expect to going further as well. So currently EV penetration is just 5% and is expected to go to 41% by FY28 according to HDFC Securities, and Ola Electric will definitely be one of the beneficiaries. The Gigafactory, what they've addressed is, the current head of the, so, we saw a lot of changes in employment on people in Ola cabs, and that has been something which has been plugged into. So the current, Gigafactory head is of course an industry veteran, Yoon Sung Park, who's a South Korean veteran in the LG space. He headed LG's electronic battery manufacturing space for around 36 years, and he's come to Ola last couple of years. He's the highest paid person as well, employee as well, more than Bhavesh Agarwal as well, and that's been one of the key factors going forward, the Gigafactory. Within the, one important thing is that roughly 80% of the components across the 3 models, S1 Pro as well as, the S1 Air are same. So, that helps build a platform and then launch multiple variants over the top, and that's similar approach to what TVS and Bajaj has taken. But, when we look at what might not work is, of course, something that we spoke about is the valuation. It came at 4 billion, and now, of course, it's gone much, 20% higher than that. But going forward, it's a loss-making entity at the end of the day. It's trading at EV to, which had roughly 1,500 crores of losses in FY24, trading at EV to sales of 5 times, which is on par with Bajaj Auto, but Bajaj Auto makes a lot of, roughly 8,000 crores of profits in a year. TVS is cheaper than EV, on the EV to sales metric when compared to Ola, and that's one of the other things. Finally, last 2 things, the EV subsidy has been reduced by 50% under this particular scheme, or the new EMPS scheme, and let's see what happens in FAME 3. That'll be one of the key triggers for EV scooters to pick up. And finally, the EV bike segment, which the company is looking to enter. It has not only been the premium segment that has been seen, but the volumes are very dismal, roughly 15,000 units a year, while Ola sold roughly 3 lakh scooters in the last year. So a few risks on valuation and the new segments such as EV bike, which is largely untapped, but certain things might definitely work for them that we could be seeing in the stock price today. Back to you.
Thanks a lot for that, Puneet, breaking that down comprehensively. But, let's delve down deeper, take an independent voice. Astha Jain, Senior Research Analyst, HEM Securities, joins us to talk about exactly that. Astha, first off, before we go to valuations, let me quiz you on the business model itself. Just if you can briefly in a nutshell highlight for the benefit of viewers, what is it that Ola Electric is aiming for, and in terms of operational metrics, where do you see it go to, where growth as well as business is concerned?
Hi, good afternoon. So yes, talking about where it is aiming for and etc. So my first answer is that the company is aiming for the heavy penetration of the EV two-wheeler, and that is currently which is at around 4 to 5%. So they are aiming to cater that business, because now this is what the management is also expecting, that by FY28 the EV penetration will reach to around 40 to 50%. So what a growth opportunity the company is having right now. Secondly, currently they have a strong market share of more than 30%. If I talk about the latest figures, so it is more than 30%, although it is 50% if I talk about the FY24 figures. So they have a strong market share. Plus the government pushes there because they have already got the PLI for 2 of their scooters, and that is way back in January 24. And FAME 3 incentive policy is also working in favor of these companies, which everyone is looking a close eye on and keeping a close eye on. So I think some of the things, first of all, strong market share. Secondly, the way the company is going for their platform 3 launches. So that will help the company in reducing the cost also, because this is what the major concern is right now. We have seen the losses in the P&L statement, and that was the concerning factor when everyone was looking after the IPO. But I can say that now with the launch of their platform 3 generation, I think the company will be able to reduce the cost. Along with that, some of the launches are pending. I think by FY26, their motorbikes will be launching. So I think that will also help the company, and definitely the cell, which is the prime raw material for the company, constituting around 30% of the cost. So they will be going to have some sort of self-independence in that also, or self-reliance in that also. So all these factors put together is implying towards the fact that company will reach the profitability maybe 2 years down the line. But I think that is what is liking by the market right now. And company is getting the premium on that basis, or trading at the premium on that basis.
So, you've spelled out quite a few things here, Astha. I want to try and focus in on the valuations now. So you're seeing the current valuation being 5 times EV to sales, which is pretty much comparable to a Bajaj Auto, which is far more profitable, of course. And it's in fact, you're finding TVS cheaper. So within this pack, this entire two-wheeler pack, would you go for a pure play EV like an Ola, or would you rather much go for a Bajaj or a TVS at relatively the same or lower valuations and, of course, generating cash?
Right. So I think everything has their own, function. So if I talk about the pure EV player, then definitely Ola is the first choice. Now talking about the other automobile manufacturers also, they are also looking good to us. It's not that we are just giving a heads up for the Ola and not the others. But here what I am looking after is that although we have just given the valuation metric of price to sales to the Ola IPO, and when it came at the IPO price of around 76, it was at around 6.8 times of price to sales multiple. Now it seems to be little higher, but we have not compared it with the domestic players. We have compared it with the international pure EV players, and where the price to sales multiple is ranging somewhere between 4 to 8. So now if I talk about price to sales multiple of 8, which is at the higher side, right now the price is coming 91 is absolutely quoting that valuation only. So it is already quoting it price to sales multiple of 8 at the 91 rupees price. So now what we are seeing is that we are continuously liking the stock, but for the more upside, we think one should wait for some more time, because already, so much is already discounted in price to sales. So not much further upside is left in the short term, not in the long term, I'm saying in the short term. So yes, it is looking steeply priced at the 8 price to sales multiple, but what to do, because the other global players are also quoting at the same, and India always get the benefit of its demographics, and we have always seen all the Indian companies to enjoy the premium over the global players pure on the basis of the demographics our country is enjoying.
Hi, it's Amina. When we spoke before, when this IPO is opening, we discussed how it was an expensive stock and, one shouldn't look at it from a listing day gain. But of course, liquidity is such that you can't defy that. At what price do you think this becomes attractive for the medium term? At 90 rupees, surely not. What is a good entry level that an investor should look at?
So, Samina, it is a sigh of relief for me because I just stick my neck out and I told all the viewers on your channel that we are expecting 14 to 15% listing gain, and afterwards we have seen a deep cut in the market. So definitely, in fact, there was a negative sentiment about the listing also. But yes, we have seen by God's grace, the listing is very, very much into the positive zone. So now at this price, definitely it is becoming expensive, but it is getting the scarcity premium also because it is the pure EV player. And today in India, we don't have a pure EV player in the listed space. The other automobile manufacturers, definitely they are also into EV, but not pure EV. So definitely it will always get some premium of that sort. But yes, at the 91 rupees of the price, we are not recommending to buy. We are expecting some sort of fall if it all it comes at around 86 or 85 level, then it is again a decent buy. So anywhere between 82 to 85, I think it is a decent buy for those who have not received the allotment. And our price target initially in the short term is around 97 to 100 rupees. But in the long term, since the results are due, we really need to review the results and then we can always review our targets also. But at current point of time, 97 to 100 rupees is the price target which we are attributing to the stock in the shorter term. But no need to buy at this point of the time. Let the stock fall till the level of 85, then one can make entry into the stock.
Right. Well, it looks expensive, and it is expensive, but the markets are cheering this new entrant on D Street, 20% higher on Ola Electric. Thank you, Asa, for talking to us. We'll take a quick break. We have the last 30 minutes of trade to go before we wrap up this very, very volatile week, which will be behind us. We'll take a break. We'll come back and take you through closing strategies as well. So stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money. Welcome back. You're watching India Market Close, about 1% higher on the index, and it seems like we should be shutting shops up 24,400. But of course, it's not been a bad day of trade. The breadth of the market's also been good, and considering where we're coming out of, where we had a very, very rough first half of this week. Well, Dipin Mehta now joins in with a fundamental view on the markets. Dipin, before I talk to you about the markets at large, what's the call on Ola Electric? It seemed like an expensive proposition. Then, of course, it gets a 20% listing day gain. What do you do at 90 rupees? Ola Electric looks good. Did you buy this stock? And if not, would you consider buying it now?
Yeah, good afternoon, and thank you for having me on your show. As is the case with all new age listings or these concept stocks like Zomato, and also we have got Nykaa and also Paytm. It's just better to wait and watch for some time, let the dust settle down. Let us see 1 or 2 quarters how the company is shaping up, and how its road to profitability, how that is actually moving along, and only then look at making a bet. That's the best way I have learned to target these companies. We have seen that all the new age listings, the companies I named, including many of the other new ones, they list with a lot of euphoria, and then 2-3 quarters down the line, there's a lot of, I would say, disillusionment. And then as the management starts to roll out the business plan, and a few quarters later, we can see the road to actual positive profitability. That's when the stocks start to move up again. And I think that Ola Electric also will follow the same kind of journey. So it's better to just wait and watch. I think let 2-3 quarters go, and then look at analyzing it and buying this company if at all.
122 times.
Right, depends. Harsh joining in. I want your take, and we spoke about this earlier. We've missed your view on it. One stock, of course, is Trent that I want to take your view on. Supremely expensive, but the kind of numbers that it continues to post, oh my God, I mean, it's extremely strong, right? 60-70% plus EBITDA growth is very strong. So that's one. Also, in consonance or in similar to that, want your take on Avenue Supermarts as well. One of those which are trading at nearly 100 times plus, and at the same time continues to churn out slightly lower growth in comparison to Trent. So just your views with regard to this space.
No, obviously Trent is doing something very different, and the results they are showing is astounding, and which is why Street is really bidding up the stock price. If you own shares like Trent, some of which what we also have, it's great, I think, great news, but you cannot be buying the stock at these levels. The risk return doesn't favor you, and these kind of growth rates also are not sustainable. At some point of time, they will start to slow down, and that in turn will affect the stock price movement as well. So I would just say that existing investors, it's an easy choice. You remain invested, don't do anything, to kind of try and book profit or buy it lower after you sell it. Don't try all those tactics. Just remain invested. But from a fresh investment perspective, I wouldn't recommend Trent.
No fresh investments in Trent. If you're lucky enough to own the stock, continue holding on to it, is Dipin's view on it. Well, it's the last 20 minutes as we wind down this trading week. Agam is standing by with all the action in the F&O space. Agam, we saw a gap up. Fortunately, we held on to our early morning gains, but it wasn't a day when the market saw a gap up and built on those gains. What is the F&O picture indicating? We're still circumspect?
Well, absolutely correct, Samina. We started off with some strength, but throughout the course of the day, we've actually seen the benchmarks trade in a very, very tight, narrow range, and the Nifty continued to trade around the mark of 24,300, 24,400 and thereabout. Well, in fact, it was a 50-60 odd point range for the majority of the day, which is actually nothing at all in terms of moves. And unwinding continues for the August futures, the Bank Nifty too. Well, holding on to 50,000, in fact 50,500 is what we're keeping an eye on. And once again, unwinding there as well. As we move into a new week, in terms of the options market and the kind of range that is throwing up, well, we mentioned 24,000 earlier on in the session today, and that's where we're seeing a good amount of writing. But even as the Nifty holds above the mark of 24,000, we're starting to see a little bit more writing around 24,200, 24,300 puts. And of course, a little bit more of a resistance building around the 24,500 mark. But that's more of a pivot than a resistance, to be honest, in the way things are panning out at the moment. Let's move on and talk about stocks. And naturally, Trent is right at the top of the list. It's up as much as a whopping 11%. We were just doing some back-of-the-hand calculations. While the Bloomberg terminal is expecting nearly 78% growth in the FY25 EPS, well, that also means that it has an FY25 price to earnings ratio of about 115 times. So it is significantly expensive. A near-term peer like an Avenue Supermarts is not too far away. It's still at 100 times. But of course, the growth rate there is just about 35% on a year-on-year basis for its EPS. But in terms of other factors, we had a very, very mixed quarter for sale, and that's actually wilting on the pressure. It's down around 6%. So we have plenty of counters in today's market which are moving on the back of earnings. Even in terms of unwinding, let's pull that list up as well. We have long unwinding of Biocon and Syngene International. PVR Inox to a certain extent looking at about a short covering. All in all, it's been a mixed day of trade. The Nifty, the Bank Nifty, the small cap, the mid cap indices all moving in tandem, and not too much to speak for. I reckon that we will be looking at about a consolidation, considering we don't have any macro triggers coming up anytime soon. Of course, I'm only talking about the known unknowns at the moment.
Thank you for that, Agam. Clearly we're not having the worst day after the kind of week that we had, especially where global cues were concerned. We're ending the week definitely much better than what we had expected at the start of this one. But before I move on, Dipen, I have a quick question for you, another one. Let's look at some of the infra names, some of the railway names. We had RVNL declare numbers yesterday. The numbers were again a very poor set in that sense. Now this one trades at one of those egregious sort of valuations and has a very, very long drawn order book, 1.3 lakh crore on a revenue of roughly 20,000 crore. Similarly, NBCC, the move today has been 9%, which is 3,000 crore in terms of market cap. They won a 15,000 crore order. Rough margin is 5%. Do you believe that some of these stocks are not looking good from a valuation perspective, and there could be a large froth build up here? And is there any other space or pocket that you believe is looking egregiously valued?
I mean, if you look at optically, the P multiples are really on the higher side. And from that point of view, it doesn't make sense to buy at such elevated multiples. Maybe at a correction or 2-3 quarters down the line when the actual execution takes place, that may be a good entry point. But look, these businesses have got good earnings visibility, and there's political stability, same government for the next 5 years or so, and focus still remains infrastructure as well. So order flows will keep on coming in. It's just that when you buy at these levels, there's hardly any margin of safety. And no doubt they may have multi-year order book position, as is the case with a lot of PSUs, which are in the engineering, construction, shipbuilding, defense space. But there could always be a couple of soft quarters because of a mismatch in terms of when the actual billing takes place on an order which they're executing. So I think soft quarters are good entry points, but buying on a high like this after they've run up so much, I don't think it makes sense.
Brijesh, you want to come in on a couple of metal stocks? They seem to have recovered well after the big fall that most of them have witnessed this week. On the charts, any long trades in the metal pack that you're constructive on? And it doesn't have to be for the full August series, maybe just for next week.
So if it has been considered for the next week, then look out the National Aluminium right now. It's where the shorts is getting squeezed up, and it looked like we might see a pullback now. 178 around the stock is it's been quoting, and if we hold on the swing, the down level of swing of 170 178, we might see a pullback. That pullback will be towards the level of 185 to 195 to 198 on level.
Right. Brijesh, also a quick word on Eicher Motors. Very strong earnings, but the stock has also managed to see a pretty big move, 5% higher as we see it. And it's going into the weekend strong. For next week, would Eicher be a good long trade for you?
See, there is a gap up opening, and still the gap up opening has been holding on. No, it looked like it would be converted into a runaway gap on the higher side. Definitely 4,832 around the stock is quoting, and if we hold around the level of say 4,680, we might see stock touching towards the level of 5,070, 5,080, where the supply would be coming. And if that is been surpassed, then it is heading towards the level of 5,200. So for a very short time, it's been considered 4,670 or 75 should be the stop loss. One can look out to buy the President or NDTV and play for the level of 5,070 or 75.
But you can't ignore.
Got it. Let me switch focus. In fact, today is a day where we focused on the auto pack, but we'll continue to. From EV to Eicher, it's jumped 5%, reported steady Q1 numbers. Puneet, what's worked for the company? Give us your take as well as brokerage views.
Yeah, thanks for that. So, majorly, if I had to give it one headline, was the double profit beat. So, it was expected to be around a 10% profit growth kind of a quarter, but it has grown by 20% as profitability in this particular quarter, despite volumes falling by 1%. And that's all because of, their average selling price of the motorcycles has gone up by roughly 9%. Now, essentially, this means that the customers or the volumes that they've sold is higher than the 350cc. So, essentially, 29% growth seen in 350cc and above segment, while the 350cc, which has the Bullet and the Classic, has grown just about 4%. So higher average selling prices and premium models sold in this particular quarter was the highlight which led to the profitability beat. The other thing is they launched the new Gorilla 450, a new addition in the 400cc space. They already had one model of the Scram which hadn't, and the Himalayan. So now this new Gorilla platform has already got roughly 2,000 to 2,500 vehicles order in the last 1 week since its launch, and that's roughly 30% of what it does in a normal month of the other 400cc motorcycle. So that's another positivity. The only problem is the valuation concern, because it's an expensive stock, no, I should say, because it addresses only the premium segment, and when comparison with the likes of TVS as well as Bajaj is made, the argument is that Bajaj and TVS are present in the 125cc and the 250cc segment as well, which is a very high volume segment going forward as well. So Citi is positive on the stock. It's maintained its buy with a target price of 5,250, which is a 10 to 12% upside from current levels. But they've also mentioned that, reserves were slightly above estimates, but they see that going forward, it might be difficult to, meet the volume targets for this year. And that's why they've trimmed their estimates for volume growth by 3 to 4%. MK as well as Motilal are bearish on the stock. MK has a target price of 3,750, roughly 16 to 18% downside from the current levels. They've said that recovery will be gradual only and not, in a very hurried manner despite festive season coming up. They're expecting muted 6% growth in volumes when others like Bajaj and TVS are going to show 15%. That's the estimate. And Motilal has, cut their FY25 and 26 EPS by 5 and 3% on valuation concern, factoring in weaker than expected volumes going forward. So today's move definitely on the surprise in profitability, but going forward, there might be a little bit, a volume growth much needed for over the next 3 quarters to kind of, get brokerages back potentially. That's the synopsis for Eicher Motors. Back to you.
For the outlook, it may have to work a little harder to impress the brokerages. But if I had to pick a stock of next week, it may potentially be Wockhardt. If we can pull that one up on the screen, that should be useful. They've just reported numbers, and the numbers are fantastic. The stock has already hit upper circuit literally a minute ago. Revenues were up 15%. EBITDA has come in at 91 crores versus 16 crores. Margins have improved significantly at 12.3% versus 2.5%. And the net loss, so they're finally turning the corner on Wockhardt, has come off from 136 crores in the same quarter last year to only about 16 crores. Brijesh, I don't think there's actually, Dipin, you coming on Wockhardt. It's been on the buy side now for quite a few weeks on back of the recent drug as well for cancer patients. And what a fantastic sort of earnings being posted. Now, I know the opportunity for a tactical investor is low because as soon as the earnings were reported, the stock is at upper circuit. But what do you make of Wockhardt? Their net loss is 16 crores versus 136 crores in the same quarter last year. Margins have come in at 12.5 versus 2.5, and EBITDA is at 91 crores versus 16 crores. Do you like Wockhardt?
No, I think that it's like, very difficult to analyze Wockhardt because the success of the new drug launches is still unknown. And if they work out as per management expectations and they're really blockbuster drugs, then even this price is cheap. But if they are not that successful, then from that point of view, Wockhardt is a bit expensive. The track record has been very, very sketchy at a time when the entire pharma industry has made huge leaps and have progressed significantly on all the markets and so many new launches they have done. Wockhardt has been a bit of a laggard. Maybe they were focusing on new chemical entities and R&D activity, and that may pay off for them. They do have a slightly differentiated business model, which takes time for investors to understand, which takes time for them to start showing the profits. But right now, I would say that Wockhardt is kind of work in progress. And the real question to ask the management is the new launches, new drug entity, how that is shaping up, what is the plan over there, and then see how that progresses before one can make a more informed view or on the potential of the stock.
Brijesh, let me come to you both on Wockhardt as well as on Aisha. Give us your quick take with regard to charts, because Wockhardt especially, we've seen a very sharp move over the last few minutes.
So if a short term has been considered for the Wockhardt, then till the stock trades above 870, it looked promising, and if I'm not mistaken, the 52-week high is 955. It would be breaking, and the stock can be headed towards the level of 1120 around zone in a 1 week to a 2 week time frame. ISAR, I have already spoken. Overall trend look promising, and if someone has a view of say like 2 to 3 week of time frame, and runaway gap has been already been there, and gap opening can be converted into runaway gap. So if it holds around the level of 4,670 mark, we can see stock jumping towards the level of the first level to watch would be 5,075, followed by 5,200 around.
We have Varsha also joining us with the Q1 numbers with a breakdown on what's happened with regard to Wockhardt's numbers. Varsha, sharp spike in the stock. What are you seeing in the numbers?
Well, yes, Harsh, if you see, revenue is up 15% and EBITDA margin is at 12.3% versus 2.5%. Now, big uptick in EBITDA margins. If you see, one of the reasons is there are other expenses which went down to 174 crore versus 190 crore last year, and company has seen a net loss of 16 crore versus loss of 136 crore last year. One of the reasons is that other income, if you see, jumped to almost 30 crore versus 14 crore. The interesting thing about Wockhardt is their drug, that is WCK 5222. This is one of the drugs which they are going to launch it. That is currently into phase 3 clinical trials, and everyone is expecting good growth from that WCK 5222 drug. So this is all we have. We need to wait for the press release to come to see what all factor in, what were the growth prospects behind this 15% growth.
It's going to be an exciting Monday for Wockhardt. If I had to put my bets on this, I think another gap up on Monday morning and a circuit on Monday morning cannot be ruled out, as long as everything stays well globally. Well, as we're wrapping our trade, Brijesh, you want to come in with your top trades? Anything that you are recommending to buy today, sell on Monday?
There are 2-3 stocks which look promising for a BTST sort of been considered. One is the Indian Bank. The hourly chart indicates the move on the higher sides. 577 around the stock scores around. One can keep a stop loss of 569 and play for the target of 595 to 600. Another counter to watch would be from a paint sector, that is Asian Paints and Berger Paint. Both are looking fantastic on the chart, but as a risk reward ratio has been considered, Asian Paints look much more promising. 3039 around stock has been quoting, so one can look out to buy at the present rate with a stop loss of 2990, play for the target of 3150. And there would be another counter that from a fertilizer pack, that is Coromandel International. Even that is looking promising, and stock today had made a new 52-week high and still trading towards the day high. Stock is trading at 1695, so one can look out to buy the present rate with a stop loss of 1660, play for the target of 1750 to 55.
Okay, Dipen, let me come to you. How are you? What really has stood out for you where Q1 FY25 numbers are concerned? Do you see any specific stock or sector or commentary which has really stood out for you, and basis which you've made a decision or two, whether buy or sell?
Oh, I think that by and large, pharma numbers were very impressive. A company like Lupin reported excellent set of numbers. So I think that's where investors should focus on, and we are looking at trying to increase our exposure to pharma stocks. There's an improvement as far as the US generics market is concerned, and also US FDA inspections are being handled far better. Valuations are still reasonable, and healthcare spends globally are in a secular growth mode. So many positive trends going for pharma industry. It's a complicated industry. Many stocks are there. So one has to be a bit selective. But across the board, I think that's where one sector where one should be slightly overweight on.
Dipen, just in terms of themes within pharma, is there certain companies' themes that you are liking? I know you spoke about US generics. I know you spoke about a couple of other factors which are playing for pharma. But if you can give us maybe a theme or a couple of names which you are genuinely liking, because we spoke to a couple of pharma companies today as well, and there is a couple of hiccups which we are still seeing. So just wanted your take.
No, I think, as I said, I think Lupin, Zydus, Torrent, they all came with good set of numbers. Even Dr. Reddy was not bad. Sun Pharma, I thought was a bit disappointing. But I think across the board, if you buy pharma as a basket, that should do well. You could look at a pharma mutual fund also. That also can deliver exceptional returns. It's just that in an overheated market like this, we look at stocks which are still available at or average valuation multiples. And pharma certainly fits that criteria. At the same time, growth prospects are good. And these companies are launching new molecules in US, within India also. There's decent amount of M&A activity also. For example, Dr. Reddy purchased that nutraceutical business. So something that is always happening in the pharma industry, which is why we are quite positive.
Right. Thank you, Brijesh. Thank you, Dipen. Great having both of you on the show. Have a good weekend, and we'll see you next week. Well, the week is finally over, and what a week it's been, with big swings across world markets, fears of recession, Japanese carry trade. Investors and traders worried that this was the start of the correction that a lot of people had been talking about. But guess what? It wasn't so bad. The Nifty is only going home with a cut of 1.5% this week. So while it was volatile, we managed to stage quite a recovery over the last few days as well. Well, that's how we are closing trade, 24,360. We're shy of 24,400, which was the current week's high, but nevertheless going home on a positive note today. Well, also worth noting is the fact that until 24,400 gets taken out on the index, a conclusive move by the bulls is not expected to come come in anytime soon. It still remains a volatile market, and for most people, a sell on rise. The Sensex also going home with gains of nearly 800 points. The broader markets did well, in line with the benchmark. The mid-cap and the small-cap index going home with gains of 0.7%. Bank Nifty showed some resilience, goes home with a cut of about 1.7, 1.8% for the week, but today was up about 0.7%. You had bellwethers like HDFC Bank that actually outperformed the index even in trade yesterday. Well, a quick check on the Nifty 50. The breadth, like I said, was very clearly biased towards the winners. Advancing stocks are much more than the decliners. For every 2 stocks gaining, you had 1 stock that was actually declining, and that's reflective in the advanced decline spread. A quick check on the Nifty 50. Let's take you through who the big movers were. Eicher Motors, on back of strong earnings, goes home with a gain of 6%. Along with it, it takes M&M, which is up 3% in trade. Shriram Finance had a good day. Tata Motors, that doesn't seem to be stopping either, 3% higher on Tata Motors. ONGC, on back of an upgrade, managed to go home with gains as well. Metals and IT were the biggest sellers in trade yesterday, and today they're the biggest gainers, because when the recovery came in today, it came in the stocks that sold off the most yesterday. So you had Infosys, Hindalco, to name a few, that have gone home with good gains. Pharma did okay as well. Tata Steel had a good day. Bajaj Auto and Wipro were some of your other big gainers. On the sell side, you had BPCL, which was weak from the get-go this morning, going home with a bit of a cut. The rest of the stocks also going home subdued. So all in all, tough week, but we're going home well, and I think this is just another instance of resilience of our markets.
Absolutely, 1% higher on the Nifty 50. Let's pull up the BSE 500, Samina, if we can. And what we'll see is a lot of movers on the back of either news or either earnings. You're looking at a trend up 12% at close. Very, very strong numbers reflecting on those returns, at least intraday. You're seeing NBCC up 9%, new order win. Jubilant up almost 8%. Again, in focus because of numbers as well as commentary. You also have quite a few names on the decline. You're seeing RVNL second consecutive day in the red. Lemon Tree likewise. Bayer down on the back of numbers. New India down on the back of numbers. Alembic, Sale, all of those, and Timken. In fact, all of the top 7 out of the 8 are down on the back of numbers. So numbers playing quite a bit of a role in some of these broader market names where they've seen some bit of pressure.
Yeah, and for good reason, because stocks that have done well in terms of earnings have been rewarded well, and we can see that with the likes of a Trent or, for that matter, even a Wockhardt that reported just a few minutes ago. So it's an interesting week, and I guess if you're a bull, you're not complaining. You can, heave a sigh of relief, go away for the weekend, and of course, we'll see you back here on Monday. But it is Harsh's birthday, and we're celebrating that as much as we can. This is the best we could do in short notice, but happy birthday, Harsh. Have a great weekend.
Thank you, Samina. Thank you, everyone. Have a great weekend.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Right, on Earnings Edge today, we're speaking about Biocon. Peter Baines, the Group CEO of Biocon, joining us in to talk about the quarter gone by and the outlook ahead. Hi, Peter. Thank you so much for speaking with us here at NDTV Profit. Always a pleasure.
Thank you. Good morning.
All right. So when I'm looking at your numbers, I think what a lot of analysts are a little worried about are the EBITDA numbers. And let me just jump straight to that, because if I take out the 1,057 crores from your net profits, it's seeming like a bit of a weak quarter. EBITDA has also come down in large part because of the generics business. Is this something that you were expecting? Has quarter one gone by as planned?
Yes, I mean, quarter one has come in very much in line with our expectations and our outlook. I think we've seen on an underlying basis, so stripping out the year's transaction, we've seen a relatively flat revenue performance, but that's a mix across the businesses. And important to point out that in the biosimilars business, which is the largest business in the group, we saw underlying growth of 11% on the quarter on a comparable basis, and that offset degrowth in the services business of 2% and the generics of 6%. On the EBITDA question, that also came in line with expectations. The group EBITDA is still a healthy 20%, and in the generics business, it's lower at 9%. In the biosimilars business, it's a pretty healthy 23%. So we're not uncomfortable with that at this point in the evolution of the business, and we'll see that expanding in the second half of the year and beyond as we begin to sort of transition toward a more consistent acceleration.
Absolutely, and we'll come to each of those segment-wise businesses in a bit of detail, but just a word on the margins. Now, some of that impact has come because of employee expenses, which have come to 22%. And just trying to understand if this is a trend that continues, Peter, because now you also have a higher base.
And I think that's the key. That we've completed the transition now, and it's largely the biologics business with the transition now complete. So we've taken on all the headcount, all the teams, all the expertise now to support the business. You'll have seen a reduction in some of the one-time costs that offset that. But now we're stabilizing and consolidating post the transition, and we'll build forward from there.
Okay, let's come to biosimilars. You talked about how you saw a year-on-year growth of 11%. The EBITDA margins are pretty robust at 30%. Do you see this at a sustained level, which then, of course, contributes to your consolidated margins, 18% this time? Where do you see that growing, and how big or how fast does the biosimilars business move?
Sure. So yes, we do see this, obviously moving forward. And in some ways, this is the consolidated business profile now. We've grown 11%. That's been through growing market share in key markets like the United States and our oncology franchise and in our insulin franchise, stable market share performance in Europe, and some very good growth in the emerging markets coming from existing products and extending our reach into new markets. Now, looking forward, we continue to see that traction this year, and then beyond that, the growth will be driven by new product introductions, that we are lining up. And that's an exciting prospect with 5 new product launches coming in the next 2 years. This is mid and longer term now in the United States, and 3 products coming into Europe in that same time frame. So we're consolidating the business this year, but there's good traction, as we've seen on the comparable growth in the first quarter. That will transition to acceleration with the introduction of this new product flow, and of course, we believe that will play through the P&L and expand the margins as well.
Let's talk a little bit more in detail on that product flow. What are the big drivers coming in there? In your con call, you talked about the GLP portfolio. Can you expand on that?
Sure. GLPs, are very, very exciting prospect and priority for us in the generics business. The GLP peptides, underpinning both diabetes and obesity, very, very large markets with long-term growth due to the development of those diseases right across the world. We're at the front of that in the generics with our liraglutide product, but that is just the front. Behind that, we're developing semaglutide, tirzepatide, and others, and intend to play a lead role in the generic, in the GLP generic market opportunity. Importantly, this has a very strong read across to our biosimilars business, which has a long-standing insulins business and a strong heritage there as a global player. And of course, insulins play to diabetes, and diabetes and obesity are very strongly linked in terms of comorbidities and disease progression. So we have a lot of opportunity there and a very unique position. I think one of the only companies with both GLPs and insulins to play into this sort of very, very large diabetes and obesity market going forward.
What is the timeline you see for GLP's availability in India and in other markets as far as you're concerned in terms of permissions? A lot of, I wouldn't say controversy, but a lot of different views on GLP as well out there in the public domain. Any comments on that too?
Sure. So on the sort of timetable front, I mean, we have approval in the UK. We'll be looking to launch in the UK and select other markets this fiscal. Our strategy is really global here, and we are pursuing regulatory approvals on a global basis to bring those products to patients, and we'll do that, in both a direct to customer model, and we'll work with partners elsewhere. As I said in the earnings call, we've just partnered with a strong specialty player, Handok, in Korea, for example. We're in dialogue with the Indian regulator to look at the opportunity to bring our product here. And in terms of, what we see in the marketplace, there's no question that diabetes and obesity have enormous current epidemiology. 10-12% of global population is the estimate for diabetes, and growing. And obesity, I think, perhaps even higher. And really, these are comorbid diseases that cause devastating consequences in terms of disease progression, cardiovascular disease, renal disease, liver disease, reproductive disorders, and even bone and skeletal problems. Diabetes is the highest cause of blindness worldwide. So there's huge clinical requirement here and an enormous unmet need. And, we intend to play our part in fulfilling that need on a global basis.
And on the second part, I mean, my fault, I asked you both those questions bunched up, but a lot of different views on this group of drugs. I mean, obviously, they're being used as weight loss drugs in some parts of the world. A lot of talk about the possible side effects, long term. Do we know enough about it? Just your commentary on all of that chatter.
So in terms of the use of them, there is a very, very clear, very large, and very material clinical utilization. Obesity is a serious disease which causes significant downstream pathologies, as I've described, cardiovascular disease, renal disease, liver disease, and so forth. These are not trivial disorders as a consequence of clinical obesity. So we're very, very clear on that there's a significant unmet need that is going to grow worldwide. Obesity is a global phenomenon right across all markets in the world as a consequence of lifestyle and diet. So we shouldn't underestimate the severity of the consequences of obesity.
Let's come to the research side of the business as well, Peter, and what we've seen with Syngene. Now, US biotech funding has been down. The discovery services revenue in line was also hit by that dip. What is the outlook you see for there? Do you see some of that funding coming back and for research services in Syngene?
Yes, we do. And we already see those green shoots. Funding is flowing back into biotech from US VC. It does take a quarter or so to play through. And as Syngene has guided, they expect to see this pick up in the second half of the year and lay on top of the underlying growth that they're seeing in their dedicated services business and biomanufacturing. And I think Syngene has clearly guided, that it's retained its guidance of high single to low double-digit growth at the top line for the full year, and EBITDA in the high 20s. So I think that's all on track. We see, headwinds that we faced, that the entire sector has faced, easing, and then we see the tailwind beginning to emerge. And with regard to the Biosecure Act, we're seeing a very high level of inquiry consequent to that. Again, that won't play through in a quarter or 2 quarters. It'll play through over the coming years. But Syngene's strengths and capability here position it to be very well placed to capitalize on that tailwind as well.
Just want to get a sense from you on how you see price erosion trends in the US moving forward. A lot of companies in the space that we talk to say that price erosion they see will go from double digits to single digits. What is your view here, Peter?
Sure, I think we're probably aligned with that. I mean, pricing pressures exist. They're a function of competitive intensity and supply, and they can fluctuate. I think we see a little bit of easing on the annual price declines there. And of course, it depends on the channel as well. I think you'll see less in some channels than you will in others. But it's a well-known dynamic that there's a range and there's some fluctuations. And I think, we're well aware of those and don't see any structural changes that will impede our planning going forward.
Just last bit on whether you see this change coming in that you're describing by Q2 or further. Is Q2 also going to be overall on a consolidated level a bit subdued before some of the changes which you've mentioned in every segment really start kicking in?
Yes, that's clearly our view. I gave that sort of outlook at the Q4 results, and I repeated it today. I think Q2 we'll see, again, sort of mirroring Q1, relatively subdued. But then we can now see these early signals of transition to more acceleration in all businesses, driven by the factors that I've described. Shift in headwinds to tailwinds in Syngene, new product launches in the generic business, and of course liraglutide, the outstanding opportunity there. And in the biosimilars business, continued traction building on the 11% comparable growth that we've seen, and then moving into fiscal 26, where we're eagerly anticipating new product introductions.
Okay, so FY26 is where you could see some real turnaround. Thank you so much, Peter Baines, for speaking with us. That's the management of Biocon talking about the quarter gone by and what they expect coming ahead.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita, and we have with us the management of Adar Housing Finance. We have Mr. Rishi Anand, who's the Managing Director and CEO. Pleasure always speaking with you, sir. Sir, first off, you're well past your IPO, your debut. This is the first full quarter that you've, or rather half quarter you've spent. But full quarter results that we've seen from you in terms of proper quarterly announcements. I want to first talk about growth. 20% plus, your 20,000 crore in terms of AUM, roughly. 20% plus growth into the foreseeable future. Is that something that we can expect from you?
So first thing first, good afternoon, Harsh, and it is likewise always pleasure speaking to you. Yes, we have in the quarter that we're speaking about have clocked about 21% growth on AUM. Our AUM now reaches about 21,800 crores approximately. And we stand by the guidance that we've been giving, AUM growth of anywhere between 22 to 23%, and a disbursement growth of about 18 to 20% is what we stand by. And things look bullish, things look good.
Got it. Sir, with regard to your average loan size, currently at around 10 lakh rupees, do you believe that this will change in any way materially going forward? Are you going more into tier 1? Are you competing in cities, or are you sticking with what your forte is?
So Harsh, two things to it. One is, yes, we are sticking to what our core competence is. We still cater to EWS LIG segment where the requirement of loan or the size of the loan required is lower. Having said that, when we talk about 10 lakh average ticket size, it is on the AUM on the book. If you look at the incremental ticket size, over the past, I would say 5-7 years, the cost of construction has gone up. The incremental ticket size for me on home loan stands at about 12 lakh rupees, and loan against property, which is micro loan against property, stands at about 8 lakhs. So yes, we have seen slight, I would say, movement northwards on the average ticket size, which is primarily to do with the cost of construction going up.
Got it. And so, if I can ask, your spreads have been fairly solid. Do you expect the 6% kind of spread to hold, or do you expect some bit of expansion potential from here?
So I would not say expansion potential, Harsh. We've been in the range of about 6%, which is also to do with, so basically 2-3 components to it. The COF and the yields, the incremental yields play a very important role. But if you look at the way the last year has gone, the complete last year, we have done raise in the RPLRs a couple of times, which has led to the healthy spreads that you're looking at. As a guidance, we've always been saying that a spread of 5.7 to 5.8 is where the management is very confident and comfortable.
Sure, but you've been doing much more than that. That's where I'm coming from, as to try and gauge as to whether you can hold 6, but it doesn't seem likely. You believe cost of funds will inch higher, or do you believe yields are going to come off for you?
No, so that's what I was trying to say, Harsh. Why is it looking at 6 is because of the RPLR increase that we did 3 times in the last financial year, starting from April onwards. So 25 bips, 25 bips, 75 bips and 25 bips. That has taken your spreads higher to about 6%. But anywhere between 5.7, 5.8 is a comfortable spread, and we would stand by it. Yes, our endeavor definitely will be to sustain the business model at 6%. But if I look at, if the question is flipped the other way around, is where will the competition etc. impact our spreads? I would say no. But anywhere between the number that I indicated, 5.7 upward, is comfortable.
Got it. So let me change my question a bit. What do you believe will bring spreads down towards 5.7? What are those factors?
So there is nothing that is going to affect this the spreads downward. My incremental spreads today, if I were to look at one deal today, I would typically will be doing at about 5.7, 5.8%. And there is nothing, when typically what will bring your spreads down? Competition brings your spreads down. You keep operating in a particular geography will push your incremental yields down. As a strategy, Adar has adopted a strategy of expansion. Today, as we speak, we are coincidentally we've launched our 21st state in the quarter that we're speaking about, which is Himachal Pradesh. We are now 535 branches plus, and expanding and going, I would say, the strategy of deeper impact. We are going deeper into 5 states. So the moment you start going deeper, the intensity of competition goes down. So, you'll have to maintain, that's what we try and the endeavor is to maintain a perfect balance between tier 1, tier 2 and rest of the country. So I don't foresee, foresee any downward trend on my incremental yields or a substantial increase in my COF, which is going to affect my spreads. COF, yes, you've seen, I would say approximately about 20-25 bips increase in COF. But, as I indicated, we are today at about 6%. So even at 20 bips increase in my COF brings my spreads to about 5.8%. So I'm still comfortable.
And what happens if rates come off? Because, of course, we had commentary coming in today. The suggestion still seems to be, at least the commentary seems to be slightly hawkish. But what if that were to start to reverse, say latter half this year, early next year? What happens to your numbers?
No, so you're referring to the cost of fund going down?
Yes, please. So if the repo were to go down, say 25 pips.
So the way it happens in our industry and at Adar is today about 80% of my portfolio is floating in nature, which effectively means that if my cost of fund is going down, Harsh, I will have to pass it on to the consumer. So let's say at 25 bip going down, I will pass on 25 bips to the consumer.
But is there a lag to it?
So there will typically be a couple of months of lag, which is implementation lag. So that's how it operates.
Got it. I want to try and switch focus on geography. You spoke about it. You're in 21 states now. How quickly do you ramp up?
So from a state perspective, Harsh, if you remember last time we spoke, we were in 20 states and I indicated that there are no more states to expand. We found opportunity in Himachal and we said, okay, Himachal is one state we should explore. We launched one branch and we will definitely look at more opportunities in Himachal. Having said that, I don't think we have any more state to expand. And that's where the concept of deeper impact comes into play. In phase 1, we've identified 5 states like Rajasthan, Maharashtra, Andhra Pradesh, Telangana, Uttar Pradesh, and so on and so forth, where we have already started going deep. And when we say deep, I'm not referring to rural locations at all. I'm referring to smaller talukas and smaller districts. We've already launched about 150 such branches. And as we move ahead in years to come, 75, the way we look at our business, 75 new branches year on year, which will be a combination of tier 1, tier 2, approximately about 20 branches in tier 1, tier 2, and the balance branches in the deeper impact strategy.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Market registers second consecutive week of losses. The Nifty Metal emerged as the top sectoral loser, while Nifty Pharma gained the most during the week. Ola Electric is locked in an upper circuit at close of the day of listing. Bhavish Agarwal tells NDTV Profit that they will enter the motorbike segment soon, since that is a bigger market for India. SIP inflows hit record highs of more than 23,300 crore rupees. Mutual fund industry sees inflows worth 1.8 to 9 lakh crore rupees in July versus outflows of over 43,000 crores in June. The Supreme Court grants bail to the former Deputy Chief Minister of Delhi, Manish Sisodia, in the alleged liquor policy case. Sisodia deserved a speedy trial, says the top court. Good evening and welcome. You're watching Profit 360. I'm Nupur Talwar Suri. We begin with a look at how the markets have fared today. Now, the benchmarks registered a second consecutive week of losses. Harsh Saita is joining us for a quick look at all the action there. Harsh, tell us more of what we saw today.
Well, benchmarks ended 1% higher, surprisingly resilient from our Indian benchmarks, especially in a week where there was so much global movement. And we've ended the week, of course, 1% lower, but that's not really much to complain about because there's been just such a good rally at the back of this 1% correction that we've seen this week, even if it is one. So 1% higher on the Nifty 50 as well as the Sensex, at least in trade today. Nifty Bank still tepid, but holding above the 50,000 mark, and that's the positive there. Where are broader markets? Let's pull up the Nifty mid cap and small cap. There you go, around 0.8% on the Nifty mid cap, the small cap 2.6% higher to close the day. The advance decline was in favor of the advances, so we saw a good breadth in terms of where the market was. In fact, nearly 2:1 in favor of the advances. So good breadth as well today. Let's focus in on the benchmark, the Nifty 50. Let's pull up the contributors. Let's see which stocks were buzzing. And we had results, of course, but we saw the heavyweights contribute quite a bit. Reliance, Infi, SBI contributed some bit of the gains. On the losses, there were far and few. Let's pull up the heat map and we'll see there that was dominated by the greens. 43 stocks in the advances. Just about 4 to 5 of them were absolutely flat, just slight negative bias. HDFC Life and BPCL, the only ones taking home some bit of losses. But outside of that, it was a very, very strong market. Some big movers were auto stocks. Shriram Finance has been going one way at least over the last 3 to 4 days, and you've seen good gains on SBI as well. Let's pull up the sectoral heat map, and that's exactly what we'll see. The Nifty PSU Bank, of course, gained, but outside of that, you'll see the Nifty Auto up 1.7%, the Nifty Realty doing well with IT, around 1.5% on both of those. The oil and gas index has done well this week, 1.3%, but has been volatile, mind you. And nonetheless, you're seeing good action even within the Nifty as well as the Bank Nifty. 0.6% is what they've taken home each. Let's pull up lastly the BSE 500 and place certain names into focus. A lot of them on the back of numbers. Look at Trent, 12% higher at close. NBCC on the back of an order win. Jubilant as well as some of the other losers on the back of numbers, of course. All of those losers are on the back of numbers. Lemon Tree and RVNL, of course, declaring numbers a couple of days back, second consecutive day of decline for them. But some of the others declaring some pretty poor set of numbers and getting punished in trade today.
Well, it is India's biggest IPO in the past 2 years. Ola Electric listed today at 76 rupees a share on the NSE. The stock surged 20% and was locked in upper circuit at 91 rupees. Puneet joins us to tell us what the buzz is about this stock and what works and what doesn't.
We've seen that, the IPO opened at a very tepid 76 rupees, the issue price, and then has run up by 20%. We think, this is, of course, one of the major things in this particular IPO has to be that the valuation has come down from roughly 5.5 billion to 4 billion. When you look at the issue price, it has, the last round was happening at 118 rupees per share. It was reduced to 76, and now, we've seen it at upper circuit of 20% to come in at 91 rupees. Anchor Book also saw strong participation, and 40% of it was taken by HDFC, SBI, as well as Nippon. Now, what we did was just look at the 3 to 4 main things about the company that might be working for them and a few that might not work for them in the future, and how will they tackle them is the main thing. So, going out, is the first pure play EV company to list on the bourses. Now, we've seen Bajaj as well as TVS have capex on the EV as well as the ICE side, which is the petrol and diesel. But one main thing is that this company is purely electric, so all capex will go into that. Their market leadership of roughly around 35% is also very strong and expect to going further as well. So currently the EV penetration is just 5% and is expected to go to 41% by FY28 according to HDFC Securities, and Ola Electric will definitely be one of the beneficiaries. The Gigafactory, what they've addressed is, the current head of the, so, we saw a lot of changes in employment on people in Ola cabs, and that has been something which has been plugged into. So the current, Gigafactory head is of course an industry veteran, Yoon Sung Park, who's a South Korean veteran in the LG space. He headed LG's electronic battery manufacturing space for around 36 years, and he's come to Ola last couple of years. He's the highest paid person as well, employee as well, more than Bhavesh Agarwal as well, and that's been one of the key factors going forward, the Gigafactory. Within the, one important thing is that roughly 80% of the components across the 3 models, S1 Pro as well as, the S1 Air are same. So, that helps build a platform and then launch multiple variants over the top, and that's similar approach to what TVS and Bajaj has taken. But, when we look at what might not work is, of course, something that we spoke about is the valuation. It came at 4 billion, and now, of course, it's gone much 20% higher than that. But going forward, it's a loss-making entity at the end of the day.
All right. Thank you very much, Puneet, for joining in and bringing us all those details. Now, in an exclusive conversation, Ola Electric Chairman and MD Bhavesh Agarwal spoke about how he plans to build his company.
We aim to build, it's an interesting thing. We're building a sustainability-focused company to build a sustainable environment, and we want to build this company sustainably, which means we want to build a profitable growth story. We're not there yet. If you see our last 2 years of financials, which are in the prospectus, FY23 to 24, revenue went up 90%. EBITDA margins improved from negative 43% to negative 19%, a 24-point improvement in just 1 year. This journey, as we continue to improve volumes and hence revenue, our cost doesn't go up. It's in a manufacturing business. So the operating leverage drives better margins. And secondly, the strategy of vertical integration with our cell coming into our products next year drives, the cell is the costliest part of an EV. So as the cell we start manufacturing in-house in India, save the margins that global suppliers take, save the duties, that will further drive gross margins and hence EBITDA. So this is the roadmap. I can't share numbers today, but soon we'll be publishing our Q1 results, and I hope investors will take a look.
Well, should you buy, sell or hold Ola Electric? Astha Chen of HEM Securities has a take on that.
In India, we don't have a pure EV player in the listed space. The other automobile manufacturers, definitely they are also into EV, but not pure EV. So definitely it will always get some premium of that sort. But yes, at the 91 rupees of the price, we are not recommending to buy. We are expecting some sort of fall if at all it comes at around 86 or 85 level, then it is again a decent buy. So anywhere between 82 to 85, I think it is a decent buy for those who have not received the allotment. And our price target initially in the short term is around 97 to 100 rupees. But in the long term, since the results are due, we really need to review the results, and then we can always review our targets also.
Well, on the subject of IPOs, next up we have Unicommerce IPO. The e-commerce enablement SaaS platform was subscribed 168 times on its final day. That is the 8th of August. The company is aiming to raise 276 crore rupees from investors. All right, now moving on. Mutual fund SIP inflows surged 10% to cross 23,000 crore rupees for the first time. SIP stands for Systematic Investment Plans. Now, the Association of Mutual Funds in India, or AMFI, which tracks this, released the July data for the industry. Alex is joining in with more details. Alex, take us through the broad trend that we are seeing.
Well, the big number to focus on, of course, is the SIP inflow number, once again hitting a record high in the month of July. 23,300 or thereabouts is the number. And it's interesting to note that the SIP gross inflow number has hit an all-time high every month since July of 2023. And that is a testament to the tenacity and the interest of the Indian investor. A few other numbers stand out here. And there is a significant inflow into mutual funds in the month of July. This is to the tune of about 1.9 lakh crore rupees. Of course, do remember that this is the start of a new quarter, and as a result of that, you have a significant inflow in the form of fixed income mutual fund schemes, and that stood at about 1.2 lakh crore rupees. The more interesting stories are emerging in the actively managed equity mutual fund space, where once again you have a substantial inflow to the extent of about 37,100 crore rupees, a bulk of them once again coming in the form of inflows into sectoral and thematic funds. After having received 40,000 crore rupees or thereabouts in the months of May and June cumulatively, once again in the month of July, it's received inflows of 18,386 crore rupees. And that has taken it to the largest category in the actively managed equity mutual fund space. And the assets under management stand at 4.21 lakh crore rupees as of the end of July. You have inflows into small cap as well as mid cap mutual fund schemes, and also some inflows into large cap mutual fund schemes. But interestingly, you're also seeing inflows of over 8,000 crore rupees into index funds. All told, the mutual fund sector as a whole will be happy with the inflows, and well, another great month for the sector as a whole.
All right, Alex, thank you very much for that. Now, the top earning candidate today was Trent. The stock surged as much as 10% in trade on the back of blockbuster earnings. The Q1 revenue jumped over 50%, aided by the fall in inventories and finance costs. Trent, which is the retail arm of the Tata Group, added 24 new Westside and Zudio stores in the same quarter in online business. The company's reach has improved by 30% in the first quarter, making it one of the key growth drivers. Now, profit for the quarter spiked to over 300 crore rupees versus 160 crore rupees last year. And in fact, Grasim Industries reported a net loss of 52 crore rupees in Q1 FY25 compared to a profit, I beg your pardon, about a year ago. Now, revenue was up by 9% and net profit slumped to 12% to 2,268 crore rupees. The net profit was impacted due to heavy investments in the paint business. And quickly now, moving on to Biocon, which has also posted its first quarter results. The company's revenue missed estimates. We spoke to Peter Baines, the group CEO of Biocon, earlier today. Listen in as he talks about the company's upcoming product launches.
All businesses driven by the factors that I've described, shift in headwinds to tailwinds in Syngene, new market, new product launches in the generic business, and of course, liraglutide the outstanding opportunity there. And in the biosimilars business, continued traction building on the 11% comparable growth that we've seen, and then moving into fiscal 26, where we're eagerly anticipating new product introductions.
Now, we also spoke to Bharat Forge's Amit Kalyani about their new defense business and their outlook for the coming quarters. Listen in to what he said.
See, we have 7 gun platforms in all, artillery gun platforms, with several different variants of each. So all put together, we can mix and match and make many more variants. So these variants are from 105, 155, right from 39 cal to 52 cal, and potentially go beyond that in the future. We have mounted guns, we have towed guns, and we have self-propelled guns. So a combination of these, the requirement just for India itself is 4,000 numbers, and globally will be significantly in excess of this. So I think the opportunity is very large, and we will pursue this business. The other thing that we're doing is also building up a revenue business in the defense space, which is spares and consumables, which itself will become a significant business in the next 2 to 3 years.
Now, insurance major LIC also reported its first quarter numbers. The company posted strong growth. We caught up with the CEO and Managing Director, Siddhartha Mohanty, on the margin outlook.
Last year Q1, 23 Q1, we had a margin of 13.7. As against that, we have done 13.9, just 20 basis points growth is there. But if you see March figure, March we were 16.8, because March voluminous business comes towards last quarter, and so that gives a good growth rate both in margin and volume also. So coming days, my sense is the way we are doing our product sale, product mix, so those will definitely give good margin, and the objective is to have improvement upon last year's margin, which was 16.8. So my sense is we will at least be able, despite all whatever is happening in the environment, so many uncertainties are there, some positive growth around 2% over last year, that is our expectation.
Now, the Finance Minister Nirmala Sitharaman introduced the Banking Laws Amendment Bill of 2024 in the Lok Sabha. Key proposals included increasing the number of nominees per bank account from 1 to 4, redefining substantial interest in bank directorships, and extending the tenure of cooperative bank directors to 10 years. Now, the bill aims to enhance customer rights and improve operational flexibility for banks. Well, earning money is difficult, but saving your hard-earned money is much trickier than it seems. Here's an NDTV report on how you can reduce your expenses and save money.
But at the bus stop?
यहाँ बस की सुविधा में बहुत तकलीफ है। वो खड़ा है मास्टर, फिर भी वो कुछ करता नहीं है। कोई लाइन लगाता नहीं, कुछ नहीं करता है। और लेडीज लोगों को इतनी तकलीफ है ना कि वो लेडीज लोग चढ़ भी नहीं सकते।
BKC is spread over 370 hectares. It is the biggest business hub in Mumbai. About 4 lakh people come to BKC daily for job pursuits. Now, for the auto rickshaw mat, Bandra to BKC is 3.6 kilometers and costs 54 rupees by rickshaw. Kurla to BKC is 2.6 kilometers and costs 38 rupees. But auto rickshaws charge 20, 30, 40 or sometimes even 50 rupees for a rickshaw shared by 3 and sometimes 4 people. That costs a person up to 2,000 rupees a month just for rickshaw travel. No one has control over the arbitrary fares of these auto rickshaws. Now for the buses. Bus number 310 runs from Bandra to Kurla via BKC. This service runs from 5:55 am to 12:35 pm. There are 6 trips of the bus number 310 every hour. There is also Chalo bus service by Best Buses. But the service of all these buses becomes insufficient during the rush hour. To make matters worse, metro works have clogged traffic in BKC. With the Sion Bridge now closed, BKC is an absolute traffic nightmare. After NDTV Marathi highlighted this issue, Joint Commissioner of Police Traffic Jitendra Patil cracked down.
हमारे प्रादेशिक परिवहन कार्यालय जो है मुंबई में, वहाँ हमने एक नोडल ऑफिसर रखा है आरटीओ वेस्ट का, जो ये पूरी कार्रवाई पे निगरानी कर रहे हैं। और इसमें जो रिक्शा वाला ज़्यादा भाड़ा मांगता है, नहीं तो रिफ्यूज़ करता है भाड़ा, उसके ऊपर हम कानूनन कार्रवाई कर सकते हैं। इसके लिए हमने व्हाट्सएप नंबर हमारे 3 ऑफिसेस के प्रदर्शित किए हैं।
If you work in BKC and find auto rickshaw drivers trying to fleece passengers, you can reach out to these helplines by WhatsApp. Make sure you provide your details, the location and the registration number of the rickshaw.
Now, the Supreme Court has granted bail to the former Delhi Deputy Chief Minister Manish Sisodia in both the CBI and the ED cases related to the Delhi excise policy case. The bench ordered Sisodia to be released on payment of 10 lakh rupees in bail bonds, with conditions like surrendering his passport, reporting to the police station every Monday, and not tampering with evidence or influencing witnesses. Well, opposition parties led by Sonia Gandhi walked out of the Rajya Sabha after Jaya Bachchan clashed with the chairperson Jagdeep Dhankar. Now, the argument took place over the tone of his voice while addressing certain lawmakers. Jaya Bachchan has been objecting to Jagdeep Dhankar, referring to her as Jaya Amitabh Bachchan, saying that she is not comfortable with her name being linked to her husband's. Now, she stressed on her unease about women being identified only by their husbands' names, as if they don't have their own identity. Well, yesterday marked yet another pivotal day in India's Olympic campaign, as Neeraj Chopra fell short of defending his gold medal in the men's javelin finals. However, Neeraj's 89.45-meter throw over Spain in the bronze medal match and gave a befitting farewell to the veteran goalkeeper PR Srijesh. In fact, this win brings in successive medals in the sport of hockey for the first time since Munich 1972, that was played 52 years ago. India will have an opportunity to secure another bronze today, as 21-year-old wrestler Aman Shehrawat takes on Darian Cruz in the men's freestyle 57 kg category. Shehrawat had reached the semis yesterday but was comfortably beaten by top seed Ray Uguachi. But coming back to the golden boy of India, NDTV caught up with Neeraj Chopra exclusively last night.
बिल्कुल थ्रो टोक्यो से अच्छी है और कंपटीशन भी बहुत तगड़ा था। अर्शद ने बहुत अच्छी थ्रो लगाई है, लेकिन वही है कि अब काफ़ी टाइम से आप सभी को पता है कि मुझे वो इंजरी की थोड़ी प्रॉब्लम चल रही है, तो उस पर थोड़ा सोचना पड़ेगा, उस पर काम करना पड़ेगा। और अभी टाइम है एक डिसीजन लेने का, क्योंकि कंसिस्टेंसी ठीक है 88-89 तक, लेकिन आगे बढ़ना है अभी, तो उसके लिए सब ठीक करेंगे। और फिर पर अच्छा फील होता है जब भी अपनी कंट्री के लिए जीतते हैं। और मुझे पता है सभी की उम्मीद थी, जो सभी ने सोचा था वो तो नहीं आ पाया, लेकिन मेडल है और अब आगे और मेहनत करेंगे और अच्छा करेंगे।
Well, on that note, it's a wrap on this edition of Profit 360. Thank you for joining us, but do stay tuned as we bring you more on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Earnings Edge. Bharat Forge is the first company we are focusing on. The company announced its earnings and while the revenue and margins grew substantially, the profits were down by over 18%. This was on back of one-time provision of 150 crores the company made for one of its investments. To talk more about those numbers and what lies ahead in FY25, joining me today is Amit Kalyani, Joint Managing Director at Bharat Forge. Hi Amit, good morning. Thanks a ton for joining in. Amit, it's been a good quarter. You've seen a growth on most parameters, one-time provision that's impacted profitability. But let's talk about top line. Defense is the key growth driver for your company, currently contributes 15% to your top line. Tell us where you see that and how you see that play out for the rest of the financial year.
So, as we mentioned, our defense business started generating revenues 2 years ago. It was about 500-600 crores in that year. Then it grew to above 1,000 crores in the last year. This year, again, it will grow in the vicinity of 2,000 odd crores, maybe slightly plus minus. And our goal is that in the next 3 to 4 years, we should again keep growing it manifold, so possibly double or more in that time. And quite frankly, we are very bullish on these prospects because we are seeing tremendous traction from global markets, and it's not just India that is going to be our market. As it is today, over 90% of our business is exports, and I think the products that we have developed and whose IP is completely owned by us, and we do everything vertically in-house, give us the capability to service large global markets with high value and significantly value added products at an extremely competitive price and gain a large market share. So I think the potential is large, and we hope that this business will keep growing.
Exciting. 90% of your revenues come from outside. So tell me, where do you see and how much do you see exports of defense grow by in this financial year and over the next 2 to 3 years?
See, as we've mentioned, we have an order book of about 5,800 crores roughly, which is all exports. And in addition to that, we have large domestic programs, which will now, the tendering is all over and the price bids will be opened. And there are 2-3 other new big programs in India. So products that are being developed with a global view, but to keep the Indian requirement in mind as well. So, as I said, these are high value added products, and they are global in nature. So we expect to see large opportunities unlocking from this.
Talking about opportunities, we believe AT-AG is the next big opportunity for Bharat Forge. You want to tell us what is the size of the market, what is the sort of market share you're working with and expecting, and where do you see that, and how much do you see that contribute to your top line over the next 2 to 3 years?
See, we have 7 gun platforms in all, artillery gun platforms, with several different variants of each. So all put together, we can mix and match and make many more variants. So these variants are from 105, 155 right from 39 cal to 52 cal, and potentially go beyond that in the future. We have mounted guns, we have towed guns, and we have self-propelled guns. So a combination of these, the